It's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Welcome home, you two.
Yeah.
You're welcome. You're welcome. You're
Good
both
to be back.
Oh, it's good to have you back. It's good to have
To be clear, we were not together.
Oh, yes, it was a honeymoon for us.
Where did you go? Because I saw a
Well, yeah, I wasn't going to disclose it
Places unknown.
ahead of time. Sorry, I'm a little under the weather.
People will be following you with 8x10 glossies for you to sign.
Look, dude.
Where did you go?
So I went with my parents. We went to San Diego.
Oh.
So beautiful, San Diego, California. Have you been to San Diego?
I have been to San Diego. My father died there.
Oh, I'm sorry. I'm sorry.
Okay.
In the San Diego Penitentiary.
I'm sorry. I'm sorry to
He was
hear
out
that.
by then.
I'm sorry to hear that. But no, it's great. It's beautiful. The people are super nice. It's right there on the water.
Yeah, I figured you were somewhere.
I went paragliding in Torrey Pines State Park.
Did you high five people or try?
Yeah, no, I did high five people.
Did you touch them?
Yeah, high five. So there's like a whole complex there. So like the office of the paragliding thing, they have like a cafe with like a restaurant, and then there's a rock outcropping, so you can hike down to the rock where the cliffs are, and the paragliders go right past, and then so they try to like high five them.
That can't be on their insurance.
Oh, you should have seen the waiver that I had to fill out. Like it was like
I'm sure. But their
Just
insurance
basically said,
can't
we are not liable for anything.
Yeah, basically.
Goodbye.
I mean, she swung out. She swung back in towards the cliff.
Yeah.
People that are standing there, she was, looked like trying to high five them and how close you were getting.
Yeah. Well, to be fair, it's actually a little bit funny because depending on the wind, like that's how they can go
You either
or
go
not.
on the mountain or you high five someone. Yes.
Well, no, but they were like they can only take participants of certain like weight classes. Because like because there were a couple of guys in line behind me and they were over 200 pounds. Like they were just like big dudes, and they were just like the winds were dying down like a little bit, and so they were like maybe come back tomorrow because you need a lot of wind if you're doing
Maybe come back tomorrow. Well, that's your sign that you shouldn't come back at all. That's the way
How high is it? Like, how high is the...
I'd say maybe about 100 feet. There's a beach below.
Okay.
That's really nice. It's maybe about like a...
And you land on the beach? Like,
So the bunch of us went off at once, and they did land on the beach. So then you have to like hike back up. But my guy, he was like South American. He's like, do you see all these other people? They land on the beach. He's like, not you, my love. You are with me. I am the best. He kept calling me my love.
Did you take him home with you?
He was very nice.
Back to Chicago?
He was very nice. I was like, how long have you been doing this? He's like, since 2004. I was like, okay.
Yeah.
That's
great.
Yeah.
Yeah, and he's been like a skydiver instructor since like 94. So I was like,
Nice.
okay, I feel good with you. So
Very cool.
Very nice.
but every year on my birthday, I like to just do something to be like,
Stupid.
will I make it another year? Right, yeah. Will I make it another year?
Silly, I guess is a better way.
But would you do it, Nikki?
Would I do it?
His feet
I would.
planted firmly on the ground with his toes in the sand.
I think I would do that. I think
You would do that. You would
Yeah.
go paragliding.
Yeah.
You're up in the air for
Watch a
about like
video.
20, 25
The
minutes.
skydiving is that's a little more iffy.
That's where you draw the line. You'd rather just be a parasite when you can be maybe just a paraplegic when you're done, as opposed to truly die.
Yeah.
Right,
yeah.
I got it. Yeah.
I don't know. It would take some convincing, I think. I like to think I could do it.
I'd like to think I could do it too. I think if I had $200 or whatever it cost, I could probably do it.
Yeah.
Yeah, it's 200 bucks.
And there was enough wind because I'm over 200 pounds.
Yeah, it's 200 bucks. That's it.
Yeah.
It's
fun.
Yeah. I don't know. The moment, I'm sure it's a little scary when you're standing there.
I'm missing the part of my brain that tells me things are like scary or a bad idea. It's just like fun for me. Yeah.
Yeah.
Just like, because you're running and then all of a sudden there's
But
not
buying
land
Bitcoin-
there.
Yeah.
Buying Bitcoin cut in half is scary.
I don't believe in Bitcoin. But Nikki, how about you? How was Florida? How
I
was
didn't
30A?
Yes, I didn't jump out of any planes or jump off of any cliffs. So it was much more relaxing than that, I think.
Yeah.
That might have been relaxing for you.
It was was, yeah,
kind
it
of
is.
Daredevil, so might be relaxing for you. But yeah, I just I spent some time on the beach. Smell the fresh ocean air. It was beautiful. Sat at the pool. Rode bikes around town. It was very, very.
How was the food? It's got to be like elite food.
Yeah.
It was okay?
We did like one of those like shrimp boils, which was great.
Oh, those are fun.
I mean, I was eating, fish and shrimp all week.
Mahi,
grouper. It was really good.
Yeah.
So, but it was very relaxing.
This type of fish taco, that type of fish taco.
Yes.
The menus are usually around the same.
Yes.
And then, wait, did you go to Florida too?
I did, but I was in real Florida. He was he could have been he was panhandle, like Texas. He could have been in the Carolinas.
Close to Alabama.
Yeah.
Do you not know what states touch the Panhandle? It's not Texas.
We drove from Mardi Gras. We debated if we were going to drive.
Yeah, well, I mean, he was all the way up in the northern Gulf.
Oh, okay.
I'm below the frost line down near the tip of Florida. So completely different type. But he's got seasons where he was a couple of seasons. We don't.
Yeah, he's like kind of in the lower class.
How warm was it when you were down there?
Got to 80.
It was 80? Wow.
80 one day. It was 60.
How hot was it
It was like 60s to 70s.
Yeah, that's what San
got, like,
Diego.
low 70s,
Yeah, San Diego
middle
was in like the
But
60s.
it's getting colder again
Nice.
now. We just got lucky the week that we were there. They're getting colder. It's been a cold-ish month for Florida in February.
Do you check on your house? How's your house?
Beautiful.
Who looks after your house while you're not there?
I have somebody that comes.
Oh, you have somebody.
every
Okay.
couple of weeks. Yeah. Sure.
That's nice.
And
But everything's all set.
I got
Everything's
two
okay.
neighbors that are like pit bulls. I mean, they don't. Nothing gets by them. Nothing.
We call them Karens.
One's a double Karen. Yes, for sure. So I'm.
But that's good that your neighbors look out for you.
I know you probably don't know this because I haven't told you anything like that, but I bought a boat for my 13-year-old son, for my 16-year-old son for his birthday.
Wait, I'm sorry.
I bought a 13-foot boat for my 16-year-old son was what I was trying to say before.
Where is the boat?
Right there at my dock.
In Florida, though?
Yeah.
So you have two boats.
Yeah.
But one boat is his now.
One
so
boat
he
is
got a car and a boat.
For his 16th birthday. That is correct.
Yeah.
And he still is unemployed? I love that for him. Well, I love that.
He's planning. He's planning on getting a job this summer. Planning.
Yes.
In fairness, he's had jobs before. He worked.
He's had jobs before. Like if some dude on a dating site,
he was 14.
if some dude on a dating website was like, well, I've had jobs before.
That would be an uptick.
No, I need current employment. Well, what kind of a does it have a
little
what kind of a
13-foot
what kind of a boat? Yeah, on it's got a motor, right? Like a trawler.
Yeah, but it's not one that you hold with your hand. He's got a steering wheel and stuff. It's a 13-foot Boston Whaler. It's called a 130 Super Sport. 4 people. Small.
Oh, okay.
Very small.
But he has to get his license, right?
He has his license.
He has his boating license.
Oh, yeah, he has his boating license.
Oh, okay.
He's even gone for a boating class. Yeah.
Oh, that's good.
I have
That's good.
too. I mean, I think that's the
Sure. Well, yeah.
right thing to do. You don't remember anything.
The right thing to do. It's the law. It's the law. Right thing to do. It's the law.
I don't think so.
I don't believe for adults it's the law, but for minors under 18, I believe it is the law.
Yeah.
So he's excited. Now, if he can get a fake ID and he can have some booze on the boat, it'd be just absolutely perfect.
got
Look
that.
at him. Look at him.
That's
He's
dangerous.
got that, but he went with a Florida fake ID, so you can't use it in Florida.
Dude, but that's dangerous. Though. Don't drink and
I'm just teasing. But I surprised him. He didn't know. So the boat.
Well, congratulations, Vinny, on your yacht. How many boats did you get from your dad, Nikki?
Oh, he had the little inflatable ones in the tub.
Yeah, I had
a fleet of them.
I got those, and then I got my 1988 Mercedes Benz, which stalled out in third gear.
Love that for you. Diesel.
And look at the character it's built in you.
Yeah, it was an older car than I was.
Sure.
At the time.
Diesel, right?
So
it was.
No, it took premium.
Oh, premium, not
so
diesel.
Not only was it, the older car than I was, but it was also the most expensive thing to maintain.
His first car was a Mercedes. I hope his last car was a Mercedes. That's what I told him when I gave it to him. This one's a used one too, 2014 or something like that.
I love it.
Yeah.
All right.
Cool. Very cool. So we had a great weekend. It was very nice. Weather was good.
I'm still waiting for my invite to the Florida house.
You've been there.
Yeah, no, but
It's open anytime. You know that.
What do you?
don't want to go
What do you?
with me. My 16-year-old doesn't even want to go with me. I got to buy him a boat to make him.
Yeah, but what do you have tied up to the dock for Nikki? Where's his jet ski?
That's next.
That would be fun,
right?
That's next for him. Yeah. That's next. We'll see.
It would be fun.
We're gonna have to buy the lot next door to house all the stuff. I'm just
Okay, so pull a Bezos, pull a Zuckerberg, buy all the lots, and make a mega plot.
I'm gonna try.
Do that. Well, it's good to be back. Hopefully, you guys missed us, but we have a lot of really good content.
I had Jamal in here yesterday. He was great. Matter of fact, we did it just the two of us for the morning. We learned a lot about Jamal.
Oh, good.
Complex man. Very cool. Peel back the onion a little bit on
We
him.
have lots of happy birthdays coming your way.
Oh, thank you very much.
YouTube chat.
Thank you very much.
Sending
you very
their love
much.
your way.
I know I texted you for your birthday. Did anybody else here text you?
Yeah, lots of people. Everyone here.
I didn't.
No, it's okay. That's okay. I
didn't have a lot
he
of
gets a
service.
pass?
No, it's okay.
You didn't have a lot of cell service?
Yeah, it was. Yeah.
I will say I did get a birthday text from Tom.
Oh, wow.
And my parents and I, we were at the USS Midway Museum.
Was I first?
Yes, you were first.
I hit
We were
it.
at the USS Midway Museum. If you're in San Diego, go see it. It's
I've
an
been there.
aircraft carrier.
Yeah.
Like you get to just crawl all over it. It's really cool.
I've been there.
It's very cool. And so I'm standing in the gift shop because my mom is in there, and I get a text on my phone, and it's from Tom, and he's like, "Hey, happy birthday!" And I'm like, "New phone? Who dis?" And I'm like, color me surprised. He's like, to be fair, I had to be reminded, but I was like, that's very nice. I was like, that tracks, but I know that was nice. But thank you so much for everyone for all the well wishes. That's very
Awesome.
People are saying Nick gets a lawnmower. That's right.
It's not bad.
No, he didn't have to do that either, peeps. I don't think have you ever had a lawnmower in your hands?
I've never had a lawn.
We had a lawn.
Oh, you didn't have to mow the lawn when you were
You
growing
never had to mow
up.
the lawn when you were a kid.
No.
Yeah. Don't let him fool you over there. It was pretty charmed for him.
We got a charming lineup for you today. It's a wonderful Wednesday. I don't even know what day it is. It's Ash Wednesday. Happy Ash Wednesday. Yeah, to those. Did you guys have punchkis here yesterday?
No.
What's that?
The Polish, like the donut, the punchkis, punchki day.
Polish, like
It's like a donut. It's like a Boston cream donut.
cream filled.
Laura's chiming in. Everyone's chiming in. Come on, the punchkis.
Sorry.
But yeah,
Little king baby.
yeah. But today's Ash Wednesday, so happy Ash Wednesday.
Yeah.
Also, the start of Ramadan. So all the religions and Lunar New Year started yesterday too. So all the religions.
Yeah, and what was it? Fire horse? Year of the fire horse or something like that too?
Yes.
Yeah,
Yes.
Fire horse, something like that.
Yeah. That's cool.
Kai told me it's about harmony and happiness and everything like that.
That's great.
Much better 10 days.
We will see. But on today's shows, on this wonderful Wednesday at the top of the 8 o'clock hour, we have an options jive for you. Build a portfolio that can take a hit. Ooh, Nikki, break it down. What's that going to be about?
So it's going to be a talk about diversification. So we're going to look at just a couple ways to break down diversification, show just standard deviation of P&L and just how you tighten things up a little bit when you're not so heavily weighted into,
A little piggyback on diversification that we did from yesterday, looking at the amount of your account size to put in there. We looked at 25% and 35% having investment. And there's another way of looking at kind of more monetarily, and it is a look back. It's not really a look forward, so it's more of a look back, but it's a nice segment.
Yes.
And then we have what's your assumption? Because it's assume the position Wednesday. So this is where viewers write in. They have a trade idea. They have an underlying. They also have a directional bias. And the bats are going to try to do viewer submitted trades. Going to see what's
I love
always fun.
that you incorporate assume the position into that as well.
Yeah, there you go. Yeah, what's your assumption? Assume the position.
Yeah.
That's it. That's you. And then at 9 o'clock, we have a tasty extra. Cherry picks. Thomas Preston in the house.
TP. Yes.
Yes. Someone who I
think
think sure celebrated Fat Tuesday was TP.
Yeah, probably. Yes.
I don't know. Maybe. Yeah, I guess so.
But we're looking at cherry picks again and looking a little bit at some of the Bitcoin and crypto related stonks.
Oh, okay.
Yes.
And then we have live from the trade desk around that 9:20, 9:30 time frame. Quentin in the house, Q, and Glenn. Quentin counting down the top trending tickers from Tasty Trade, and Glenn G Money looking at the FX side of things. And then at 10 a.m., Liz and Jenny live from the floor of the SIBO. I know I'm coming. I have like a little bit of a cold, but
it's always electric when the ladies are live.
Hold on. It's always electric when the ladies are live. Yes. Live from the floor of the SIBO, the lovely and talented Liz and Jenny holding down the fort. They did the show on Friday. So always great. But hey, in the meantime and in between time, I know you missed the Daily Dose.
Of course.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Leading story. Top story. Jump in.
In today's headline.
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's February the 18th. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Are there any earnings, Mr. Bat?
Few and far in between. I mean, you got Dash and Oxy, Carvana, Walmart.
That's a big one. Yeah, it's in the NASDAQ now. It's a tech stock.
Isn't it?
Did it? I think it already had.
No, didn't I? Did I miss?
Oh, yeah, you're right. Tomorrow morning, yes.
Yeah, tomorrow morning.
Yes.
Okay.
Tomorrow morning, the 19th. eBay,
Stand corrected.
John Deere.
Yep.
Usually you're better at earnings than I am.
Yes.
Books.com,
Well, I'm still in my, lazy beach mode. I gotta get back in the zone here.
It'll take you a little bit, but you'll get there.
It's okay.
Can I tell you what else we got to do just real fast? It was like a happy coincidence, because it's San Diego. They can plan these things at Petco Petco Field, where the Padres play.
Yeah. Mm-hmm.
I'm sorry, I don't know if it's Petco Field, Petco Park. I think it's Petco Field.
I'll go
whatever,
with it.
Maybe.
Whatever. They had all Valentine's Day weekend a Cupid skate. Petco Park, thank you. A Cupid skate. So you could rent roller skates, and they let you, they had like an area roped off, and I was like, they should do this at Wrigley. And then I realized, no, it's Chicago in February.
Yeah, not
Ice
work.
skating.
But maybe in the summer. But when's the last time you went roller skating?
It's been a little while, and I would probably abstain from doing that. I feel like
Para hang gliding.
the roller skating.
I fell.
That could be an
I fell.
easy-
I hurt my flank steak.
Yeah, I feel like that skateboarding, ice skating, even those are kind of in the kind of danger zone.
Yeah, they had made out of PVC pipe. They had like the little walkers with the wheels on them,
yeah,
so you could hang on and skate. Yeah.
Okay.
Yeah.
I don't blame you.
Yeah. But my dad, he was like, yeah, I could skate. And then, dear reader, no.
Did he try?
He did, but because he thought he could still skate, and he cannot.
It happens.
It does. It happens to but your balance changes as you get older. So it's you got to be careful.
Yeah. You're a lot more fragile too.
Hey, let's take a look. First headline at bonds. What the 10-year treasuries move towards 4% says about AI anxiety in markets. Yesterday, the S&P finished around 1.9% away from its record finish in January, but it's masking a lot of AI turbulence, as we have coined the phrase violently unchanged. What are bonds telling us about what is going on in this market?
Yeah, I had this discussion with Jamal yesterday. I've had it with a couple other people in the office here. 117 and change, just under 118.
Good Lord.
We've been buying the dip in there down around 114, 15 area. Always get out too early. You never catch the bottom, never catch the top kind of thing. They seem to be in no man's land right here. Maybe a little bit overbought. I mean, they are down 6 ticks today, but they did trade over 118, 118.03.
But that's crazy. When I left, they were 114.
Yeah, it's a $4,000 move.
Yeah.
Big move. Big move in bonds. Yes. Yeah. I don't know. I'd be rank of 15. I'd be directional. I'd probably be a little bit short on any rally. That would be my play. I don't know.
Yeah, bonds. I mean, they've been moving higher for the last week or so.
Tough Try to talk to Glenn yesterday on FX talking about euro versus the dollar.
Sure.
The dollar's catching
we'll get to that. So the U.S. dollar may be due for a reprieve after a 4-month decline. The pressure on the U.S. currency from a range of factors, such as the euro's rally, expectations for Fed rate cuts, and uncertainty around trade and fiscal policies, has relented for now. Let's talk about the dollar versus other currencies.
Dollar has
modestly stronger,
tiny bit.
Yeah,
I need a lot more out of it. But yeah, it's been super weak here. I mean, I've got Aussie position. I'm short the Canadian dollar. I'm short the Mexican peso, the Swiss franc.
Now the Aussie's been on fire to the upside.
The Aussie dollar has been insane.
Sideways the last 4 days or so, but it's had a rally from 67 to 70. That's big. 3 cents in.
What's going on down under?
I don't know.
I think some of it is tied to gold.
Yeah.
The move in gold and the craziness that's been happening in metals.
Gold trying to regain 5,000.
Okay, so next headline: gold falls. You guys are just we're grooving. We're back together. But gold did well at the time I pulled this headline. Fun fact: I put the news together in the back of a cab on the way home from O'Hare yesterday.
Good.
But gold.
You could write off that cab ride. There you go.
I should hope so. We had to get the Uber XL because my mom does not know how to pack. But no, gold falls below that $5,000 mark. Silver also dropped as demand weakens during the Lunar New Year holiday. But now you're saying gold is over 5,000?
No, it's flirting with 5,000.
It's flirting with 5,000. Okay.
Right there. The futures are 49.80. I'll just round up 1.5%. They were down pretty big yesterday, down last night after the session closed and rallied throughout the night, just a skosh off its highs for the day. Silver did the same thing. Silver was real weak yesterday.
Yeah, it got into like 60 something at some point.
Yeah, it was down like 2% or something.
It was 71 or 2. Yeah, 72, 71.80 I think is the low. It's up to 76 and change. So it's caught a little bit of a bid there, up 3.5%. Silver has more volatility than gold on a percentage basis each day so far. I mean, but we'll see what happens today.
Volatility has come in bigly in both silver and gold. IV rank in gold right now, 57, silver 55. This is the lowest we've seen since kind of the gold and silver pop off.
Since silver made up.
So what do you do with that? Is that it's still good though, or?
Yeah, I think it's still high enough to put positions on, but
the realized move has been greater than the implied volatility, especially.
Yeah, but in the last like 2 weeks, you've really gotten paid on all those, all the positions that you had on in the last like month and a half ish.
If you hung on, I mean, it was like going through a storm.
Yes, it was. Mm-hmm. But if you like, we were doing like 1 to 2 puts to calls, so we were selling 2 times the amount of calls to every put that we were selling, and those positions have come in bigly, even with the puts now basically at the money. And that's just because the downside, the volatility contraction that you get into the down move is so much bigger than the delta that you're picking up on those down moves, that the position is a net, good position to have just because of that volatility contraction. Those puts don't increase as much as the calls lose in value. Metals
are the opposite of everything equity. When equities go lower, volatility is expanded, and you've seen that in the market here. With metals, it's completely opposite. When it goes down, volatility contracts. Those calls just get sucked.
Yeah.
Coinbase stock stretches a post-earnings rally. Does that mean Coinbase is a buy now? Coinbase has jumped up despite an earnings miss on Friday, but their shares still remain stuck below their 50 and 200-day moving averages. Death cross. But let's talk about Coinbase and Bitcoin overall.
Coinbase is up $1.67. Got down to like 140 about 3 days ago or so, 72 hours ago when you were talking about the earnings there. I don't know. Bitcoin has not been able to, not coin itself, not Coinbase. Coinbase has been in the doghouse too, but it's caught a little bit of a rally as of late. Bitcoin itself, every rally has been met with selling, not violent selling, just stair-stepping down. It's back down to 67,000. About $500 off its lows. It's flirted with 70,000 a couple of times last week. Been to Chem Bait each time from there. So it's been a very, very tight range from around here to 67 to around 70. Volatility in there is anemic too. So it's just been going sideways, but it doesn't seem to have the oomph it's had. It needs a good $10,000 rally to get people to start talking about Bitcoin.
Yeah. I think they got some problems too, though, because the spreads on crypto are just so wide.
They're widening, yeah.
When that tightens up, they're not. It's
not as advantageous.
I don't know if I like Coinbase as much as I like a hood.
Oh, interesting.
Like I feel like you got a little bit more diversification there. Coinbase, they're very
narrow based, one product, one funnel. Yeah.
Yes.
Hood traded down to the low 70s. It's 75 right now, but it too, if you mirror the image to like a Coinbase or even Bitcoin, it's acted very much like those. The Hood has a lot of crypto exposure to it. But I agree with you. I would rather be long Hood than Bitcoin, although you're going to get more upside potential probably from a Bitcoin or a Coinbase than you would from Hood.
I bet.
Yeah. When we were in San Diego, we were in La Jolla for the day because we were waiting for the winds to pick up at Torrey Pines. And then I was like, I need to go to an ATM so I can meet this guy in a parking lot and give him $200 in cash. And so when I searched ATMs, half of the ones that came up were Bitcoin ATMs. And I was like, what are we doing? I was like, you don't have a Chase?
Did you do the gold one?
No, I found a Citibank. I found a Citibank ATM, but I just thought it was funny. Stripe stablecoin firm Bridge has won initial approval of a national bank trust charter. The U.S. banking license would allow Bridge to issue and manage stablecoins that would be under direct federal oversight. Stripe, one of the eagerly anticipated IPOs, maybe, of 2026. We'll see.
Stripe was one of my biggest disappointments of my life. Stripe's the one where you can basically just put it on your phone and then you can...
It's a payment processor.
Right? I thought all my
Stripe too.
Yeah. No, but he's thinking about the Square.
Oh, the little dongle.
That Stripe here?
No, that's different. That's Block.
Oh, that's Block? Well, that's been the biggest disappointment in my life. I thought all my friends who owed me money would get one of those and then start paying me.
Oh, there you go.
Yeah, but they never did.
Never did. Sorry about that.
I don't know about this one. This one's in an interesting spot because you have like stocks like PayPal. You talk about Square.
And Circle, though, the stable coin. That's
Circle, too. I mean, this is kind of all those stocks.
They all got hit.
Are at lows.
Yeah.
And so Stripe, I know Stripe has been like a talked about IPO for 5 or 6 years now.
Not the best timing of it.
It's not a good timing. They kind of missed their window.
Missed their window, yeah. It's going to be way less.
Yeah.
The Commodities Futures Trading Commission said the agency has filed an amicus brief in federal court to assert its authority over prediction market enforcement and regulation. This battle is now getting heated. The CFTC says they can determine whether prediction markets can operate in the states, and the states are like, no, we have states' rights. We can determine if prediction markets like Kalshi and Polymarket, and so
we need Jerry Springer or somebody like that to figure out whose baby this is.
Who's right?
You remember the movie Major Payne? You will respect my authority. That's what I think of right here.
I just think of South Park when I hear about the head, like Cartman.
Yeah, I don't know who owns this, to be honest with you, and that's why they're fighting over it. I mean, I would love to see a kumbaya moment and have a board mixed of both of them, so then maybe we can then have a board mixed of both of them for everywhere else, and we can have one standardized way of looking at everything.
The prediction markets are ruffling the feathers of a lot of different industries.
Oh, yeah, but
they're a big playing industries. You got like the gambling industries, you're fighting Vegas, and DraftKings, and the exchanges, CME and CBOE, the brokers. The
biggest stick there are these regulatory bodies, though.
But there's a lot of those players got some pull in regulatory bodies.
Sure.
So there's a lot.
Sure.
These things are, it's
going to be interesting.
This is a war zone.
The CTFC chair says the CFTC will no longer sit idly by while overzealous state governments undermine the agency's exclusive jurisdiction over these markets. Ooh, girl.
Scary.
Ooh, girl. Hey, earnings from last night. Palo Alto Networks slumps around 6% as third quarter profit guidance falls short. The cybersecurity company's fiscal third quarter earnings forecast fell short of expectations. Earlier this month, Palo Alto closed its $25 billion acquisition of identity security platform CyberArk. They brought in revenue of $2.59 versus 2.58 expected.
Palo Alto's becoming a little interesting down here, down almost $10, $12 at 152. It's got a good correlation to the market, almost 0.50. I think on the way down here, volatility might hang in there a little bit, maybe like an IV rank of 25 or 30. Back near recent lows, this might be a 48-hour scoopy maybe.
Oh, okay.
Yeah, these stocks, I have basically flat delta now in CrowdStrike, but the cyber stocks are ones that I've been kind of interested in, but they've been caught up in the whole broad-based software sell-off. I mean, they are firmly in the,
hands of the sellers for sure.
Yeah, CRM, ServiceNow, the CrowdStrikes, the Palo Altos, they're all kind of moving in tandem here.
Well, CRM hasn't caught a bid in a long time.
Never.
Yeah.
Meta and NVIDIA yesterday announced a multi-year partnership to expand Meta's AI infrastructure, including large-scale deployment of NVIDIA's CPUs, plus millions of Blackwell and Rubin GPUs, along with Spectrum X Ethernet across Meta's data centers. What did I just read?
That's a word salad, right?
That is a word salad. But all the takeaway is Meta and NVIDIA. Also, Mark Zuckerberg testifying today in the social media addiction trial that's happening in Los Angeles. So if that's going to move Meta today or not, I don't know. But
Meta's a little bit lower. NVIDIA's a little bit higher. Meta's been kind of a dog. NVIDIA's been tight channel.
Yeah.
It's at the higher-ish end. It's in the 190s. It's 188, 189 right now.
Yeah, we don't have a position in NVIDIA. Maybe it's up a couple dollars this morning.
Yeah, it'd be tough. They got earnings February 25th, too.
Yeah, we've traded it to the long side, which has been pretty decent with like call diagonal spreads because it's been.
You almost could have traded it anywhere. It's been like the market, but in a much tighter range.
This spot has been like the buy spot.
Yeah.
The 185 range has been like kind of its low. Meta, on the other hand, we played it long into earnings, which was good, but since then it's basically reversed the entire 100 or so point move to the upside, and it's back to 640-ish. So leaning a little bit long there.
Tough markets, option markets in there too.
I saw something about Zuck. They like patented some sort of like AI where they can like basically if somebody like dies.
Oh, your memorial, yeah. So what they did is if you die, they patented an AI that could keep your account going after you die. But that's been like a problem because some people have died in like really tragic ways and they've tried to like get ownership of their account and Meta won't turn it over and they're profiting all over the deaths.
It's a little creepy.
Yeah.
A little creepy.
And Zuckerberg moving too. I heard he's moving from California to Florida.
Yes.
That too.
I don't know.
Yeah.
Hey, in other news, Amazon, look at Amazon. They snapped a 9-day losing streak where the stock lost more than $450 billion in value. Whoopsies. Investors went on a selling spree after Amazon said they expect to spend $200 billion in CapEx for AI initiatives. But Amazon snapped that losing streak yesterday. I guess, where do we go from here?
Yeah, Amazon finally caught a bid. Remember, 2 weeks ago, this was a $240 stock. It got flirted with going under 200. It's 203 this morning, up $1.50 for $2.
Yeah, I've got some long delta there. Amazon has been a dog. It didn't participate in any way with this AI kind of move to the upside. Yeah. It has gone nowhere for a couple years. So I've got some long delta here. It hasn't worked, unfortunately.
Your favorite two little stocks here, Nikki. Western Digital is dumping $3 billion of SanDisk stock stake. Almost exactly a year after the spinoff officially closed on February 24th, Western Digital is seeking to raise $3 billion from the sale of its remaining equity stake in SanDisk. Where do we go from here?
You actually mentioned this before you left, like Wednesday, Thursday, something like that, how Western Digital has benefited from owning SanDisk stock from the spinoff.
Yeah, from the spinoff. And at this point, I mean, the stock is up, I think SanDisk was up over 100% just this year, right?
Yeah.
I think it started.
It started the year 250. It's closed at 590. It's 570.
Oh my gosh.
I mean, let's call it, it was trading at like $30, $40, $50 when they spun it off. So it's a 10x from that point. So you got to, liquidate that at some point.
I think they have to keep it for a year too.
Yeah, so February 24th would be the year.
Yeah.
Okay.
So I don't read too much into it other than what you just said right now. Yeah. Although I'm not looking at Scoopy SanDisk here at a 10x, but
Micron does have earnings coming up. I think
MU.
No, I'm sorry. It's the middle of March. Wow, it's
March 19th.
So that's kind of the next big memory.
Okay.
It's the biggest of the group. Mm-hmm. So that should be interesting. And MU has been, face ripper the whole time. So all these stocks, they're still. This is where the volatility is. These stocks are moving 4, 5, 6% every single day.
Well, we had a new quantum computing firm had an IPO yesterday. Inflection with a Q. I hate that. INFQ. Pretty sure that's my Myers-Briggs type. No psychology nerds in the chat.
What would that be?
Drop your Myers-Briggs in the YouTube chat. I'm an INFJ. No one cares.
No. I don't know which ones are which.
You don't know which you are? Yeah.
I've done those before.
Yeah. Well, the quantum computing firm made its public debut. Stock was up small on its debut, but it's another quantum stock to trade like a Rigetti or a QuantumScape or IonQ.
Yes. We actually do have a Rigetti position. I think
you're not saying it right.
Rigetti. It's like Inglourious Bastards.
Mm-hmm. You're very into the movie trivia.
I know, right? I got something about it.
INFQ, obviously no options. Well, there are options to it, but they're a little bit wide at this point. I'm surprised. Well, they must have come out same day. That's pretty
impressive.
Yeah.
Look at that.
Cool. Yeah. Only a $16 stock.
Sure.
It's actually up about 50 cents this morning, 70 cents this morning.
I mean, get in on the ground floor.
Hard to borrow. You can't sell it. So...
Sure.
You can't sell it short, I should say. Yeah. So keep that in mind.
Palantir announced that it is moving the company's headquarters from Denver to Miami. So this guy could be closer to his sweet supply. Allegedly, don't sue me. The company had previously moved from Palo Alto, California to Denver in 2020, but Florida has seen a wave of billionaires in recent years, and several more have made the move since California began considering a 5% wealth tax on its billionaires. So Palantir.
And a dog.
When they all move, who's going to pay that?
All I see is Michael Berry on Twitter just posting about Palantir, about the short, whatever.
It's worked as of late. I mean, I'll go as of late. I'll say this year. I mean, Palantir started around 190. It's 130 and change. 137, up $4 today. This is the stock that the media loves to talk about.
Yes. Up about $4.
What is the quote? What is it?
Yeah. IB rank of 20. What's with the quotes?
Yes. What is it?
They love to talk about.
Apple is reportedly cooking up a trio of AI wearables. Last month, the Information reported that Apple was developing an AI wearable, an AirTag-sized pendant that with cameras that could be pinned to a user's shirt. Now, Bloomberg writes that the development of such a device, along with two other AI-powered items, is accelerating as Apple looks to stay competitive with other tech giants.
Talked about Apple yesterday. Apple saved the market. I mean, Apple didn't just save the market, but I was talking about how Apple was up and strong, was up around $3 to get into the day, up around $6 or something, and it's up another $1.50 or so today. When the market was kind of selling off and making newish lows on the E-mini S&Ps, Apple was up $3.50, and I kept saying, I don't know if Apple...
It was doing that last week, though. That was the reason why we didn't put, or at least it seemed
last
like
week it kind of sold off pretty hard.
On Friday it did, but into the big moves to the downside, Apple was basically unchanged and would be the one stock we'd point at and be like, Apple.
It's in every index.
Yeah, but it was up because they weren't investing in AI or they didn't have as much capital.
It's not the trades you make sometimes, trades you don't make sometimes. There you go. There you go.
But it's been a goofy stock. The correlation has not been
such a high correlation. Doesn't have the high correlation it used to have. Yeah, you're right.
Rivian stock just had its best day ever, and now this analyst says to sell. D.A. Davidson worries that Rivian's guidance would require the company to see an unusually strong debut of its R2 EV. What can we do in Rivian? Of course, now it's down. Not a lot. But.
And just to point out on Apple, the correlation 0.27.
Yeah, I was going to say, it doesn't
really
have the,
low,
yeah.
really, really low.
Yeah.
Rivian's been a dog. We're long it. I've got shares. I think I have some puts here too.
Rivian's
Did I take
16.5 unchanged right now.
Yeah. I'm long shares at a not good price. So might do something about that here.
Unrelated, Lucid, what I was going to mention. I saw they have a 7-seater. It hasn't come out. Well, they're out, but they're not really available yet. It takes a couple of weeks for them to get. But I saw it looked absolutely beautiful and really kind of nice. $95,000 to $125,000. I'm like, this is why these electric cars just can't make it mainstream. We don't get the infrastructure that we need to support them, is because all of them are, 6-digit cars. You need that $40,000 really cool kind of electric car, and then maybe you get the
Tesla makes those.
What's that?
Tesla makes those.
Tesla does make those. They're the only one.
Yeah.
Netflix has granted Warner Brothers Discovery a waiver to reopen deal talks with Paramount. Netflix said that, go ahead, let them make their move. Paramount has said that its $30 per share all-cash offer is not its best and final. So open up the schools. They're going to start again. What are we doing?
Netflix needs this to end. I don't know what is.
We're gonna have to kick it out of Mag 7 pretty soon.
Seriously, I mean the stock's down
$77 after it's split take under.
Yeah, it has been a dog. It goes down basically every single day.
It's a dog with fleas.
I don't know if they lose this bid and this gets resolved. I don't know if it's a buy at that point, but something needs to happen for Netflix because it has zero momentum.
It's beyond chill. It's cold.
Look, we have now migrated to Love is Blind, Ohio. We're out of ideas, people. We're out of ideas.
Yeah,
it's like, really? The men of Ohio? No, thank you. No, thank you. The FTC has finalized consent order in Boeing's acquisition of Spirit AeroSystems. The Federal Trade Commission said it has finalized a consent order involving Boeing's acquisition. What is Boeing stock doing?
244 and change, unchanged, but the higher end of its range. It started the year closer to 210, 240 and change. Boeing IV rank of 14. The directional play, and I don't know the direction or see it there. It's in no man's land.
And I tell you, I flew on the new Airbus, the United flight to San Diego. Had the new Airbus, the 320, I think. Yeah. It was really nice. And coming home, we were 50 minutes early.
We were early too.
And I was like, why can't we just do this all the time?
Well, with those Zempics, they're able to fly a lot faster now, less weight on there and everything else like that. That's why they're making money, although UAL is down about $1 this morning. But it's been a very tight range also from just under 120 to about 105 or so. It's sitting at 114, 113.
Yeah. Wendy's, sad news. Wendy's, the restaurant, is closing up to 6% of U.S. locations. That could number around 300 stores in the first half of 2026. The fast food chain told investors during their quarterly earnings call in November. WEN.
I haven't had a Wendy's in quite some time.
Well, thanks for nothing.
Yeah, I know. I'm not helping their cause here.
Yeah, over the last year, it's been cut in half from about 15 to 7. I'm just going like in a calendar year, middle of last year until now. Unchanged at $7.
Yeah, sad.
It is sad. I remember like Wendy's was first kind of with their square burger when they first came out.
Yeah, never frozen. It was always fresh.
Yeah, it was kind of a great concept.
Their social media account is iconic.
Yeah.
They just never.
Do they still do that though?
Yeah, they'll still take shots.
But they had like that like couple month period where they were
just viral,
firing at everything.
But the stock never caught a bid, and it never really caught on.
Sad.
Well, McDonald's, good news. Yesterday, the Shamrock Shake was available. The fast food chain's minty milkshake is now available for a limited time ahead of the St. Patrick's Day holiday. Consists of vanilla soft serve, minty green flavored syrup, and whipped topping the Shamrock Shake has been a cult classic since it was first available nationwide 2012.
Yeah, McDonald's.
I thought it was longer than that.
I feel like
I was like, what?
McDonald's $327 unchanged right now, but just a skosh off its high.
I like a Shamrock Shake.
Do you?
Yeah, a little mint. Don't mind it.
Yeah.
You don't like it?
I don't mind it. Not
It's
a mint
the
guy.
fake, like,
I'm vanilla or chocolate. I'm just like
I do like a vanilla milkshake. Those are the best.
yeah.
But
I'm just old.
pretty
I like this to switch it up every once.
Are you guys going to give up something for Lent?
I used to when I was a kid. I'd give up soda.
Oh.
Yeah.
Now you don't drink soda, so you get.
Now I don't drink soda. Yeah. That's why I don't drink that much soda. To be honest with you, I think. Yeah.
Yeah. How about you, Nikki? What are you going to give up? Zins? Because you give up Zins?
No, I don't think I'm going to give up anything. Unfortunately.
Such a disappointment.
How long is Lent?
40 days.
40 days.
I was going to say 30.
40 days.
40 days and 40 nights.
Yes,
Yeah,
40 days.
Sure, I remember that.
So.
Hey, gotta catch them all.
Are you going to give up something?
What? No, I'm perfect. Logan Paul has sold a Pokemon card for $16.4 million. He bought the Pikachu Illustrator card in 2021 for $5.2 million, and that set the world record for the most expensive Pokemon card in a private sale. But then he turned around and was able to sell it for, it says here 16, but I think it was like 19 million. I don't know. What are we doing?
Maybe there's like a 10%. I don't know.
Money is not real.
Yeah. I wish we saved all those Pokemon cards from way back when. They're probably in a box somewhere.
They probably are. The
Solari Capital founder AJ Scaramucci was the lucky purchaser. So congratulations. It broke, of course, all Guinness records for most expensive Pokemon cards sold at auction.
Words.
So,
no words. I have nothing to add to this.
Yeah.
I don't understand it.
Well, go check Vinny's room.
Hey, I didn't understand it at 5 million. I certainly don't understand it at 16 million.
Right?
Yeah, but the original ones, I think, were mid-90s.
I think so.
When we were getting them.
Yeah, gotta catch them all.
Yeah.
Hey,
missed that one.
Finally today.
I'm sorry.
Oh, go ahead.
Was it you or Vinny that would chase him around where they had that?
The app? No.
That's Pokemon Go. Yeah, that came out later. Yeah, that's recent. That'd be Vinny.
No, I had Game Boys. We didn't. I had the Nokia phones.
Yeah, get exercise.
You had a can with string attached to it. Yeah, go ahead.
Hey, I hope all of you couples, I hope you guys had wonderful Valentine's Day, where you treated the ladies in your life to the level of treatment to which they are accustomed. But I saw this viral video, and it makes me think maybe one day a year is not enough to treat women right, because this woman, she just simply asked her husband to put the leftovers in the fridge. That was it. Watch this.
The lotion in the basket.
They not like us. They not like us. They not like us. They not like.
Be so for real, men.
They not like us.
Would you?
That is weaponized incompetence.
What if it was just the basket?
No.
Would you be okay with just
the basket with saran wrap?
Yeah, like if you saran wrap the top of the basket, that seems like it's kind of like a good in between.
May this kind of love never find me.
Yeah. Oh my god.
Anyway,
that's pretty good. I don't know if I've ever done that. Have you done that? Something like that?
I don't use an air fryer.
You anti-air fryer?
Yeah, I had one that was like the all metal. I don't like the fake plastic in there.
The Ninja Crispy uses glass.
I would be.
You get that? Get a Ninja Crispy. There you go.
Yeah. But those ones, that's all like plastic and crap and junk. I don't want that.
Okay.
Got it. But you'll stick Zins in your mouth and
I don't. That's fine. That's no.
That's neither here nor there. What's coming up next?
Drink a gallon of whiskey.
Yeah, and 4 cups of coffee.
Perfect. We're going to take a quick 90-second break. We got to pick and choose your battles. I don't blame you.
Okay.
I don't blame you.
All right, yeah.
I can tell you the stuff that I did. We'll be back in 90 seconds. We got more Tasty Live after this. What comes up next?
Conferment set.
That's right. We'll take a look at this market, which seems like it can't hold a bid, but it can't sell off. It's going nowhere quick. We'll be back in 90 seconds with Tasty Live.
Violently un-
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send on this Wednesday, February 18th. But before we do, let's take a look at the market. E-mini S&Ps up 13 handles. You can see here they traded over 6,900 down to 6,850. I'm just going to round on both of those, and they're sitting at around 6,875, pretty much right in the middle of the range last night. When you look at a chart sitting here, you can see that they've gone nowhere, but really underneath all of this, if you zoom out a little bit, violently unchanged, as we've been talking about for quite some days. Yesterday got a scare lower, making new lows over the last 5 or 7 days, only to be met with a couple of bids in the market. Apple was one of the big ones. Apple 263 and change, unchanged now. Last time we looked at it, it was up $1 or $2 just a moment ago. NASDAQ has not been as strong as it has been recently in this market. Up around $60 with the Russell now unchanged. Russell's actually been a little bit stronger than the rest of the market, with the Dow a little bit stronger too. So Dow Russell kind of leading us a little bit to the upside, and even the S&Ps and NASDAQ not holding their shares. Hopefully that'll change. Volatility traded, I talked about it yesterday, got to get under this 20 number. We did last night, 1990, when the E-mini S&Ps were up around 40-ish handles. We're sitting at 2038, basically unchanged. Volatility was pretty soft all day yesterday into the rally. Even when we sold off a little bit, volatility stayed soft. We'll see what it does today. I still think to get out of the woods, we have to get volatility under 20. It's sitting at 2040, just rounding up there. Bonds are down 9 ticks, 117.23. I know all the talk of easing and everything else like that is a 6-month, like every other product, a 6-month looking out forecast. So maybe a little bit more dovish than they thought. Bonds rally. I think it probably got a little bit overdone here. Bitcoin going violently nowhere. 6,700 doesn't really catch a bid to the upside, doesn't really catch a sell-off to the downside, although it does seem to be a little bit heavier than when the up moves. The up moves don't seem like they have the velocity to them. The down moves seem like they have the velocity to them. Ethereum down $30 on a percentage basis, around the same, a little bit more than Bitcoin. Oil up $1.50. Been kind of tight channel here from 62 to 64. We're sitting just under 64. We've been under 64. Been flirting with 62. Volatility been sideways to lower. IV rank of 36. Been good for both sides, which we've been kind of trading it that way. Iron Condor like. Gold, I thought gold was going to go a little bit lower. Egg on my face here. Flirted with 5,000, got up to 49.90, got down to 48.70, just rounding on both of those. Gold higher by 68. It was lower last night, significantly higher this morning. Silver on a percentage basis up 4% to gold's up 1.5%. But you can see here, silver's had a little bit more volatility to it, a little bit more room to the downside too, right? I mean, Bitcoin, gold, when you look at it, trade up to 5,500. Let's just say it's down, 10%, just rounding here. When you look at silver, it got up to 120. It's basically been cut in half, right? About 50%. Yeah. So silver definitely the weaker of the group. Net gas under $3. It was just yesterday when it was over $4. And by yesterday, I mean early in February, earlier in this month. It's been sliding. IV rank of 45. It's a directional play, and I don't think it's that great of a directional play. Anyway, it's a big product. And not great markets. Palo Alto Networks 150, taking the market a little bit lower by about $13. Today we've got Walmart, John Deere, which have been two that have been strong in the market. Dash, Oxy, eBay, Carvana. That's all I got for you. You ready to do a little confirmance? Gold
silver ratio sitting at 64.70 right now. It's kind of on this kind of middle range.
Up about $10 from
the lows.
It was 46 on its lows, up around $10 for the last couple of weeks, a week or so ago. 56 to 40.
Move and volatility a little bit interesting today. Fall up 13 ticks here, up about
did this morning as opposed to yesterday where it was weak.
Yeah.
We do have some numbers coming out this morning too. So
I think they should be already out.
Most of them are out at around 7:30.
You have expiration. You have options. Big monthly expiration at the end of this week. You got. I think we got like PCE.
Yeah, durable goods came out. Housing starts and
PCE later this week too.
At a Treasury auction at 1 p.m. or so.
Some Fed stuff.
Which is 12 Central.
Cool.
All right, ready to go.
Confirm and send. Let's do it.
Let's do it. Wednesday, February 18th. Half the month is over. I can't believe it.
Time flies.
It does. Do you think in order to trade successfully, maybe I should answer this because, you need exposure to all assets, i.e. stocks, options, futures, or could you have a concentration of just one asset category and still be successful? Think you could trade all SPY or SPX and be successful?
Yeah, sure. I think you could do that if that's.
I think you could too.
I think it takes a little bit bigger size account to do that. I think the small to mid-size trader, you need to have a little bit of everything because they serve different purposes, right? You have the futures that are kind of your static deltas. You have your options on both stock options and futures options that you need to use to get some leverage. The stock component, I think, is harder to apply to the small to mid-sized accounts because it's just not capital efficient. Whereas with the larger size account, you could have kind of a core stock portfolio and trade around it via SPX or SPY, 0-day stuff. Like there's a lot more flexibility there. So I would say generally it's good to at least understand and know about all of these products and use them when needed. At the very least, I'm not going to say I think it makes sense to go to just like trading Tesla options. Like you should do a little bit of everything. I was
going to add, right? Like or MU. Like
like you're not going to specialize in one single stock. That gets
It's a little hairy.
Yeah, I don't think that's the place.
Markets aren't as great there. I think if you're going to trade one product, you need to be in probably, an ETF, like an SPY, IWM, Qs, or something like that.
Yeah.
I agree with you. I mean, you will lose out or miss out on some opportunities. You will avoid some pitfalls too, right? I mean, you won't get caught up in the gold or the silver, and you won't benefit from gold or silver or other futures. Futures in a small account is a tough one.
And I think that as somebody who's watching markets basically all the time, it would be really hard for me to watch the moves in silver and gold and not do something.
Yeah.
Just because I'm an SPX trader.
Yeah.
Or I just trade the NASDAQ or whatever. You're seeing opportunity here with volatility and price action. I mean, you got to participate in that somehow.
Yep.
I can't just pigeonhole myself to one single thing.
Totally.
Next one, please.
Let's do it.
How do you manage a poor man's cover call once your short strike has been breached? I'm long a call in September and short one in March. My March call has been breached. I'm wondering if I should roll the short call out in time, even if it's for a debit, or just close the trade.
Now remember something here. When you're buying a strike that's already in the money or close to the money, that's your back month, that's your stock substitution of a poor man's covered call on the option. So you're going out 70, 80, 100 days, whatever you're going out, you're buying that option that's near the money or in the money if you're getting more delta, and you're selling something out of the money. That's the covered call, poor man's covered call for a debit. For a debit, you're buying the one larger, selling the one for less. When you're closer to the in time frame option gets in the money, you have a winning trade on.
Yes.
Like, this is a good thing.
For sure.
By doing it for a debit, again, buying back your short option and selling another one, your stock has gone higher. You're making a conscious decision here to keep your long delta, not ring the register, which is perfectly fine. But this is what you wanted to happen.
Yeah.
So
and there's still going to be extrinsic value.
Still going to be extrinsic value in there, but it's a long delta position and probably more delta than you started with.
For sure. And the debit that you're paying when you're rolling this out, and if you're rolling to the same strike, it's going to be a credit. So I know that you're rolling up and out because you're saying it's a debit to do this adjustment, which the debit itself, that is a cost, but you are adding potential intrinsic value. For example, if you were rolling, like let's say this is Apple and your call is at 250. I'm just pulling this up on my platform here. 250 in March, you can roll out to the April 58-day 255 strike for a 65-cent debit. That debit is a cost.
Yep.
You are buying that roll, that $5 roll. You're moving $5 out of the money though. So you're adding the potential to capture $4.35 of intrinsic value. That all else being equal, if you make that roll for 65 cents and you move $5 further out of the money and the stock stays exactly where it is right now through the next 58 days, you would make $4 and change more profit than you would with the same strike that you have, because you're adding that intrinsic value. So the debit credit thing gets people a little bit confused because you can add potential value with a debit type adjustment. With that said, you are adding risk because you're adding that 65 cents of risk to the position and the intrinsic value buffer that you have to the downside. So if you roll from the 250 to the 255, that's $5 of value that you are taking off the table if the stock does go back down to 250. So there's always going to be a gimme and a gotcha, but rolling for the debit itself isn't necessarily a bad thing, obviously, because we don't know where the stock's going to go in the future. You are adding potential value, and you can do that with something that's out in September where you have a lot of duration left on this trade. You can wait. I don't think you have to roll now, but in the next 2 weeks or so, if the stock is still in the money or to your call, rolling up and out for a small debit is certainly on the table. You're adding extrinsic value. You're adding the potential for intrinsic value as well. So that's definitely something that you can consider.
Yep.
It's a high-class problem, as you mentioned.
It should happen every time you do a poor man's coverage.
Yes, it's great that
you have this
you're
internal
having
struggle with yourself.
Yes.
Mm-hmm. Next one, please. How should traders think about balancing probability versus payout when structuring trades? This is a tough one to answer.
Yeah, so higher probability trades are going to have a lesser payout, right? These things go hand in hand. If you want the big lottery ticket, it's going to be a low probability. If you want the more consistent, lower risk and higher probability trades, you're going to have less payout on those trades. So there's always a gimme and a gotcha to these sort of things. I think you've got to mix these in a little bit, and there are trades that you can do that are high payout, with low nominal risk. I think about like a calendar spread, diagonal spread, even a poor man's cover call is a position where, your overall risk relative to a short put is a lot different. There's a lot, lesser tail risk. You might have more realized risk from that trade, but your tail risk is much lesser. So there's so many things that you have to kind of balance. I think there's a place for both high probability trades like a short put, short call, strangles, that iron condors, wide iron condors, those sort of things where you have a 70 to 80% probability. You should definitely have those on when volatility is relatively high. And then there's a place for things like a poor man's cover call, diagonal spread, calendar spread, where you have a little bit more dynamic payout, to use this kind of wording, where you have higher upside, a little bit lesser risk, a little bit more delta exposure, different exposure to volatility and gamma as well. Those two things are if you're always just selling premium, you're going to be, short vol, short gamma. Adding in calendar spreads, diagonal spreads, butterflies, stuff like that gives you a little bit of positive gamma. Long vol kind of hedges you a little bit in that way too. So you gotta have a little bit of both.
Yeah, I definitely think you answered it correctly and really profoundly right in the very beginning when you said higher probability trades make less money. I mean, that's just
how it is.
It's just a math model. If you have a lower probability, then you're going to be able to make more money.
Yes.
That's just how it works out.
Yes.
And you have to peak that equilibrium.
Yeah.
I like to have trades that are around a plus 65% probability of success.
Yeah. Overall, our portfolio probably sits in that range.
That is correct.
With the combination of stuff that has, maybe closer to 50-50 probability along with, static delta and strangles and everything. When you take it all together, it should come out to that sort of range.
That is correct. You are correct. Good one. Next one, please. You want to take it?
In today's environment, how do you determine whether it's better to be a premium seller or a premium buyer?
Yeah, I mean, you got to pick a side. Is really what it comes down to. I like selling premium, and when premium is high, that gets me excited in the market. Now, when premium is lower, meaning the IV rank is lower, we definitely go to a directional bias. You've been doing a lot of diagonal spreads. I think it's a good equilibrium. You've been doing some crab trades.
Those have short premium to them.
I was going to mention that, but they still have. I'm still on the same team. I'm team short premium. I like to have the higher probability of success to make less money. I could certainly have delta when I put on a crab trade, or if I put on a diagonal, I'm having delta on the trade, more delta than I normally put on when I'm just selling premium. When I'm just selling premium, I'm usually looking to have 30 deltas or less per contract, 30 delta being a naked put, a strangle being 0 delta, all intents and purposes. So you have to pick a team. I like to be short premium. Doesn't mean that I'm right. You pick your team, make it right for you.
Yeah, we're always net short premium, and even the diagonal spreads, poor man cover call, calendar spreads, there is a component where you are short volatility in some way.
Yep.
And so there's always some sort of positive decay in our favor, even if we're net buying premium on that position. So there's always something being sold against anything we're buying.
Very good. Very
no
good.
YOLO long calls, long puts. That's just death by paper cuts.
Even the S&P is up 15. Volatility was catching a little bit of a bit. It's basically unchanged, actually down 7 cents to 2015. We'll take a quick 90-second break and come back. We got more Tasty Live coming up with an option jive next. We'll be back in 90 seconds. It's Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Here's what your buddies mean when they say to catch a falling knife. Ever seen a stock make a huge move lower? And maybe you had the thought, I'm gonna buy that stock. But then it just keeps going down. That's a falling knife. A falling knife is a stock that makes a big move lower and then continues to move lower. The contrarian trader has the idea to go long that stock in the hopes for a bounce, catching that falling knife. But you gotta be careful trying to catch those falling knives.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's option. Jive.
So hard to achieve. I'm going to say
it's harder to achieve when the stuff's hitting the fan.
Yeah,
that's the problem.
Because everything gets sold off.
Yeah, but that's when people want to be quote unquote diversified. They tell you, oh, you got to be diversified because some things go up, some things go down.
The only thing you can do is be long volatility. And I don't even mean it long volatility in options. I'm talking about like /VX or something.
You're talking on a big downside move.
On a big downside move before the move.
Yeah, like, before the move.
You have to have,
or if you have some dynamic delta, some like.
You could have some dynamic delta,
but it's not. It's never big enough.
It's never big enough.
Yes,
it's never big enough. It's never big.
But I think that's the point. Is like the big. There's nothing you can do to avoid the big down move.
That's correct.
The COVID type move. There's no, in a world where everybody is just passively long pretty much everything.
Yep.
There's not much you can do into a 20 or 30% drawdown in a matter of weeks. It just that's just the risk of being long. But I think as a general rule, having strategy diversification, product diversification, those are the ways where you can soften the blow a little bit. The hedges, the hedge that you have is going to hedge you 3 or 4 or 5%. It's not going to hedge you 25%. There's no way to hedge yourself 25% and participate to the upside 25%.
Can't.
You could hedge 4 or 5% and not have any drag on your upside. But when you're hedging 20% moves to the downside, you're missing out on the 10, 15% moves to the upside. That's just how it goes.
Has to be.
Yes. So let's talk about it. So building a portfolio that can take a hit. So markets don't always move in our favor, of course, when volatility hits. The goal isn't to avoid risk completely, and you really can't, as we just kind of went through there, but to make sure our portfolio can withstand it. You want to keep the doors open, as my dad would say. And one of the ways we do that is just via diversification. So very basically, diversification is just spreading your investments across different asset classes, sectors, and markets. We do this via options, of course, strategies, having some long delta in some stocks, short delta in others, neutral in some where they have more dynamic delta. You use futures, you get into different products like oil and natural gas and silver and gold. I mean, there's many ways that you can do this to get a little bit of diversification. When we talk about stocks themselves, though, so different stocks come with different levels of volatility, which essentially means the degree of the variation in the stock's trading price over a certain period. And we're on the next slide here. Mm-hmm. So when we look at different stocks, there's different levels of volatility. When you look at a Tesla and Nvidia, you should expect much greater price movements in both directions in stocks like those. When you get into your TLT, we have gold here, which has changed significantly in the recent time, but historically, 16-17% implied volatility has been kind of the norm.
Sure.
Those products don't move as much, and so with more volatility, there's going to be wider P&L in both directions, and so to diversify, you want to be spread across different volatilities as well. That's a diversification piece, right? Being in lower and higher volatility underlyings with different positions is going to further that diversification as well. When we talk about volatility and correlations, volatility clustering is something we mentioned. We just talked about it into like a big move like COVID. When you have these big moves like a COVID or, Tesla, when it rallied in 2021, where it had remember it did 2 or 3 splits in the period of 6 months.
It seemed like it was doing it every other expiration cycle.
It went from a $50 billion company to a $1 trillion company in a very quick period of time. Yeah, Nvidia was kind of in the same class there. But when you have these big volatility events, everything kind of moves together. Like in COVID, tariff tantrums, everything's kind of going down in the same way. The situations with Tesla and Nvidia are more binary to that stock, so you have that sort of risk when you're only trading in stock positions. When you get into stuff like gold and TLT, those have binary aspects to them, safe haven, flight to quality type things. And then there's, of course, mean reversion in terms of everything kind of when volatility gets really high, it comes back lower. When it gets really low, it kind of tends to percolate higher. These are all things that kind of go into your trading here.
And so, again, I'm getting questions about my volatility speech that I was talking about then. It's damn near impossible to buy volatility for a move lower. You can do a cover.
You have to do a day of.
You have to do a day of the move. That's right.
Or
you
week
can do
of
a covered
the move.
call type thing on volatility.
You can't do covered calls on volatility because you the whole point.
You can do /VX versus VIX options, which
yes.
First of all, you don't get relief on it. It's capital intensive, and it doesn't. Without a move higher, it doesn't pay to keep on. There's too much drag on the VIX future. It's impossible. And your point,
you miss out on the time where you need it.
That is correct.
When you're doing the cover.
You got to pick a team.
So you got to pick a side.
Yep.
And the only way to do it, being long volatility, is short duration. Like you got to just kind of be like, all right, we're going down this week.
That's correct.
And you're long volatility, or you buy calls in VIX, or you buy calls in UVXY for the week. Like that's how you got it. There, you cannot. You can't say in the next year we're going to go down 20%,
nope.
and I'm going to hedge right now.
Right.
You can't do it.
Nope.
You're screwed unless it happens in the next month.
Correct.
So talking about just kind of their risk profiles on these stocks. So even before investing in individual stocks, their average price risk profile from 2020 to 2026 looks like this. So we took the daily standard deviation of price, and obviously you have, with higher volatility, you're going to have bigger moves in both directions. This just comes with the territory. SPY has had some huge moves here, but something like Tesla is much more volatile. Building on kind of the portfolio on this next slide here, so looking at like Nvidia and Tesla and just putting capital into those stocks obviously has been a good trade. So getting on to the next slide here, guys. So you're obviously going to, this, nobody complains if they didn't diversify and just bought 100,000 worth of Nvidia or Tesla over the last 6 years. That would have been better than diversifying, as the numbers show.
You always see the advertisement, this is Nvidia at 16 cents. You show me that stock and I'll be happy to do this too. And we can just all go to sleep.
Yes. But with more volatility comes bigger, wider ranges of P&L. And so on this next slide here, just kind of diversifying between these assets, right? So by using a diversified portfolio where the investments are spread out, and we're on the next slide here, guys. Yes. So the point being that when you have a diversified portfolio, you're going to have a much tighter distribution over that period of time. So, from a P&L standpoint, you have about a 73% less volatile P&L diversifying across those assets versus just being in one stock. Obviously, if you caught the move in Tesla from the 2020 low when it was going bankrupt, you remember when it was like the whole thing, it was going bankrupt to, a $1 trillion company, that would have been the best thing to do. But if you're looking at it now and you're saying, how do I kind of start a portfolio here and diversify across assets? This is the reason why you do that. You do it because you have tighter risk in both directions. You have lesser big moves to the upside, lesser big moves to the downside, and it's about 73% tighter range of P&L. Even when you're, not as diversified, it cuts if you are diversifying against more assets, it's going to cut it by about 24%. So it's a big change here.
Yes. Too big.
So a diversified portfolio can help protect your portfolio against market volatility. It can provide opportunities for growth. Obviously, you want to have those high volatility assets in your portfolio because those are the ones that are going to provide you those outsized moves. But you don't want it to be the whole pie. The whole pie shouldn't be in super volatile stuff. You want to have a little mix of everything. And of course, diversification, it can be a short-term tactic. It can be a long-term tactic. I think for those people going back to like our confirm and send question about can you just do one thing? I think this kind of shows you that you want a little bit of everything.
You do, and it's almost easier to look at this from the flip side, since volatility is mean reverting. Selling volatility when it goes higher is a lot easier to make money than buying volatility to anticipate the up move.
For sure.
Which would be the down move in the market.
Yes.
It's easier to be reactive than predictive. We'll take a quick 90-second break. Even the S&Ps are up 16 and change. NASDAQ's up 70. Russell up $1. That's been the weakest of the group so far. They're all pretty much unchanged at this moment. Dow up 76 and volatility unchanged. Bonds down 10, 117.22. We'll be back in 90 seconds. Tasty Live. Opening bell next.
Cool.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live, with the opening bell being imminent. E-mini S&Ps have been where they are for most of the time that we've been on the show. Now, when I first got in here this morning at around 6 a.m., they were up around 35 or 40 handles. They're up about 15 handles right now. NASDAQ up 57, and the Russell down $1, but unchanged down $1. But you can see here, Russell in the middle of its most recent range. I guess the E-mini S&Ps are in the middle of their most recent range too, but a lot more volatility, a little bit lower end of their middle range. Dow up 80 and change. Volatility, which has been catching a bid so far this morning, was soft all day yesterday. I talked about getting under $20. You've got expiration this morning on the VIX options. 1990 is the low, 2020. We'll see what happens to volatility today. I think it has to go under 20 for us to sustain any kind of rally or breakout of this little area that we've been in. Bonds are down 10, 117 and change. Bitcoin down 600, tight-ish range there. E-mini S&P's expected move for the day around 41. Yesterday it was around 44 or so at this time. So volatility kind of showing you that's basically unchanged. Oil up $1.60 and change. Gold up 76. That's been the big mover. $120 move in gold with silver. Silver even bigger move from 77 up from 72 in change up to 77 in silver, back by up almost 5%. Nat gas down 12 cents. We've got about a minute and a half before the market opens. Apple was the big savior yesterday. It's unchanged right now. Nvidia was higher a moment ago. It still is up by about $3.5. Palo Alto Network is the damper, PANW, which has been soft as of late, continues its weakness, down around $14 or so to under $150. You've got Walmart, you've got Carvana, John Deere, all for earnings today.
Live from the Monitoring the Situation room my new chat that I've been added to, my macro boys, please. The team has said, okay, it's time to look at Iran again. It looks like we're going to bomb Iran before the market opens on Sunday. We've moved an ungodly amount of aircrafts into the Middle East the past week. We can get that 4-1 on Polymarket right now.
That's right.
If you go 23rd, you're going to even get the full weekend.
Oh,
February 23rd.
Okay, I was
21%.
Okay, February 28th.
Are you going to give it a extra couple days?
I'm not giving it to anyone because I don't bet on war. But what does that mean to the market?
Well, I think you're seeing a little bit of a bid in. Maybe that's why you got a move in oil to 64. You have gold.
What's that mean to the equity? What's that mean to the equity market?
I don't think it matters.
I don't think it matters. I don't think it matters either. But it's typically bullish, believe it or not, for the market.
Let's see if LMT's moving or any of those.
Maybe we can have the guys do a little market measure on that. Or an option jive on past performance on wars and skirmishes across the board. Well, there was the opening bell. Even the S&Ps are up around $6.
They just moved like 20 handles.
They did very quick.
Big move.
Very quickly. Volatility up by 8 cents. Russell's down 8. Dow is down 50 and change. NASDAQ just went red, down 4 and change, and even the S&Ps are unchanged. Bonds are down 8. Oil up $1.70 and gold up 73. Let's see what's moving in the market real quickly here. First minute of action here. PANW down 15. SanDisk with Western Digital selling some stock down around $12. Carvana for earnings after the close today. Down around $10. Meta, that pig. Down around $9. AVGO down $3.
I remember when partnering with NVIDIA was like the greatest thing ever. That was good for 5 or 6% easy.
You're right about that. You're right about that. Upside, ASML always reminds me of the speaking softly kind of thing for some reason. Goldman Sachs, the evil empire.
ASMR.
I know. Hey, Goldman Sachs up 13, 12.5. VRT caught a bid yesterday, catching a bid today, up 8. Ivy rank a 30 in there. NVIDIA up 4. AppLovin up 3. Reddit up 3. Even the S&Ps just caught a bid. They're up 13. Volatility up 3 cents. Coin up $2 and change. Sorry, let me move that down for you. Coin up $2.50. Some of the oil-related stocks with oil higher, you would think is higher. ExxonMobil up $2 and change. What are you thinking here, son?
I think I'm going to sell a couple calls in silver here.
A couple of calls in silver. You got some small silver futures too.
I trade. So the CME launched those last week. I got long a couple of those, which
the sickies, right? SIC.
You getting sick?
Yeah, it's $100 ounce silver. It's basically $100 a point, right?
Yes. So it trades just like MCL, which is nice. It's a small size because the SIL contract is 1,000 ounces of silver. So even that contract, even though it's a mini, is a big one.
Sure.
It's a big contract when it's moving,
It's a lot bigger when it's 120. It's big enough when it's 77.
Yes.
It's a little bit more manageable when it's in the 40s, right?
Yes.
But SIC/SIC, which has okay volume, good markets, only a couple of pennies wide here.
Yeah.
So you place your bid of your offer where you want to get filled. And if you're around the expected move, you're going to get filled there. If you bought one of these yesterday, you're up $385, up $385. That's how it works. Pretty easy to do. No options on those.
Mm-hmm.
Even the S&Ps were just up 13. They're up 8.
So I sold 2 calls to every 1 put that I have in SLV. So I have a little short delta there, but I'm long the SIC contract. So I'm basically delta neutral in silver overall, short some volatility here. That's my overall.
You're scrambling.
Well, not from a good point.
You're trading.
It's been a great,
call it whatever you want.
Yeah.
Sure.
Yeah.
Sure.
Yeah.
You did that in SLV.
SLV. Yes.
That's your hedge versus SIC.
Yeah, not even, but I have like at the money and slightly in the money puts in SLV that are left over from previous strangles that are net positive trades because I've closed out of those 2 times calls that I'm selling on the upside. So I'm pretty much delta neutral on SLV, short volatility, kind of with a long delta lean, because if we get an upside move and volatility kind of stays here or contracts, it'll be, I'll be still delta neutral into that situation, but I'm long the SIC contracts, which are static delta, which I can scalp out of if we do go higher. So I'm short vol delta neutral overall in silver.
Understood.
I closed out a Reddit. I sold those Reddit puts at like 470. I closed them at 370, so I took a couple bucks there, and then rolled down a call in Palantir that's left over from an earnings trade. So I now have the 145 straddle. That's basically a scratch here.
Yeah, well, you needed the stock to rally. You're doing a little bit of an offensive defensive move, meaning you held on through the downturn, and now you've got a little bit of an uptick. You want to continue to uptick closer to your 145, or it's 135 right now, but you turned something that was a loser into a scratch right here.
Yeah, and I've got some TSM.
Some TSM?
Yeah, so I can turn these into butterflies on the upside.
Oh, can you?
So we did the 390, 410 call ratio spread. We did it at $1.45. It's marked at 23 cents. So we could take that one off and just take the money and run. Our risk is at 440. We also have the 380, 400. We did that at 95 cents. That's marked at like 50 cents. So we're up about $200 total on the two lot.
Yep.
We could buy what would that make it? So I need the 420 and the 440. We could buy those, so that would be net us out at like a $2 debit for $50 for a $50 wide butterfly on the upside. Do you do that?
I wouldn't.
30 days to go?
I wouldn't hate that. Plenty of time to be right.
Okay.
Right?
I agree. I like to have the little shot.
Yeah, why not?
Let's see if we can get filled below. And this frees up some buying power too. I mean, we're right in the range for MU because we have those butterflies around 400-ish.
Don't hate it.
I'm trying to get filled below. There we go.
There you
all right,
go.
so I bought the 420 and the 440. I did it all in one transaction for 475. So my net, I have the...
Which I think is the best way to do it, right? I mean, the stock is moving. You'd rather have it as a spread. It's less delta.
Yes.
The counterparty, better fill, or easier fill to see on your account.
I could have done... I would have been comfortable just buying two of the 440s, but I'm going to make it equal on both trades here. But I've basically got a big wide butterfly centered around 400 to 410. So if we go 400, 410, I could hit both of them up to $50 on those two. Just a little adjustment, a little something.
Beautiful.
Maybe take off some.
Even the S&P's up 6, NASDAQ basically unchanged, but man, they've been flying all around here. Volatility up 11 cents. Flying around all around doing nothing, right?
Yeah. Violently unchanged.
Violently unchanged is correct.
And the MO. God, Unity is at $18.
A gold at 5,000.
There we go.
For the 5,000.
Get the hats.
For the 5,000 watchers.
I just closed out some SoFi calls. I sold those at like $1.20. They're at 50 cents. I have long delta there. I'm short puts, and I'm long stock, I think at like 18-ish.
Okay.
Because I took another lot of stock. I had some at 16, and then I think I had a short put at like 20 that I held through expiration. So I got a couple. Animal. So much risk. What else do we have going?
Really just clean up here. You want to look at a SPX trade?
Sure.
Even the S&P expected move is about 44. It's about as high as we've seen. Even the S&Ps are up 16, catching a little bit of a bid here. It all depends on what you want to do with your strikes, right?
Yeah.
So you're going to go into
SP. No, let's do the $20. I'm buying back calls on some of these diagonal spreads, like in Meta.
Okay.
That call went from $7 to $1.50. I did that on the 10th. So it's been 8 days. I mean, the trade is not a profitable trade, obviously, because Meta has done nothing but go down. But that hedge is, like we talked about with diversification and hedging, it hedged half of the loss that I have.
Beautiful.
So it's not beautiful.
Well, I mean,
not a loser, but it's better than the alternative.
Better than a sharp stick in the eye.
I feel like I should sell some premium too. There you go. 550 on that SPX?
I filled the 550 on the SPX trade. I had it up there. I'll put it up there for everybody right now just to show you what we're doing. Again, it's been working. I have no idea what it's going to do today, but that's the trade that we put on for 550. Basically, the 20 delta short on each side. And I went $15 wide just because we've been doing $15 wide ones the last couple of days. Our research shows 20. It's entirely up to you. Where you go with your width of your strikes for your own tolerance that you have.
I did a 1x2 strangle in gold, kind of same sort of setup that I have in silver. This will actually lean a little bit of short delta because I'm doing the 2 calls to 1 put, but I'm selling basically the 20 delta on each side, but I'm doing 2 calls to 1 put. So I'll be net short 20 deltas and short upside volatility into this move in gold. We're right at the 5,000 mark. So
beautiful.
We'll do that. Maybe I scalp out of one of these silver contracts for a little scratch here.
Good job out of you, right? I mean,
all right. I basically scratched that.
Very nice.
But I still got
77.45.
Yeah. I still got a little bit left there. Amazon
I like it.
moving. This is nice.
I like it.
Have to sell this call against it.
Even the S&P's rally going to make that SPX trade a little bit worse than before. Volatility down 16 cents. So far, so good. Correct?
Yeah, no, this is good. We've taken off some things. Just kind of tightening up some positions here.
Beautiful.
Need a little bit more from Microsoft.
Microsoft hasn't been the market leader that it has been in the past. One of those Mag 7 that's really gotten hit. Trading 397 up $1. On the Apple Watch, no watch intended, but just what Apple's doing is down 40 cents. Again, with the market higher. Crazy how Apple correlation, which you pointed out, is 0.27. You would think it would be a lot higher. Let's see what's moving here. Goldman Sachs up $25. Gold up $9. That's GLD, 970 and change. Silver up almost $4. JP Morgan up 3 and change. You mentioned Hood. Let's see what's that doing. Hood down 18 cents. Bitcoin down 700 or so. Coin up 3. Amazon up 3. MU up around 2 and change.
I just closed that SPY strangle. I put that on the 6th. How much do you think that came in?
Ooh.
It's been 12 days. I closed it at 660. It was basically delta neutral.
$1.10?
$260.
Wow. That's
$266. So almost 25% in about a
big move.
7 trading days.
Yep. Big move.
12 calendar days. Yeah.
Big move.
Big move.
Good one there.
Yeah.
I should have done more.
Seriously. Should have done it 4 or 5 times. Why not?
Didn't you know?
Of course.
I should
have known.
Well, you had the idea to do it.
Yeah.
Well,
Didn't do it.
Expanding.
The wins are never big enough. The losses are never small enough. That's how it goes.
This is so true. So true.
That's just the way it goes here.
Unfortunately.
Yeah.
Unfortunately. Good one, though. Even the S&P is up 25. Volatility hitting $20, down 22 cents. Bonds are down 9. You ready to take a quick 90-second break?
Sure.
Made a bunch of trades already today. I mean,
I'm kind of
made 11 trades. I know a lot of them are cleanup from your extended vacation that you had there.
Yes,
I just needed a little bit of a rally, which has helped. So you're taking some of the risk off the table here.
Yeah, I've got net long delta. So I definitely would like to see a little bit of a rally here across the board. I close out some calls in AMD. We did the 175, 250 strangle on the 12th. I think that was either fast market or what's your assumption trade. We did it at $7.19. Closed the call at $1.10. I could close the put. The 175 put is marked at like 487, so I could take 100 some odd dollars out of that trade, but I've got an at the money straddle as well. So this adjustment leans me it gets me a little long delta without putting more risk on the trade into a $6 or $7 down move. So if we get a move back to 200, I'll probably peel off that put and then I'll be flat delta right there.
Best laid plans of mice and men. Yeah. Russell catching a bid. That's your leader in the clubhouse on a percentage basis, up $17. Even S&P's up 23. Volatility in by 27 cents, trading just under $20 a minute ago, sitting right at $20. Bonds are down 117 and change. Bitcoin has not done anything so far this morning. Oil still bid, trading near its highs, up almost $2, a 3% move in oil, giving a little credence to Vecchio's call there. And gold up $98. Silver up almost $4. What are your currencies?
I just closed out the Coinbase call that we had left over from a diagonal spread. It's basically a scratch. A small loser on that trade, but stock has had a nice little rally here.
Great scratch with Bitcoin doing nothing. Coin being up. I think I would get out of there too. You could reload and do something different there. Although the markets in coin, how are they?
They're all right. We have that. I think you did a put ratio there that I think is probably a good trade. Coin. Yeah, you did it at $1.40. Probably take the money and run, or buy the wing if you want.
Close it. Just take the money and run from option trades today.
Yeah. I mean, it's marked at, 35-ish cents.
Yeah.
Let's see where.
Yeah, I'm looking to close a silver trade that I put on two at a buck and change at, I'm still about 20 cents away on that. Oracle is
$2 on that.
Beautiful. Makes up for my Oracle mistake. Oracle down 56 cents.
I don't know if you'll ever get the Oracle money back.
I might have to wait for earnings March 9th for Oracle.
Yeah.
And I did an SPX broker wing butterfly that's in by about 80 cents, trying to make a buck in there. That was just did that yesterday. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
What's your assumption?
That's right. We look at you. You gave us your assumptions. We're going to come up with a trade. We appreciate your support. We'll be back in 90 seconds. Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, since you took a pee break on that last
don't
one,
out me.
I closed our SPX trade for $4.90.
Oh,
just a quick little.
How does Daddy do it?
60.
Is that what you want? That's what you want from me?
Just
How
a
does
quick
Daddy
little
do it? Amazing.
60 cent or something
Unbelievable.
like that. I don't know. Why not? We put the trade on.
I'm really proud of you. Really proud of you.
What, 8 or 9 minutes? Why not, right?
Lunch money for you. Yeah, outed me though. I take 2 days off from the live show and my,
you're very.
I'm usually good for 4 hours.
You're very quick.
4 hours, I'm usually good. This time,
too much coffee.
Too much coffee.
Too much coffee. Even the S&P's up 12. NASDAQ up 50 and change. Russell up 17, still your leader in the clubhouse, and the Dow up 100 and change. Why'd I close the SPX trade? It looked like to me like we might catch a little bit of a bid here, although it seems like volatility is not cooperating anymore. So that's why I closed the overall trade there. You actually closed a lot of your long delta that you had. It, probably could have been the type of trade that you could have kept on if you wanted to. It's still trading right there if you wanted to re-enter. I like just taking a quick little profit.
Yeah.
So, again, it was just personal choice.
No, I like it.
All right. Let's get to what's your assumption?
Let's do it.
Oh, timing is beautiful.
That was pretty good.
Yeah.
Still got my timing.
You do. Good job out of you.
Nobody commented. Do I have a nice glow? Did I get a nice tan? Yours, I don't know. Yeah, a little bit.
I'm older now. I cover up. I'm SPF, 50 and change.
I do that too.
Do you?
SPF, it doesn't block this. It's not like you don't tan you. Put sunscreen on.
No. But I was very covered, hat, all that kind of thing. Long sleeve on the boat and stuff like that. So not as glowy as you, but you certainly have it going.
Thank you.
You got it going on.
Thank you so much.
You're welcome. Really welcome. Looks very healthy.
Thank you.
You're welcome. All right, let's see what healthy trades we have on here. You want to do that?
Yeah. What do we got here? Lemonade.
LMND. Haven't looked at this in quite some time.
65.
When did that happen? Been basically, it was a $100 stock at the beginning of the year.
Tom was buying this because Cole loves this.
Yes.
Remember?
Yes. His son is insurance.
What price do you think Tom got out?
40s?
No way.
I don't know.
I'm gonna say 30s.
I don't know.
I would figure you would know that.
No, I don't know. No. I don't know. 65 right now. Ivy rank is 60. Good at 65 too. One that I missed. It has earnings tomorrow. Yeah. I guess I'll put it on my list. LMND. Since you're trading that bullish here. Reports before the market opens on Thursday. Wouldn't mind owning shares at 50. You say that with the stock at 66.
When it opens 35.
Expected move is 11 though, so that would be outside the expected move. So I like his thinking here. Stock up $1. What do you think?
Markets are not great. They're okay. They're not great. Some of these, when you get out, like I'm looking at the
even
54 strike. Like once you're past it looks like
even the 2-day options are wide here.
Yeah.
You go out to March.
The February options, there's like nobody trading this. I mean, even in February, you got 1,000 contracts on a couple lines here, but that's about it. Some of these are getting goofy. Oh, are we gonna abstain from this? What about a little Johnny?
I think you do a defined risk trade if you do anything in here.
I was gonna do like a put ratio.
You could do a put ratio spread that has alleged defined risk because the stock can only go to 0.
Yeah.
It is, you can do it in March. Where are you doing this?
I was looking at March.
Yeah, March with 30 days. The markets here about 60 cents wide. I'm going to look
Some
at
of them stink.
I'm going to look at the open interest. It's in the double digits, like 50s and 80s and stuff like that.
I think I got to pass on this one, Kevin.
Yeah.
Markets just stink in here. I don't hate the idea of doing like, I don't know, you want to try like a small little diagonal spread?
Sure. That would be something with more defined risk. You're going to be hard felt to get filled here.
Yeah.
At a decent price.
Maybe like the 70, 75.
You could do that.
And the only reason I'm doing this is that if you have a
we're told the market caught a little bit of a bid, your SPX trade is 565 if you want to put it back on.
But that's why, you want to put it back on?
No, I don't. I'm just teasing. I don't like to, once I take it on, take it off kind of thing.
Nah.
I'm usually done and moving someplace.
The reason I'm going to the diagonal spread is if something happens and the stock is down significantly, I can just walk away from this. I'm not stuck in this.
Yes.
And if the
Totally
stock
agree
is
with you.
up, I'll participate with you as well.
Yep.
We can,
Yep.
So I'm going to see if I can even get filled here. I'm going to try a 420. There we go. 420 as foretold.
Beautiful.
Cool. I'm in. A little bit of long delta. I'm long the 70 in March, short the 75 in the 2-day expiration.
It's going to be $1 one way or the other. This is not going to move.
Probably not going to move all that much.
Right.
Yeah.
It's a
small trade.
Participation trade with Kevin from San Jose.
Yes.
So thank you for playing along with us. We supported you.
Yes.
I like it.
Cool.
Oof.
Carvana. Peeps are looking at the
CVNA also has earnings right after the close today.
Neutral on Carvana near term. Either trade the weeklies or use March options with a neutral to slightly bullish lean. Okay.
What do you think here?
This one's got some volatility to it. I mean, you got 270% implied volatility.
Yes, you do.
I don't know if I want to be married to this position, so I'm thinking maybe a weekly iron condor, just say all or nothing type thing.
Okay. I don't hate it.
Oh my God, these markets are so bad.
You're not going to like them.
These markets are so bad. Ew.
Yeah.
E-mini's up 30.
The S&P's up
Should've bought
31.
the dip.
NASDAQ up 150. Russell, you're leaving the clubhouse up 26. It's a full 1% versus everything that's up about 0.5%. Dow up 200.
These options, even 30 days out, have $3 wide bid-ask spreads.
You can't do anything in that.
I don't think you can do anything, Daniel. I'm sorry, man. I want to ride with you, but this one.
Yeah, you like your ride and die kind of guy?
Yeah, I don't think this is the one, unfortunately. But if you do anything, I think Iron Condor is the play. You do a $10 wide Iron Condor. If you're selling around the 20-ish delta for the short option, it should trade about $3 across the. If you're looking at the March expiration, bid-ask spreads are going to be $6 wide.
Yeah,
if not more.
Yeah, which makes it untradeable.
Yes, it's a tough one.
Yep.
So I'm going to pass on this one, Daniel.
Okay.
Sorry.
Next one, please. PayPal. What's going on here?
Oh, God, what a dog.
PYPL.
Oversold. Okay.
It's up 67 cents. It is at the low end of its range, not as low as $38 or so, but it's 41, nowhere near that sell-off from 52 down to around 42 where it sits right now, just under that.
Covered call or short put.
Covered call or short put.
What do you think about? Okay, I'm going to get a little spicy here. PayPal is an absolute dog. I don't think
But the markets are okay in here.
Markets are okay.
Yeah, and you've got plenty of volume on each side, tens of thousands at least per line. So it definitely has, unlike the rest of the markets that we've seen so far.
Okay, I'm going to sell the March 40 puts at $1 and change.
Mm-hmm.
And then I'm going to get a little spicy here.
The March 40 puts, okay, at $1.28.
was that?
Oh, I don't know. What was that? Is that?
I think I had a second account on here. My bad.
Good. What?
One of the other Jamokes.
Got it.
Okay.
128 on PayPal.
And then I want to do like a poor man's cover call too.
You can try that.
I'm thinking May 65. I'm sorry, the May 35, and then sell the March 42.5 against it.
Okay.
$6 and change. You basically do this, so it's trading at 615, which gives you a basis on your long option at 41.15. So what that means is you're basically selling enough premium to offset the extrinsic value that you're buying in the 35 call further out in time. So you're basically doing this. It's you have an extra roll baked in there where you could sell some premium as well.
Okay, I don't hate it.
Let's see where I get filtered. I'm gonna try 610.
You can do that. Me like E, even the S&P's up 37, volatility 1987, great year.
Why so great? What do you remember from that year?
1987?
Yeah. 87 crash?
87 crash, my best day of my career. SPX getting filled at 255. That's my option trades today. 24-hour patent pending dollar profit from option trades today. If you caught that,
I can't get filled on this poor man's cover call, so I'm just gonna sit with the put. But yes.
So you got a sold put in PayPal, right?
Yes.
Beautiful.
But good job out of you on that.
Yeah.
Was that from yesterday?
From yesterday, man. Yeah.
Ringing the register left and right.
Yeah, you don't have to. You get direction right, and you get filled. I mean, you did get almost 100-point probably rally in the spoos from when I put it on. Some would say I was gifted. Others would just say I was good.
Definitely gifted. I think so.
Even the S&P's up 40.
Cool.
Volatility 1982. Beautiful.
All right, so Brian, we're with you. I sold the puts. I couldn't get filled on the poor man's cover call, so I'm just going with the puts.
Beautiful.
Cool.
Next one, please.
Let's move in silver too.
Nice move in silver up to 77.78 right at its highs. Gold also up $113. Gold has had a
mini's up 42. Cancel crash.
Cancel crash is right. Back to 6,900.
Unbelievable. Gone to absolutely nowhere.
Bailing everybody out. If you did anything that got you with long delta and you were able to hold on, you're there now.
Yes.
Place your bets.
SPX Leo. We did this already. I know we got on a what's your assumption day. We might have to wait for the SPX.
Okay.
But we could put on another one. Maybe we lean a little short delta.
I think you have to wait right now. You could up even the S&P's up 40.
Want to just do the call side?
You could certainly do that.
Let's see what the 60. Do we fade the 6,900 mark?
Well, we're 6,900 right now. You're talking about SPX would be another $13 higher, right?
Yeah. Or
that's a 50-ish delta there, right? Why wouldn't you be going
69.10, 69.20
for 275? You're getting around 1/3 the width of the strikes. Completely delta play here.
And we will put in an order to close that for like $50.
Sure.
225.
Sure.
All right. Cool. Leo, we're going to do a tiny bit of a short delta lean here into the highs of the day.
On the rally at the highs.
Yeah.
Taking a shot.
Cool.
Very nice.
All right. So we're in. We're with you.
Mm-hmm.
Morgan Stanley. I like this. Look at that.
MS.
Some different stuff coming today.
Our viewers have came to play.
Okay. Morgan Stanley, March, IV rank around 35 and nothing serious happening in banking. Looking at strangle in March. Okay.
What's a strangle in March do to you?
Second here. Do a little quick restart.
Ethereum catching a little bit of a bid. It was down twice as much as Bitcoin. Now it's down equal amount of Bitcoin. Bitcoin down 400.
I thought you were going to give me good news. It was up like
That is good news. That is good
something.
news. No.
Okay, Morgan Stanley.
MS.
Up $5. When did this get to $176?
Today, although it has been here all year. I didn't know it either, to be honest with you. I actually started the year right here at basically unchanged on Morgan Stanley. Ivy rank at 33, up $5. Earnings isn't until April 10th, about 7 days before expiration.
What do you think about the 160, 190 strangle?
Sure. I don't have a problem with that.
Slightly short delta. Small short delta. E-mini is up 48. Look at this.
Mini's up 48. NASDAQ up 240 and change. Russell still the leader in the clubhouse, up 32. That's a percentage and a quarter versus NASDAQ, which is up 1%.
All right, so we're in, Chris. We're with you.
We are in 393.
Neutral-ish, slightly tiny short delta on it.
Yeah, I mean, it's up $5 today. The expected move in Morgan Stanley for the whole month of April is about $17. March with 30 days to go is about $12. You're outside that expected move, or just at that expected move. Both sides. I think you got the right strikes.
Yes. Cool. So we are in.
Next one, please. Looking at DoorDash. I cannot tell a lie. I say I don't use those services. You used them yesterday. That's why it's up $10.
I mean, you might not use them, but I know you're.
My offspring does. Up $10. Up $11. Has earnings after the close, unless they said something already. Even the S&P's up 53.
Woo!
Praise be.
Dash.
Actually, 1975.
Bullish. This got caught in the software kerfuffle.
Really could have bid here after volatility went under 20 on everything here.
Ooh, these markets stink too. Look at some of the.
Yeah, I think DoorDash with earnings coming on the 18th, you've got $1.50 wide.
More than a quarter of its values.
And you go across the board here, you got double digits, 50s and 100s on open interest in March with 30 days. And if you go to, they don't even have April yet. If you go to February with 2 days, it too has just, 100 contracts per line. You can't trade this.
These bid-ask spreads are just awful.
Yep.
I mean, I'm even looking at if you're looking to do this put spread, you probably have to go to the round numbers. And what I mean by that is just looking at the 2 day options.
The ones that have been around the longest, right?
Yes.
That's what you're looking at.
Yes, the 155 strike, like 155, 150, or 145, like using those strikes, because some of these, like you got, the 147 is $1.19 at 345. I would rather just move that to the 145, which has a 30-cent wide bid-ask spread. But again, you're going to have trouble getting in and out of this trade. So I'm going to pass on this. I'm surprised it doesn't have slightly better markets than what it is showing right now. So
getting the emails about why, how did I know to close that SPX trade that we put on? No, I'm being serious here.
You got a magic ball.
You don't know. You don't know.
No.
I mean, it just collapsed so quickly, and the market looked like it was going to catch a little bit of a bid to me. Now, if we went lower to this magnitude, 50 handles, it would have been a losing trade to the downside. It's a losing trade to the upside. It's almost trading $8 or $8 more on that spread. How did I know? You don't. You're just trading. I mean, I don't want to say I kid about being good or lucky or something like that, but it just collapsed so quickly that it just looked like, a spoon move of 4 or 5 handles for that to come in 50, 60 cents. It just seemed like too much. So it just took a shot. So I don't know. Sometimes you get lucky. I was just lucky.
Well, I might give back that profit.
I see that. You're going to have a chance to do something with that spread.
So.
I mean, you sold that spread at 275. It's trading at like 320. It's not
gonna move all that.
I think you're cool. I think you're cool.
I mean,
expected move is $28 in SPX from this moment.
And that probably puts me right at the expected move.
Yeah, you're right there. You're right there. Yep. You still have a 30-ish delta that you sold.
Okay.
Yep. Cool. I don't have a problem with it. One downtick, even the S&Ps go up 30, which is not absurd from here. you'll have a profit on that trade.
eBay's at 81. Some of these stocks, when did these get this?
This is the one that's...
I remember trading eBay at like 30.
These are the and it's off of its highs of 95, but these are the stocks that, have helped the rest of the market as the Mag 7 has taken a little bit of a breather.
Bullish diagonal, okay. Do they have earnings? When do they have earnings?
eBay has earnings February 25th.
That's a weird one. Not for this. So again, these markets. Oh.
Yeah, you got to keep them liquid here. I know we look for high implied volatility. This has an 81 implied volatility, and that's what people gravitated towards. But you have to have good markets. We talk about it all the time. You have to have type good markets.
I'm going to see if I can get filled up. This is going to be this is basically a calendar spread, but
for the new traders out there catching a bid, what does it mean? And I guess it's subjective. And what we're talking about is that the market is catching a bid, or that product is catching a bid. Like volatility was catching a bid earlier this morning when it was up around 20, 30 cents. When the evening S&Ps were up 10 handles, that would be that people are buying volatility. Then when you saw it go down with even the S&Ps basically not moving, that was just kind of my little signal that said that maybe we were going to catch a bid in the market here because volatility, the propensity for buying volatility has waned. And when that usually wanes, it means the market catches a bid, meaning the market's going to go up. Now, for every buyer, for there to be a trade, there has to be a buyer and a seller.
Yes.
So there's an equal amount of everything. It's just a subjective point of view, trying to add something abstract to the show as opposed to just quoting you points and figures on a chart or what the market is doing. You can see that. You don't need me to do that. You can see the market yourself.
But
it's all subjective.
It's all subjective.
For everybody,
and we're just watching it tick by tick.
Yep.
So, eBay, I did a call diagonal spread, very small. I did it at 305. I'm long the 80 in March, and then I sold the weekly for next week, 85 against it for $3 and change. It's a very small engagement trade. Obviously, if we go higher, that it would be great. If we go lower, it's probably $150 loser. $100 either direction is kind of the trade.
Yep.
Intel neutral Mike. All right, we actually do have an Intel position. I am short the 45 puts and then the 45-50 call ratio spread. So I'm synthetically short the 45-55 strangle is really where my risk is. So this is which has been working here.
Mm-hmm.
This trade is net. It's up like $100 per. Selling the 40-55 strangle. I think I could probably put something on, add a little bit here. 40,
why not?
55. I'm going to move this a little bit because I like to get about $1 for each option. So I'm going to do the 41, 52.5 because you have $2.5 wide. You know what? I'm going to do the 50. It's going to be slightly short delta.
Okay.
You like it?
I don't have a problem with it. No, I'm good with it. So
I'm going to be...
Intel's been your baby. It's been your soup du jour. You've been doing quite well with it.
Yeah, it has been.
Playing more to the upside. It's come down a little bit from its highs of 50 down to about 46, which is a small relative move in Intel.
Yeah, my overall delta in Intel is long about 50-ish delta.
Yep.
So this will kind of flatten me out or take about 20%-ish off. So I'm going to do the 41-50 strangle here.
Okie dokie. See if we like it.
No, you know what? I'm going to move this to the 52. Just so I have different strikes here. Track them a little bit.
Let's see what Bucker's here. Palo Alto Network down 12 while you're doing that. AMD down 3. Boeing
41.52.5 at $2 and
Walmart, which has
$2.21
unchanged. What'd you get filled?
$2.21.
eBay, you got filled at $3.01. Just to let you know.
Thank you. FCX bullish. March, April bullish on copper, gold, and precious metals. Playing FCX to the upside.
So is Vecchio, I believe, too. FCX up $1.50 already.
Okay. Going to do April, March.
FCX has been as high as almost 63, as low as 61.5. It's trading 62.5 right now. I mean, the S&P is a pity.
Kind of like this.
You're probably going to have to pay a little bit more than what you're trying to.
I'm trying to work some orders here. Volatility's
I don't blame you. I don't blame you.
Which means 274. Beautiful. 65.70. So I'm long the 65 in April, short the 75s in March.
Very nice.
I'm sorry, the 65.70, not 75. Short the 70s.
You long April 65 calls, short the March 70 calls.
Yes.
274, $5 wide. That's actually better than the one on a risk-reward basis that you paid $4 and change for.
Yeah, because that was an earnings trade.
Yeah.
I was going to the 2-day.
Yep.
This one's got a little bit of duration. Oh.
AMD.
I closed out. Remember, I legged out of the call this morning in AMD on that strangle.
Nice trade out of you. AMD down $3 and change, was down at 195. It's flirting with 200. So
yeah. So when we talked about that, I was like, if we rally back to 200, I'll take off that put. And so I put the put in for another $100. So I was up about $110 on the trade.
Some would say it was hereditary.
I'll give you that.
Thank you. Thank you.
FCX, I'm in. I'm with you.
I can feel you.
Tom?
Oh, trying to take us down. Tom in Indianapolis, you're hiding.
I do have some short delta in Walmart here.
Walmart down 23 cents. It is off its highs of 134, but that's not painting the whole picture here. It started the year at 111 or so. Mm-hmm. So it's up about $25 to $30 since the beginning of the year, with the market basically unchanged. Even the S&Ps, I think they started the year somewhere right around here. I mean, I think we're violently unchanged for sure. I mean, we opened at 69.02. We're 69.15 right now on the market.
So I have the 125, 120 in the February expiration. I have that on already into earnings. I think I could put a little bit more on here.
Okie dokie.
I kind of like this as just maybe the goodness of the earnings is already baked in here.
Okay, you can do that.
So I'm gonna put. So I like to sell about $1. So the one that I have on, it hasn't moved. So I can put this trade on again, but the short option is coming pretty good. You know what? I'm gonna do it just.
Look at you.
All right. So I'm in. I did the 125 and I sold the 120 into the weekly expiration, the February 2-day.
Okie dokie. So that would be a.
I'm adding to the same one, so it hasn't moved. I put this same trade on the 4th of February at 273. I just put it on at 274, so I basically just added to it.
Let me see. That was in Walmart, right? When did you do it? On the
4th. On the
4th, the stock, just to give you an idea, was 127.5.
Yes.
It's 128.70 right now. Just showing you that
you made about 30 cents on the short option. The short option's gone from about $1 to 70 cents.
Yep. Just letting you know.
Yep.
Next one, please.
I think that's
that was it. That was 10 of 10. Beautiful. I didn't see it there. Even the S&P's at 57.
Overall.
Yeah. Carvana market's not good enough. DoorDash market's not good enough. Everything that was liquid, and
everything
even some
else
that were borderline liquid.
Yeah, that weren't as liquid as we would like. We did it for the peeps.
Yeah, did it for the gram. Yeah. We're going to take a quick 90-second break. We've been keeping TP waiting this whole time, and he is not a man that you keep waiting. We're going to come back with that right now. Tasty Action TP, cancel crash. Even the S&P is up 57, volatility in by 47 cents. We'll be back in 90 seconds of Tasty Live.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Feel like your wardrobe is missing something? like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nicky, we are back, son. So are the E-mini S&P is up 54. NASDAQ's actually one of the leaders in the clubhouse, up 290, a little over a percentage and a quarter if I round up. The Russell up 36, a little over a percentage and a quarter. Volatility in by 42 cents, 1980. But all that means nothing because we've got this man, TP, in the house, Dad. Right. Tasty Extra, how are you?
A massive surge in the S&Ps, and hey, just to drill down just a little bit, if you look at the, Nick, what do they call them, the Mag 7?
Yes.
Of the 7 stocks, when I checked them a couple of minutes ago, the only stock that was down was Meta, of all stocks. So
which
Tesla
is
was up, Amazon, all that stuff. And basically the story came out, I think last night or something, that Meta, Facebook, will be using quote unquote millions of NVIDIA's chips in the next year. So NVIDIA rallied on that news, presumably, but Meta is down alone of the Mag 7.
Yeah, NVIDIA up $5. Meta doesn't make the best kind of. I wouldn't want them managing my money. Like, they got into the Oculus, which seemed really kind of silly, and everything else. I don't know. They don't seem to. I don't know.
Have you ever tried one of those things?
Early on,
whatever.
Early on in the infancy of them, yes. And my son has my younger son, not that one. Has some sort of apparatus that
Kid has all the toys. You just got a boat this weekend. You're ready. Yeah. What are you going to get him next? A house?
Gotta get him a girl.
Nicky, Nick, I think it's time we start planning your ascension to be the favorite child. Okay?
Thank you. It's been about 35 years. It's been 35 years. Yeah, you know what my ascension has been? I'm the step stool that he uses to get to the next step. I just go down on my back. On my back, he steps on me.
My number one son,
right, number one. We're going to change your attitude, and we're going to get you promoted in the next couple of years.
Thank you.
Guys,
in the next couple of years. Shit, TP.
No,
come on.
It's been a long time. What do you want from me?
These kids want instant
I gotta get
gratification.
something off my chest, guys. Guys, I gotta get something off my chest.
Go ahead.
Aliens do not exist.
What?
Okay.
Oh, come on. Mikey Butler's going to be really, really upset with that proclamation.
I know, and I love Mike. And I know it's fun, and I know it's exciting, but they do not exist. You cannot overcome and I know people are talking about it now. You cannot overcome physics, time, space. That's
what you think. Big. That's what you think.
No,
TP.
And I know you can think, well, what if they do this? What if they do that? No, it doesn't work. So I'm sorry, Nick, if you're like, ooh, aliens are going to come and save us. Nobody's coming to save us.
All right, well, TP, you're in the majority here because on Polymarket, you can tell Michael that he can get 10-1. The chances, will the U.S. confirm, just the U.S. confirm, that aliens exist before 2027, 11% chance. So you can get almost 9-1 if you want to bet.
I wouldn't even
TP.
trust and at this point, Bat, I wouldn't even trust what they say. It's like they might do it just to screw with Polymarket.
Yeah, that is true. That's true. And then in 2028, go psych.
Gotcha.
And they're all floating around on their yachts. All right, guys, let's hit the cherry pick. So if you're looking for the cherry picks, we posted it on the news and insights on the tastylive website. We are going through the IP warming process with our new distribution system. So we did not send out the cherry picks via email. It is on the news and insights blog page.
Yes.
On tastylive. So what I talked about was crypto. And if you want to talk about a monkey hammer, look at Bitcoin. Okay. Bitcoin has been brutalized since last October. And why? I was long Bitcoin. I got out when it was like 105 on the way down. I didn't sell it at the high. I didn't sell it.
Oh, you sold it on the way down.
Yeah, I sold it on the way down.
Hard sale. Good job out of you.
Yeah, no, and trust me, I had 2 Bitcoin. I mean, I had a tiny position. I was not to blame for this. But basically what it was is Bitcoin got overextended. It's not a fundamental problem with the whole blockchain technology. That's not why Bitcoin fell, in my opinion. I think a lot of big traders, big Bitcoin holders saw it start to sell off or just saw $120 or 120,000 as like, oh, geez, I can take some nice profits here. And it just sort of cascaded, wiped out the week longs. But as you see, since October, the price of Bitcoin has dropped by about 50% of its value. That is a massive, as I say, Bitcoin got monkey hammered. It's just, it's been a bloodbath. If you go to the next slide, Nick, that also carried through to things like Ethereum, XRP, and I just pulled 3 because there's so many bloody cryptocurrencies.
Sure.
It's just pick the big 3. They're all down.
You know what?
They're all,
I'm sorry to interrupt you. The interesting thing that I see here, and I know you have year to date, you don't have, but year to date, is that from January or is that from February to February?
It's from January.
So it's from January. So it's just this year. I'm going to change my story. What I was looking at here was when Bitcoin was going up and a lot of these other cryptocurrencies are going up, I said, you got to go with the chalk. I think you have to go with the most liquid one of them, the biggest one of the group, Bitcoin. So goes Bitcoin. So will go the rest of these fringe ones, where a lot of them were going higher, but a lot of them were also, getting hit too. You weren't getting the benefit of the up move in the market on some of these fringe kind of crypto coins. I was wondering how much these are down for the year. I know Ethereum is down significantly off of its highs, cut in half also, but I'm not familiar with XRP if that too is cut by 50%.
Close.
Yeah, they've all been whacked.
Yeah.
And if you go to the next slide, Nick, I think that shows the correlations. No, that's. I'm sorry, I didn't include the slide, so we can just stay on this one. But the point is, the correlations between Bitcoin, Ethereum, and XRP, and most of the other cryptos like Dogecoin or Light. What's the Light one? LTH. It's the correlation's like 90%. So crypto in general started the story last fall was crypto crashing. Right now, the story is AI crashing.
Yeah.
Right. So the AI stocks are getting crushed now. Late last year, it was the cryptocurrencies getting crushed. So the whole the whole market. What's the word? A philosophy or what's driving the market has changed a little bit. AI is not crypto necessarily, and what's going on in the crypto market. If you look at these stocks that you pulled up, Nick, thank you. These are a bunch of, everybody knows coin. It's an exchange. Some of these other ones are actually mining stocks. There are companies whose job is to mine the cryptos and make money off of that. What's interesting with no kidding that they're all down in the same amount of time. When the cryptocurrencies fall, their assets fall. In other words, their mining activity is not as valuable. Makes sense. But what I don't realize, I'm sure lots of people out there, our viewers certainly understand this stuff better than I do. Those mining stocks are really infrastructure and data center companies. Okay. Why is that? Because if the three of us wanted to start mining cryptocurrencies profitably, not just setting up a spare computer in Nick's bedroom or whatever, no, you have to have massive server power, sucking in huge amounts of energy with a lot of physical space. So it's as much of getting that infrastructure together before you press the button and say, all right, let's start mining Bitcoin. Let's start mining Ethereum. So if we go look at some of these stocks, one of the problems with these stocks, though, Nick, is most of them do not have liquid options. Coin's not bad. Riot's not bad. XYZ's not bad. The only one that I kind of like the looks of was MARA. Okay. Now, what's going on with Mara? So just like I said, the story with Mara, it's one of the weakest performers on this chart. It's down about 60% over the past few months. And the point is that Mara is a Bitcoin miner.
Oh, we lost him. Oh, there you go.
Oh, there we go. He's back. We lost him. He's back.
All right. So the thing about Mara is that it is negotiating with the French government to take a controlling stake in one of the French national electricity company's subsidiaries. It's a data center subsidiary. So what does that do for Mara? It gets the data center, and it also ties into the French national electric system. So it kills two birds with one stone. That's why I was looking at Mara. If we go to the next slide, Nick.
You didn't have to convince him. He went out.
I just bought a couple shares.
Yeah. Has earnings February 25th.
You're still okay, Nick. We got to work on this.
I'm sorry. The trigger fingers are quick. I shoot first.
No. I get it, Nick. You're excited. So the point is about Mara. It's a $7 stock, right? But it has massive IV rank, and its options are fairly liquid. Okay, it's fairly tight bid-ask spread. Really, Nick, Tony, I don't care about the story. I really don't. I care about the options. Okay. That's really it. Everything else is context. So if I'm looking for a trade, okay, Mara, has tight bid-ask spreads. That's the liquidity part. Volatility, got 94% IV rank. Awesome. Okay. Probabilities, I'd sell like the 6 put in the March expiration here. And the call skew is pointed towards the call side. So I'm not saying Mara is going to go up, but the market sees risk to the upside. So for a small account, if you have a couple of $1,000s in an account, $5,000, something like that, and you're doing the whole trade, small trade off and approach, and you want a low capital requirement exposure to the crypto mining space, Mara, this has what, a buying power effect of about $230. That's manageable.
Yeah.
Has an 82, what is it, an 82% probability of capturing its max profit, half of its max profit of about, I think I could sell this, I don't know what you got, Nick, and I didn't look at these prices today, but about 36 cents. This is a trade that you could consider if you're bullish on the Bitcoin mining space for a low amount of capital with a high probability of success. That's it.
I like it.
I like it. I did kind of the same thing. I just bought shares, but I like it. I think, it's a call option stock.
Yes.
At $7, you can only go to zero. So, that's your risk. So
that is your risk.
I also sold puts in block XYZ. So I thought that one was interesting too, kind of on the lower end of where it's been trading. 50 has kind of been the spot. And it's, not just crypto. It's got, we talked about Square and Cash App as well.
And to your point, Nick, this is blockchain is the technology that is underneath the cryptocurrencies, right? Yes. And a lot of these, it's a big technology thing. And so, Nick, you're right. These companies, some do it better than others, right? Block might be doing it better than others. So yeah, sell a put in that one. It's all the same idea.
Yep, for sure. I like it.
I like it too.
I think that's
Guys, that's all I got for you, Spoos.
You are good. Spoos are up 50.
Yes. More, baby, more. Give us more.
You can't keep a good market down.
Nope, you can't.
You can't keep a good Spoo doggy down. You're 100% correct.
Yeah.
No doubt about it. We're going to take a quick 90-second break. I'd have to take a quick 90-second break. Perfect. We're going to come back. We got Q and Glenn coming in here. I actually think the highs are in for the day, son. Volatility 1988 off of its lows, down 36 cents. We'll see what happens. We're going to take a quick 90-second break and come back. We got more Tasty Live. I immediately found these messages with my man Q and Glenn.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Look who's back testing. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live, that's right. But this man... My man Q, how are you, brother?
Fellas, how's it going? I'm doing well. How are you?
I'm doing well, too. No complaints.
Yeah.
With you?
You have a good Valentine's Day?
We're good. Yeah, I didn't really do anything for Valentine's Day. What about you, though? What about you?
Oh, man.
Yeah, you was a mover and a shaker. You kidding me?
Yeah.
Sorry, I would wish for, a little something.
Hey, maybe one day. Maybe
Soon.
one day.
Yeah, we'll get you hooked up.
We'll see what we can do. We'll see what we can do.
Yeah. I'm in with the community,
All right, respect. All right.
I got it.
I got a couple things to go over today.
Let's do it.
1/SIC, the 100-ounce silver contracts, is now available for trading.
We've been
I don't know if you guys
already,
have been
dude.
talking about that.
We're taking
Nothing
names.
gets by me.
Listeners, the whole thing.
Nothing gets by me. I'm slinging them.
So I'm a little late on that one.
That's a good one, though.
I'm a little late. No, that's my fault. I'm a little late.
It was because you were out one of the days last week.
Yeah.
With Marty. But that was the day it launched, I think.
Okay, sure.
And then
we can say that's the case.
Yeah.
Because I'm late with it. We can say that's the case.
Not late. But we usually like to wait a little bit before we really, pump everything out there. So not late.
This one, I'm sure, has not gotten by you. Okay. But the new downloadable desktop is now available for download to everyone. So I'm going to send the link in the YouTube chat. So I just sent it in there. And then you're now able to, that's the link to our Help Center article, just support.tastytrade.com.
Beautiful.
Search up download beta in the Help Center. And then you can download it's just the web platform, but now the downloadable version. You can also do account management from that downloadable app as well, which is pretty cool. And so, we now have that available for download for anyone. And then any questions or feedback on that, always feel free to give us a call, of course, in live chat, but also send any specific feedback to feedback@tastytrade.com. So if you want to get switched over to the new downloadable desktop, it's now available for everyone. I mean, it's super similar to the old downloadable desktop. Most importantly, when you hit send order, it works, so that's the biggest thing. Slightly formatted, somewhat differently, but if you know how to trade, it's all the same.
Very nice. Look at you at public service announcements and everything.
Yeah. I try to bring some value when I come on. I'm trying my best.
Just to clarify for everybody, the downloadable platform is still staying. It's not going away right now, but this technology is going to is a little bit easier to develop, and so we can add a lot more features and do it across multiple platforms. So the desktop app is still fine.
Yeah, the OG desktop is still there.
OG, I like it.
Yeah, they like to, on the dev text, I like to call it legacy. I'm like, no, it's the OG desktop. That's what we got.
Much better.
Yeah, and so that's still there, but you can download the new beta version as well, which is super exciting. And it's a great platform. Good to use.
Yes.
Good job.
All right. Well, let's go over some more business. Top 20
Ready.
symbols going through the system and their IVR. At number 1, Tesla at 4, Microsoft 32, Amazon 21, NVIDIA 27, SLV 59, Micron 73, GLD 63, iBit 61, Netflix 36, Google 17, TQQQ 31, TLT 12, AMD 37, Palantir 20, Meta 20, DDOG 54, Spotify 21, SNDK 70, Oracle 94, and SoFi 16.
Beautiful list that you always do so eloquently. Good job out of you. How's the desk today?
Yeah, it's good. It's busy. It's always busy like after a long weekend.
Yeah.
That always happens for like at least the first 2 days because it's just like there's an
moving
extra
50 handles a day or more usually keeps you pretty busy too.
Yeah, and then we got the Fed today too, right? So a lot of
we do.
Yeah, I actually always forget about the Fed because I usually like to not do certain trades on Fed days, but I forget and do them anyway.
Mm-hmm.
And so, yeah, if you also want to stay away from Fed announcements, we've got a Fed talk, whatever they do. I don't really know, but I know it makes the markets a little weird. So
hard to stay away when markets are moving, 1% or more, and volatility is moving 2%. And you've even got, bonds moving nicely this morning. You finally got crypto red, Bitcoin up 300 and change, about 400 bucks. Green.
Not red.
I'm sorry, crypto going from red to green. I
Red to
apologize.
green, yeah.
I've been used to being down every day, so
Yes,
I
it has
apologize
been
for
a
that. Well, good job out of you, my friend. We'll let you get back to business. We'll bring in this next man. Oh, that's right. My man, Glenn. How are you, brother?
Good morning, sir.
Nick, pleasure to see you. I'm good. We just talked about how I'm in my athletic prime and don't expect to dwindle at any point in the near future.
Oh, just be careful.
I tweaked my knee standing. Just standing.
That's not supposed to happen until you're well into your 60s.
What the heck?
Yeah.
Yeah, that's not good.
I think we'll make it out. Luckily, basketball team's got a bye week this week, so we got time to recover. A little ice bath, maybe a little bit sauna.
Nice.
Next thing you'll know, you'll break an ankle going down a curb.
How dare you?
That's the progression.
How dare you wish that on me?
No. I'm just saying. That's what you have to look forward to. Probably not until you're well into your 60s or 70s.
Okay.
But that's the progression. You just tweak your knee when you're just standing there as a young man like yourself.
Yeah. No.
It's only tomorrow, doing something.
But I'm not climbing any fences or anything crazy like that.
Yeah, don't do that. Don't do that.
No, you're not climbing any fences, but you are trying to do things, getting back to Valentine's Day there. You were setting the groundwork for future success there. I don't know if you saw his Instagram there. He took a nice little picture.
You're an
posted
Instagram
it.
lurker.
Yeah.
You really
I'm a voyeur.
Yeah.
I'm a
And
voyeur.
you need to be careful on who, you can see who people are following. So you got a lot of.
He's going to block me now.
Yeah, you got a lot of things that are risque in your queue.
Yeah, I mean, they put it out there. Why not? I mean,
Yeah.
God giving me the eyes.
May God bless your Lenten sacrifice.
Yeah,
on Ash Wednesday.
Yeah, for sure.
Maybe you give up, some of your the people you're following.
Yeah. Why not? Why not?
That's
cleanse your eyes.
Yeah, he's not going to cleanse anything.
What do you got for us, my man? Give us something. Talk about some FX. Help me here.
Okay, I can do that. Midweek here, we're stacking kind of positive
Is it Jay
days for the
Powell
dollar.
thing? Is this a Super Bowl for you? Or
No, not Super Bowl. Just FOMC minutes today.
Yeah.
So pretty retroactive look at what the Fed discussed in January, but I think some added, gravity to the nuance of how this now lame duck kind of Fed is treating things.
Okay.
Parsing for any clues on, who's holding back, who might have a bigger role to play in the Fed in the months to come. Right now, it's looking like, if we were to have, from a data perspective, if we were to have a cut before June, that would be more worrisome than supportive. Contrary to
the Fed funds futures, like the Fed Watch tool, has June as kind of the spot. You've seen April get a little bit higher probability. It was like in the 20%-ish range at the moment. So it's been oscillating a little bit.
Yeah.
Tiny bit.
Yeah.
You're absolutely right. Market's pricing in 64 basis points of easing through 2027 for our own Chris Vecchio. And he takes that read as dovish heading into these meeting minutes. So we'll see if that is, if that base case is proven or disproven. But for now, we've got a tick up in yields and dollar bouncing. We were talking about it yesterday, how the correlation's been breaking down between, the most historically rate-sensitive currency pair, the U.S. dollar, Japanese yen, and the 10-year Treasury. That appears to be picking up because we have, the U.S. dollar up about 0.5% on the day against that Japanese yen, one of the big movers in the spot FX space, now back above 154. So if you're looking from a tape action perspective, looks like we consolidated right there around the lows and now are finally starting to get a bounce. So if you're trading the momentum there, you still got a bunch of room to run, really, around 300-400 pips to the upside to hit that top of the range. But other than that, still a pretty positive outlook for the Japanese yen from a fundamental perspective that caused that stark repricing last week. So we'll see where that settles. Other news, we got ECB President Lagarde to step down early. Her term ending, I believe, in 2027. But that would, some politics similar to kind of how the Fed has been interpreted as of late. We have her stepping down early with the perception of that would not allow a potential new ruling party in France at that time to play a part in electing the new ECB chair. All said, this move, in theory, is to protect ECB independence, which is always a good thing for central banks, as we've seen. Any sort of flaking confidence in the Fed's independence has really sent that U.S. dollar spiraling. So despite maybe this decision being positive in the long term, for this euro and the ECB, we got a slight jolt to the downside in euro dollar. So now sitting back closer to recent lows, still above 118 here.
Recent lows? What are you talking about? Recent as like the last week. Yeah,
I know. If you zoom in, I'm trading.
You guys trade like right now. You guys look at this and you say, okay, I'm going to trade this.
Okay, well, you look at yesterday. I mean, we were.
What have you done
yesterday?
For me lately?
That's.
Well, if you look at yesterday, when I was on at this time around 9.
Are you trying to point out that I took a day off yesterday? Is that what you're?
No, never, sir. When I was here yesterday.
Were you here early too? We were here early too yesterday.
No, it's been really hard to wake up.
You got everybody coffee?
Got locked out of my apartment.
Oh.
Yesterday
must not have been a good Valentine's Day if she locked you out of the apartment.
Why do you think I wasn't in my apartment? Where do you think I was?
Ooh.
How about that?
Interesting. Nice.
Play out with an A.
Very nice.
Nice.
Anyway, yesterday when I was here, we were pressing on those lows. Looked like 118 was in sight, and we got a pretty big bounce back against the dollar throughout the U.S. session. So right now it feels a bit like deja vu. Where we were yesterday. We'll see if we get an actual continuation here throughout the U.S. session, or we start to get. Yesterday we had some one of the Fed speakers, talking. A dovish tone interpreted. So that erased some of these dollar gains. But when you look at these other major currencies, it appears to be this week building on some slight dollar strength, successive days to start the week, which we haven't seen in a bit. Australian dollar tracking, the turnaround in U.S.
When
equities.
does that stop?
It's slowing. That's the best I can give you right now. And in terms of trending markets, one that's quite interesting to me is this U.S. dollar, Canadian dollar, which aside from, a pretty unchanged market on Friday, we're looking at 6 successive days to the upside in this pair, bouncing off of lows. So we'll see if this is a longer term trend. We've got recent highs throughout the beginning of January above 138. So still 200 pips to the upside there.
I need about 16 more days of that.
Okay.
That's all?
Yeah, it could happen. It could happen. I just added to it. So
Absolutely
I'm dollar cost averaging in my long dollar position.
Which is...
I like it.
That tells you how bad it is.
I like it. I like it a lot.
When you start small,
that's
you're
true.
able to do that without, the guys over there calling you up and freezing you out. Yeah. But that's what I'm looking at here today. We're targeting, the afternoon, those FOMC minutes for a little bit of volatility, but probably nothing that would change the long-term picture. Just some short-term scalping opportunities, perhaps in those pairs. Keeping an eye on the U.S. Treasuries and this dollar yen, see if that continues to play out how it has historically. And heading into, the rest of the week, we've got GDP and PCE numbers. Both
those are
Friday.
That's Super Bowl.
Those are spicier.
That's like first round of March Madness.
Yeah. ACC tournament.
March Madness. That's pretty good.
Yeah.
PCE, the Fed's preferred inflation gauge. Yes, last week got CPI.
They don't care about that one.
No, that's for the plebeians. Yeah.
Yeah, the plebes.
Good job. Good job out of you. Good job out of you. Good job out of even the S&P's up 58.
I just sold puts in PanW, and then I close out of my Netflix calls that I had against the long shares. I close out one of the MU butterflies, a big mega wide.
Almost $12.
Yeah.
I mean, it is a $30 wide butterfly, meaning it could go to $30 in 2 days, but you got the move you needed in MU. MU up $20.
Yes.
I mean,
oh man,
right in the middle of your.
I got one left, the 390, 420, 450, right at the money.
It was a good hold. We were talking about it as a $2-3 profit. Now you have $11 profit on it. It was a good hold. Yeah. Definitely a good hold. Even the S&P's up 60 at a new high, which I didn't think they were going to do.
Ooh. Getting close to our SPY.
Boom, and guess who's back? Back again. S&P.
It's amazing how the sentiment is going to change for everybody now that we've made these highs. I get a little bit more cautious, but good job out of you.
Yes.
Volatility 1975 in 47 cents. That's a 2 1/3% move. Markets up around 1%. NASDAQ is your leader. That's the good thing. Russell, your leader. Also, even the S&Ps and the Dow lagging bonds, since we have all those meetings or minutes, down 9 ticks. Bitcoin still green by 30 cents. Sell it while you can, not when you have to. We'll be back in 90 seconds. You listen to Tasty Live. Liz and Jenny next. Peace from the floor of the SIBO.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
And welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. The beautiful brunette to the left of me is Jenny Andrews. It's a wacky Wednesday in the SPX pit.
It is a wacky Wednesday. We've got we have a rally. We have a rally going on here. Spoos up 58.
58. Yeah.
Can I get? Oh. Spoos up 58. That we're kind of excited for a rally because my account is mostly bullish. Your account is mostly bullish.
You know who else is mostly bullish? The Bank of America study.
Tell me, Liz. Tell me about that Bank of America study.
I don't know. I thought you had some details. You were telling me that. That was a perfect segue.
Yeah. According to a Bank of America study, fund managers and investors are more bullish since they haven't been this bullish since 2021.
No, I'm not going to lie to you. Sometimes I'm bullish by chance, not by choice, and I feel like I'm there right now. I think we've sold down and the volatility has increased. So I've layered in some short puts. So my account is, I'm Bank of America.
Well, I'm a put seller. You know me, I'm always selling puts. I'm not a naked call seller. So
except in silver.
Except in silver. So because when you're a put seller, you just get long. You get long, right?
Yeah.
Or you don't mind being long. So I'll take it.
I mean, in the words of TP, puts are neutral too.
Puts are neutral too.
Especially out of the money puts. You can't say in the money puts. Out of the money puts are neutral too.
Yeah. So anyway, by chance or by choice, from puts or from stack, we're bullish. So I'm happy to see this rally today.
By chance or by choice, by puts or by stack. That seems like it should go on a t-shirt.
Maybe it'll make a clip. Maybe it'll make a reel. I don't know, Liz. But Spoos up 58. I hope it stays. Now we are getting the Fed minutes later today.
FOMC.
So
in honor of Chris Neely, we call it FOMC.
So the minutes are being released today. One? I don't know. I mean, one. I feel like it's always one.
If you gave me the minutes right now and I got to read them before everybody else, I don't even know what I would do with them.
Here's what I'm hopeful for. Let's go to the platform.
All right.
Are you ready?
I am. You
could go to whatever. I mean, go to ZN, go to ZB, go to the 10-year, go. We've got some minutes coming out, and what?
I went to ZB because you said I could go anywhere.
Yeah, go to the chart. And with ZB 117.25, I'm hoping that these pull back a little bit. Like I'm hoping to see bonds come down a little bit.
Bonds down, rates up.
Yeah.
You're looking
or
for
just go to the you could go to a yield, whatever you wanted to go to. Just go to like 10-year or something. Or you could go
10Y. Right?
Yeah, 10YY, sure. You could look at any of these, and you can see how much they've come down.
Yeah.
And I'd like these to pop up a little bit. This is all on the heels of my box trade yesterday, we
did have some questions about it in Twitter as well. So people had some questions.
Right. Like if you're just trying to make interest off of money, if you're trying to have money risk-free, just making interest off of it, I wouldn't mind seeing some of the yields pop up a little bit.
Yeah.
I don't know what's going to happen today, but the minutes are being released later. We did get questions on the box trade.
And Frank finally texted me. Frank, thank you very much. We're trying to get a line on his nephew's birthday because he refused to tell us. He called his sister and found out.
So we've been down here. We've been down here on the SIBO floor for almost 2 years.
Almost? Really?
Is it? It'll be 2 years this summer. I mean, we've been doing the show for 15 years, almost 16 years. But we've been on the SIBO floor. We were on the SIBO floor back in the 90s, 2000s, and then we came back 2 years ago.
Yeah, I can't believe how fast it's gone.
I know. So anyway, for 2 years, Jeff's floor official here. He walks around behind us, and Frank, the great who manages our YouTube chat, that's his nephew. It's his birthday. What day?
2/24.
Oh, it's coming up.
Yeah, it's coming up. Are we gonna be on the floor?
Is that this week? 2/20. Today's the 18th. Next week?
Next week.
Tuesday? Is it? Let's bring him a gift.
Yeah, we're
gonna bring him a gift.
We're gonna get him a T-shirt that says "bullish." Puts and calls and bullish, whatever you said.
I'm gonna have to go back and rewind the tape to remember what I said.
Yeah.
But we definitely should bring him a birthday gift.
2/24. We got it. We're gonna tell everyone.
Oh yeah, we're gonna tell the whole floor. Sometimes on a birthday, the floor will do something fun, like hang your picture everywhere. What are some fun birthday things that they've done on the floor?
Well, remember KGK, Kevin Kennedy, would always come over and shout, "It's your birthday! You're 55 years old! It only felt like 5 minutes underwater!"
He was a funny guy on the floor.
He was a funny guy. He's gone. I mean, he's alive, but he's just not here anymore.
So, was it ALO's birthday? We've had ALO on our show.
Oh, no, that wasn't his birthday. It's just because he came on our show, they were making fun of him. They posted our picture everywhere.
Yeah, so they took a picture of him on the show. They took some live footage, made it into a print, hung it all over the floor here. And
none of this stuff bothers us. Bring it on.
We like having him on, and he'll be on again, but he is out for now he's out for a little minor surgery.
Minor surgery. Yeah.
He'll be back soon.
Yeah.
And he should be back. I know
it'll be a while.
Well, okay, Liz's son had shoulder surgery. He had shoulder surgery. Your son had shoulder surgery. I was watching an interview last night with someone who said, I'm like a week out of shoulder surgery, and he was back on air doing an interview.
Oh, you can go on air doing an interview. You just can't put a shirt on. Like, somebody put a shirt on that person. So unless someone can dress him, he's coming in hot.
Okay.
That's the issue.
You can't lift your arm to put on a shirt.
Yes.
You could put on a vest.
Yes.
So he could come in a vest. He'll be back. He's on a little medical leave. He'll be back. So if you've missed our market makers, our number one guy is on medical leave.
I just want to know how tan he's gonna be when he gets back. I think he's gonna be pretty tan.
Oh, it's 60 and sunny. 100%.
There's for sure a tanning bed in his basement, just like Tony Batista.
I don't know. I'm not sure.
He's an old school trader like Tony Batista. Yes. Okay. But we digress.
Now, I mentioned to you that I'm doing a new. At the start of the year, I said, this is the SPX trade I'm going to do, and I'm going to do it every day. Now I've changed it. I'm doing something different.
Here, I'm going to go to SPX, and we have the Iron Condor, and then I'm going back to table. I'm going to positions.
Oh, and we have to give a huge shout out to Punish Pixels. Huge shout out to Punish Pixels. Yesterday we were on Last Call. You weren't watching because it was probably 3 a.m. near you.
Hold on, I'm going to go to Punish Pixels right here because you're talking about it. I wanted to. Yes, huge shout out.
Shout out to Punish Pixels. He's given us these ES trades that we've done now 3 or 4 times in a row. They've all come off for wins. Yesterday we took off your ES trade for a win again. And I feel bad we did it during Last Call because I know you were probably asleep during Last Call.
We hope you were asleep. If not, you're a total night owl because
let's see, if it's midnight now. Here. What time is it now? 10, 11, 12, 1, 2. So.
Before in the morning.
4 in the morning there.
I'm hoping you were asleep, Punish Pixels, but you never know. You might be a party animal. Now, but here, this is the 6E.
Punish Pixels, I guessed that you lived in Singapore. That was my guess. You could let us know if I'm right.
Yes, you can let us know.
Liz, what was your guess?
But we're 3 for 3. I don't know. I don't know anybody in that time zone.
I don't know. I thought it might have been Singapore. But we'll see. For some reason, that sticks in my head.
These are the spreads that we've been putting in with you. These have been great, and it's a 3-peat right now. It's a total 3-peat.
Yes.
Yep.
It could have been 4. There was one I think we didn't get on.
I did. I'm 4 for 4.
Right.
I haven't punched Pixels. Shame on me. You should slap my hand. I still have mine on.
So, this one.
Yes.
Well, hey. Booze Up 61 is looking better, but we didn't want to take that chance.
Yeah.
So, so thank you for sending that. Keep them coming. I saw Punish Pixels had a new tweet.
Yes.
And this is a different question. So morning ladies, the BAS discussed that it is not possible to hedge your account by more than 5% as you are paying for the hedge. Can you consider a back ratio as a hedge? So I hedge a lot of my positions. I hedge them differently, though.
Yeah.
Would I consider a back ratio hedge?
Well, back ratio or a ratio, like a zebra is a back ratio, so it's a reverse.
Yeah, here, pop into the
Do you see what I'm
platform.
saying? Like, so say, I'm just in here, so I'll just go stay with the ES. So say you're bullish and you go down here. A ratio spread is different than a back ratio spread. So if I was buying
maybe
one,
he means
selling
maybe he
two.
just a lot of people just mean a ratio spread.
Well, that's what I'm saying. A back ratio is reverse of this. It's selling one and buying two is a back ratio. A ratio spread is buying one, selling two. So I do consider this a hedge, but it's almost like what Tony from Mexico used to do, where you're hedging it with the same side.
So, and he said going about 3 months out. So let's just pull up what.
You've got it up? What he said?
No, but I'm just going to pull up. If he said 3 months out, go 90 days out. Just go, and if I'm looking for a hedge, if I would set up a ratio hedge, I'm going to start where we are. I'm trying to hedge my position. I'm going to start where we are. So buy one and sell two and put it on for even. You're getting your lower strike to the expected move and not paying for this. So this will give you a hedge from 69.50 down to 60. Where? How low?
6,100.
6,100. Well, it's not a hedge at 6,100.
No, but that's where it stops. That's when it picks up one for one, and then you're long again.
No, but you're going to stop here. Go where there's strike. 65.25 is where you're protected to. After 65.25, you start losing your profits, and then down at 6, that lower strike is where you start losing money. I don't really do these too much anymore because I had when did we have a big fall? I had too many of these. Never help, only hurt, and made me double long.
Yeah, but this isn't. They didn't. So he's saying ratio. You can hedge with lots of different things. So I'm just saying, like, say we're just hedging for a bullish portfolio. The other thing you can do is you can buy the put spread and then go out and sell something against it.
And that will give you some protection.
And this gives you protection as well. This gives you protection.
Yes.
And you're not doubling your size to the downside.
So that will give you some protection. A collar will give you some protection. But
I do kind of agree. What his question was, they say it's only hedging up to 5%.
I don't agree with 5%.
Well, no, I think you can hedge more than that, but I don't hedge all of it. I under hedge instead of over hedge. And a lot of times people, and this is an old school way of thinking here, is like you take your beta weighted portfolio. Like, so that's the old school way of thinking, is you take your beta weighted portfolio, then you go into SPY and you do some type of hedge in SPY because it's against the whole portfolio. I don't trade like that. If I have a position, if I want to protect a certain position or not a position, whether or not this is in the rule book, I don't know. But I'm looking at it like that's not how I trade. If I'm long Nvidia, I'm protecting my Nvidia, and maybe I'm hedging it by 50%. Like I'm saying, it's like even my DraftKings, when we had earnings, I protected 20% of it.
Oh, and that's a good point. Like, so in my DraftKings, and it could vary by position to position. So my DraftKings, I'm selling strangles against 20% of my DraftKings.
But not all
That's not a hedge. That's just trying to improve my basis. My Oklo, I have 100% of it protected. I have the whole thing protected because I don't trust that stock or like it's certain stocks I'll hedge all of it, maybe sometimes, but not all the time.
Yes, and that's what I was going to say. So it's kind of a personal question, and that's okay. I think that 5% is I think that's the textbook answer to my beta weighted delta is this. I'm going to go into SPY and use 5% of the delta. I think that's where they're getting that answer from.
And like you saw today, I don't know where they're getting that 5%.
That's what I'm saying. That makes more sense to me because you're not going to go into Oklo and be like, I'm going to hedge 5% of my Oklo stock. That's not going to happen.
No. So maybe they're getting it from your overall beta weighted delta. And if your overall beta weighted delta is 1,000, and you're going to try to cut it back. And I don't know 5%. I don't know where 5% is coming from. Like I could see trying to cut back half your deltas with selling calls against it.
Wait, but I'm telling you though, We were just talking about you. And I said you're not going to come back because it's hard to put a shirt on.
Okay. Now,
yes,
I know.
I said if you come back, you might be shirtless.
Okay.
I
might have to. I know. Doug doesn't have a mic. You don't have a mic, but so we won't.
That's probably better for you.
We won't keep you on long, but we were just telling our viewers because they miss you that you wouldn't be back for a while because Liz said you couldn't get a shirt on.
I said you can't put a shirt on. Someone dressed you this morning, didn't they?
I dressed myself.
Oh, you look great.
Yeah, it's pretty good. I actually got a T-shirt on too, which is really kind of interesting. But
ready yet.
Looking.
I was going to come down here shirtless. I didn't think it would go over well.
Well, looking good. We'll bring you on next week.
As soon as I recover, right?
Yeah.
As soon as I get my mind back into it. Thank you, guys.
And floor officials, do not fine him. He is absolved from wearing a jacket.
I already have one. Yeah, they came up to me and they told me that I don't have to.
Oh, you don't have to. Thank God. All right.
Well, one-armed anyway.
Yeah.
Anyway,
we'll fight for you.
Looking good. Glad you survived the surgery. He made it. He's back. He's back. Now we have our market maker back.
Now we have our favorite market maker back.
By the way, these guys are awesome. I hope you could hear me. These guys are awesome. They do a great job.
Oh, thanks, Doug.
And here's your $10.
Oh, funny.
I mean, my reaction when he was walking this way, I was like, oh!
I didn't know who she saw. I was like, there must be a sometimes you might get a rare celebrity sighting on the trading floor.
Oh, gosh, yeah.
And so the way your face looked, I thought, I have no idea who's here.
I've been told this before. My reactions are a little bit, so Dan's like, I don't know if you won the lottery or somebody's robbing our house. I can't tell.
No, I feel like we butchered the whole hedging.
No, because the answer, his question was about Tony Batista, and I can 100% say that it's probably from, if you're taking your whole beta-weighted portfolio, they're saying just do a little bit. If not, if you're gonna take your beta-weighted portfolio, then just close some positions.
Okay, so here's something, and I'm not gonna say this is silly, but go to the platform.
Okay.
Go to the platform and go to SPX.
Okay.
And go to 45 days or whatever. I don't care. 57 days. That's fine. And sell the 35 delta call.
God. I mean, you have to do a spread because it's SPX.
Yeah, right. 35 delta call and make it $20 wide.
90-10.
Okay, so here you're getting $860 in credit, and the delta is only a -2. So
that's what they're saying. So that's why they're getting the 5%.
Yeah,
is that you have to take it with a grain of salt if you're taking your whole portfolio and hedging it.
So if you've got hundreds and hundreds of long bullish delta, and you're going to go sell this call spread for an extra $860.
But say I've got 100 delta, and I want, or you know what I mean. So I'm trying to get 2% of it.
If you only have 100 delta, you could lose more on this position than you're going to make on your delta.
Correct. So if I have 100 delta, this would be a 1 lot.
And you're only going to get
that's what I'm saying. We can put that to bed, but that's why you can reach out to them. I'm going to guess that's where they got the answer from, because it's not hedging.
This is never gonna. This is not. To
we
me,
don't trade like this.
This is, you're getting a little bit of extra credit that'll help you on a down move, but it's not a hedge like a collar or selling, buying a put spread and selling a call to pay for it. Or we have met someone who they do. And I kind of like this too. They do the
spread and
the call ratio. They do a call ratio spread.
Yes.
And take in a credit and use some of that credit to buy a put or put spread.
Yes.
So there's lots of ways you can hedge your whole portfolio if you want to.
But hold on, here's the deal. Punish Pixels, you're clear of the concept. Punish Pixels is pretty good, right? So now, just because we're in here, I'm going to go to Ash Finn. Just put on this trade just now, an hour ago. So he's selling puts in SoFi, which, let's go to SoFi. I think we did it
I think we have SoFi puts. Yes, we do.
So what do we think of it?
Love it. I have to be very careful. I can't say I love it. We don't love anything.
That's why I just gave a thumbs up. We've got it.
Every trade has risk. These puts we sold in SoFi have risk. The risk is getting long 100 shares of SoFi at our put strike minus our credit.
He just asked our opinion.
I'm just trying to cover myself. Again, never want to.
Oh, this is the one thing I wanted to get to this too, Jordan. The question about the box. What's the gotcha since there's no free lunch? I assume it's the opportunity cost of having your capital tied up. Yes.
Yes. Now, okay. Question. Here's another question. So the box we showed yesterday used like $30,000 or $40,000. $300 box, $30,000, $400 box, $40,000, and you're making the interest off of it. So there's not risk on that box. You're getting just paid the interest on it. The money is being tied up in that box. But in portfolio margin, if you have that box, then can you use that money?
Yes.
But then it's kind of like, okay, if you've got that money tied up in a box and you're getting interest on that box, if you're using that money, you're paying interest on that money you're using.
Correct.
So it's like,
if you have extra money in your account, it makes sense to do that because you're getting the interest rates for it, but there are other vehicles for it.
You don't want to.
It's a tool that traders use. I think it's a tool that older traders have used. There are so many other vehicles that are out there now that are doing it for you, that hold up that much capital as well. But it was just an old trader trick.
Well,
and we hear it quoted all the time. Like this morning we were down and I was like the March box, the 6-7. No, they drop all the handles. But the 6-7 box, I don't even know what that means. It was just traded. Like it's still done.
Probably like the 60.
Yeah. I mean, they dropped the handles, but it was just 6-7 box.
Maybe they just do that on purpose. The 6-7 box. Anyway, I wouldn't be using money into boxes if you need that money to trade. It's just something to do with money that you don't want to trade. And when my in-laws said, "Can you trade my money?" I said, "Well, I'll throw it all into a box."
Correct.
I don't want to trade it.
No, but the good news is that the one thing here's the gimme. You're holding up that capital, but you do have the opportunity, especially when you are on portfolio margin, that if you need to buy something, you can. It's there. It's there. It's there. You just don't want to get into the pickle where you're paying more interest than you're collecting.
Right. If you've got that money in the box and you're in portfolio margin and silver hits 100 and you're like, oh my gosh, I want to sell the. I'm in. You've got it.
Yeah, you've got it. It's there. That's
funny.
That's where it is.
Okay. All right. We actually have a lot to do when it's already 10:20.
Okay, next.
I started by saying I've got my new SPX trade.
Oh.
Which Liz and I both did it this morning. And it's nothing new. It's nothing new, but it's nothing new, but I'm just changing what I'm doing.
Because I want to see what we would get now. I mean,
SPOOs are up 55 now.
No, the delta. I mean, the delta. Would it be the same if you did the delta? Because the SPOOs are up 55, but we were at the expected move for the cycle. And no, I was in a little bit because I got 270.
It's further, and we did this at 9 o'clock, right around 9 o'clock. But it's my new management, and I want Jacob to study this. So my new thought, we always talk about how many wins do you need to make up a loss, right? How many wins do you need to make up a loss? So my new daily strategy is $10 wide SPX put spread for 250. For 250, and we were far, and you saw it this morning at 9 o'clock. We were far.
No, I know, but the deltas might have been the same. That's what I wanted to see. Was it a 30 delta?
I wouldn't be doing it now, but we had a lot of room. We had a lot of room to the downside to be wrong, and since we're always worried about how many wins do we need to make up a loss, sell it for 250, let it go for full profit, and the only time I close it is if it gets down into the middle of the spread and I close it for $5. So almost like a $5 stop loss. So the loss on one, a win on one would equal a loss on one.
Now, like I said, the gimme or the gotcha to this is if it plummets. Like if you get a move, they go, beat it, nerd. If you get
what did he say?
It's one of my favorite lines from Trading Floor. Beat it, nerd. But if it goes from like right here, so 6,900 to 5,800 in a swift move,
then you could be out the full amount. But if it's like a slow move down and gets into the middle of the spread, which again, early on, 845, 859, you've got room. Yeah. If the market goes down and gets in the middle of the spread, close that spread for a 250 loss. So if I collect 250 on a $10 wide and most of the time let it go to full win, and if I close the loss for a 250 loss, one win makes up one loss.
Yeah, but anybody that sold puts today in any form.
Today, it doesn't matter.
Yeah.
But the whole thought is I can make up one loss and one win.
Yeah, by management. But it's so funny because you can do this you can do it to the call side if you want to too. You can do whatever you want.
You can do whatever you want. But so I've changed my new yearly put spread, take it off for 35% to this instead.
Yeah, I like it. Okay, so that's good. Let's move forward. I want to make sure because we have lots of earnings today too, so I'm actually going to go to Bob's list if that's okay.
Sure.
Because he's right about Punch Pixels.
Oh, okay, good.
So here we go. Carvana. Whoa. Okay, Carvana, CDE, PAAS, DoorDash, Figma, eBay, Walmart, John Deere, Lemonade, and Wayfair. So it's a lot.
There's a lot on there. But when I look at that list, I think in my mind, and you've seen us struggle with some of these earnings, in my mind,
I want to look at Walmart.
Walmart is sky high.
I know, Walmart's sky high. So is Caterpillar. Walmart is
So
up.
What are you going to do in Walmart? How good do their earnings have to be to keep their rally going?
I don't know. Walmart is now becoming a tech company.
So that's why I don't want to. It's weird to say I'm afraid of Walmart earnings, but almost.
It's only $127 stock. It's got a 50 rank. It's not that bad.
I'm waiting till after earnings for Walmart. I mean, I'll be watching it, but I'm not going to. I'm not playing Walmart for earnings.
Take a look at this. It's $1.50, and we've got the
the calendar.
For the calendar, it's $1.50, and look, I went all the way out to March.
How cheap would it be if you didn't go to March?
Let me take this one highlighted, and I will take it down. The problem is, I think that
just make this super cheap.
$1.25, 88 cents, 47 cents.
Yeah, just do this. Then
I kind of liked having a farther out option, but yeah, I mean,
because why risk $1.50 if Walmart goes down $10 on earnings?
Because you have the option for 30 days. And it was right there.
Yeah, but if it goes down $10, we can go buy that 130 call in the 30 days for
cheaper. Sure,
let's
ship it, so we're in. I just want to be in on something. I like having things in so we can keep an eye on it.
I don't mind a calendar is something we do on earnings when we don't want the risk of.
But I liked it, and it's a little bit of an upside. I think Walmart could actually have decent earnings, and it's a little bit higher than where it's trading right now. Okay, what else do we want to do from that earnings trade? We can come back if you need to too.
No, go. You can look at some things. I'm going to push out your trade.
The one trade, Walmart. Now we were talking when we were on with Jamal, Caterpillar's through the roof, but John Deere is not. I mean, I know they're different companies, but Caterpillar is $768.
I know.
So my dad is rolling in his grave because he had so much Caterpillar, and I sold it out immediately. I think I sold it for $70.
Did you?
My brother still got it though.
He did?
Mm-hmm.
Your brother kept it?
Mm-hmm. Yeah.
Well,
Brian's a real good trader, Jenny. I'm just saying. Well, I'm just saying. I put Caterpillar and Deere in the same comment. Caterpillar does not have earnings.
Right.
John Deere does. It's up, but not nearly up as much as.
Did you see App 11? How much App 11's up today?
What's it up today? But John Deere does have earnings. It's too expensive for my blood.
So for me, again, people know me. I've been on the show for 15 years. I like trading stocks that are beaten down, not at the sky high top of their range.
Yeah, that's why I closed John Deere.
So I have a hard time coming up with earnings trades with stocks that have gone up so much. What am I going to do? But App 11 up $25 today.
So we are still. Wanted to take a look at ours. We're down $110. We sold the $125 put in December on earnings.
And that you could see then the fall it had on earnings. On earnings, it was down $100, I think.
Yeah, it was.
So
it went from 466
down to 360, I think.
Yeah, to 360, 370.
So at least it's making a little bit of a comeback. I wonder how long it'll take to get out of that December put.
I think it's going to be with us for a little bit. With a $100 down move, it's going to be with us. We're not out that much. We're out $100.
Right. Okay. I do have things to look at.
Okay. Talk to me.
One thing that I think, my favorite thing on our list of topics today is looking at SMH and IGV, because
one is semiconductors. What is
semiconductors and software.
Okay.
So if you pull up SMH, which is the semiconductors.
How I feel about SMH.
Tell me how you feel about SMH.
It doesn't freaking move. Remember, every time
look at the chart. Look at the chart.
Yeah, look at the chart. But then you sell something in it, and you.
You wait for the premium to come in.
You wait for 100 years
for the premium to come in.
I
do agree that SMH keeps its premium, but we're not going to sell premium. So SMH semiconductor ETF has gone
straight up.
And if you look at IGV software, let's type it in slow so everyone can read it. IGV tech software ETF looks the opposite, straight down.
Yeah. So are you thinking pairs trade between these?
Buy IGV, sell SMH.
Okay, let's take a look at this. IGV is $82. SMH is what? We're going to go back and then put in traders. And
SMH is $400, so it has gone straight up for years because we started selling jade lizards and SMH when it was $100.
Yeah, we did.
So it was $100 and we were selling jade lizards and SMH. Now it's $400.
But you would put a jade lizard on an SMH and it would creep up. You'd have to hold it until the bitter end in order to
get your money back.
Yeah.
So we're not going to sell premium, but we are going to sell SMH, buy IGV. What do you think?
Good. I'm going into the pairs trader. So we have to do some math. Bust out your calculator. So I'm going to sell SMH. Wait, I'm going to buy IGV.
Buy IGV
and sell SMH.
And because one's 400
and one's 82.
Wait. IGV, click the quantity. Change it to 5.
Why is that doing that?
I know. That's why we got to fix it. Will it change it? It's got gold up there still. Hit IGV and then enter again. See, it's still showing gold because that's what we were in.
There you go. It's $82.
There we go.
So this should be a 5 lot by 1, right?
So we're just trying to do notional value to notional value. So I'll get my calculator out.
So it's 416 divided by 82-ish. I dropped the change. Everybody understands it's a rounding error.
Yeah, right.
So 416.
I mean, if you put in 5 of those, IGV 82.27 times 5 is $411 and one. It's very close.
Okay, so we've got 5 by 1. So we're buying 5 IGV, selling 1 SMH. Let's take a look at it.
And take a look at the chart. So what we're this chart is an extreme.
I'm gonna
what
expand
we're
this chart,
thinking, yeah. What we're
I thought it would get really big.
what we're playing for is IGV, or for this chart to move up. We're saying this chart's in an extreme. We think it's going to go up, and that's why we're buying 5 IGV, selling 1 SMH. And if this chart continues to go down, this trade will lose. It needs to come back in line a little bit.
This should use, what, about $400? Let me see. Yeah, $414 because you take 50% of each.
It's not bad.
It's not bad. Let's send this. We'll keep an eye on it, okay?
Yeah. Now, we're baby small. This account is for demonstrational purposes only, but that would be the ratio, 5 to 1.
That's pretty good. Sending it.
Yeah.
So the order is placed. We'll see. No, it will be filled as a pair. I'm going to get out of this. IGV, SMH, they're working.
And working as a pair. You might have to adjust.
Oh, we're filled.
Oh, okay, great. I'm gonna get that. I'm gonna get that pushed out on the follow page.
That's fine. Can I go back to Twitter while you're pushing?
Can you
that
adjust? Because so far that's all we've gotten filled on. Can you adjust the calendar, the Walmart calendar, and then I'll get everything pushed out?
I would love to adjust this because 50 cents is nothing. I'm gonna pay 53 for it. So that's the Walmart calendar.
Okay, good. We're filled on that.
And then I remember off the top of my head it was PAAS too, which is Pan American Silver Corporation, 82 rank. I thought it was. I mean, we always say it's the Easter egg company. 82 rank. I want to see if this has gone straight up too. So look at this. This has gone meteoric with the silver ride. It used to be a $20 product no less than a few months ago, and now it's 58. Let's actually, while we're doing this, I want to see where silver is right now.
Silver's up today.
Silver's up 6.5% today.
It's up a lot.
But look at this, Jenny. It's been chopping in this range.
Okay, so yesterday we took off our deep in the money put, which I wish we would have left it another day because we would have been up $400 in that instead of $100.
But we didn't sell a call.
But we didn't sell a call, so that's the silver lining. So today,
the silver lining, but
Oh, funny. So with that short put in silver, do you want to add a call? Can we go to
I just want to see something real quick with silver. So we got yesterday, we got 370.
370. We wanted to get about $5. So what if we just get $1.30 on a call, and then we have $5 that we're working with in March?
So you can go all the way up. I'm in the same cycle, which we're in the March. I want to make sure we're in the March 30th.
Yeah, just go to the 90. Get $1.20 on the 90.
Sure, it's look at this. When you type that in, we have the corresponding put or the put already in there, so it holds up 0 buying power, and it's reducing our cost basis by 120.
Yeah.
So would you ever want to? And I think I know the answer. I'd like to stay in the cycle, but would you ever want to just go near term with the call?
You're not. You're going to get. It's going to be super close.
It's so funny because you were selling these 100 calls for like $5, and now they're $60.
$3. They were always $3. 100 calls, $3.
60 cents.
I know. But 59 rank, 90 call. Then we have collected a total of $5 on our silver strangle.
Yes. So we're in.
Okay. There have been a lot of tweets coming in, and some good ones from some of our favorites. And everyone's our favorite, but
go top down.
Yeah.
Okay, hold on. 6-7 just makes me think of the old
96er.
That's so funny.
Liz, please explain the reference to our pop culture illiterate Jenny. Mikey.
Do you know this?
Is this from Uncle Buck?
No, this is from The Great Outdoors.
Honestly, I don't think I've ever seen it.
You never saw The Great Outdoors?
No.
Did you ever see the John Candy movie, I Like Me?
No.
Oh my God, it's so good. I love John Candy. Hey, and they sell down.
Try to see what's trading.
I love John Candy. I love The Great Outdoors, and the movie I Like Me is really good too. This is the old 96er. He's got to eat the entire thing, and he does. And then they're like even the gristle, and then he's got to eat the gristle part of it.
So we can go get this at Jack Gibbons. Have you ever been to Jack Gibbons Gardens?
Have I been to Jack Gibbons Gardens? In my mom's house, we found gift certificates that were no less than 60 years old, and Jack Gibbons Gardens honored them.
Oh, that's right.
Yes.
That's right. So Jack Gibbons Gardens, south side of Chicago, but classic old supper club, I guess.
Oh, yeah, supper
But
club.
I'm pretty sure you could get this. My in-laws took us.
You wanted to get fancy in the 70s.
This is where you would go. So my in-laws recently, they got like a surprise inheritance that came from good old uncle, I don't know, some old relative in California who owned like 4 properties.
Wow.
Yeah. So they took us all to Jack Gibbons Gardens.
You can still smell the smoke in there. It kind of reminds me of Hackney's. Because in the 70s, you used to be able to smoke at Jack Gibbons Gardens, and it still smells like smoke.
You think so?
Oh, God, yeah.
I just went there.
It smells like smoke. You probably still smell like smoke from eating that restaurant.
No, but my father-in-law got a plate, and it looked like this.
The old 96er.
The old 96er.
It's pretty funny. Okay. Frank, this must come from Twitter, right?
Yeah, from one of our YouTube. No, from one of our YouTube.
Oh, YouTube. Okay,
Yeah.
sorry. So he's got the 405-380 put spread in app 11
Okay.
for Feb 20. I can roll now for a small credit. Would you get more time if you had this position? Ooh, 380, 405 put spread. Let's take a look.
Let's see.
What cycle were they in?
They're Feb 20.
So Feb, ooh.
Oh, would I get more duration?
Yeah.
Oh, but I don't know. I mean, this is 2 days.
This is nothing we say is the trade recommendation. This is a choose your own adventure.
Yeah,
this is a choose your own adventure. There is no rule book here because you've waited this long.
So we do not make trade recommendations, but I'm going to tell you.
If
this is, I want to know if this was yours, what would you do?
So here's the deal. If this was mine and I've waited this long, I'm holding on for dear life.
If this is mine, I'm waiting till Friday, and I'm hoping to get the hell out of this trade.
Yes, but because I've waited this long, and if I've waited this long, there's a reason I've waited this long.
I know, but this is one where
this is a choose your own adventure because this could go either way. Otherwise, it's going to be a full loss. If it drops down, it could be a full loss.
And honestly, this spread is wide. 405, 380. You probably collected a decent amount. So
what I would do in this
if
is
I would scratch
the heck out of it.
If I could scratch this trade, I'd scratch it.
For sure.
So if I'm close to a scratch, I'd scratch it.
Yeah, for sure.
So would I roll this? No, I'm either closing it for a small loss or a scratch, or
I don't want duration.
I don't.
But this is a personal. These are personal comments. I don't want duration in this.
But then I'm just starting over again. So then, I would close this and take a small loss or a scratch. That's what I would do. Or wait till Friday and see, and go out to March. If I'm going out to March, I'm not going to put these strikes on.
No.
You have to. If you didn't have this trade, would you go to March and put on the 405, 380? No.
Yeah.
So if I go to March.
Do you want me to go to March?
Yes.
Is that what you're trying to say? Go to March?
Yeah.
You wouldn't put on the 405.
No, I'd probably go to the 360.
I mean, so that's just it. Is you can't put it in as a roll.
I wouldn't even go to the 380. I'd go lower. Give yourself a better, a fighting chance.
You're just taking in a large credit.
No, but his first one wasn't that wide. It was only $25 wide.
I know, but that's what I'm saying. You're taking in
You're making it 100 points wide.
It's $10. I was thinking it was $5.
Yeah. This is getting nuts. Just.
I was thinking it was $5. Here, you're still taking in a small credit. And you can take these and shift it down. So hold on.
I wouldn't even look at it as a roll. I wouldn't even put it in as a roll or look at it as a roll.
Look at this. That's what they were saying that they did with the credits. Look at how far down you can still get credits. I've got it $20 wide, right? No, I have $30
No,
wide.
you have $30 wide. You're just.
But look at how far down you can take it. I'm still getting a credit. No, this can't be right.
No, you've got his 2-day, you're selling it.
That's the problem. You're still taking a credit?
I wouldn't even, sometimes it's better just not look at it like a roll.
No, and that's what they said. So, but this is a choose your own adventure. It's going to expire in 2 days no matter what happens. Go back. You want to share with the class?
Oh, yeah, you can go to Twitter.
Oh, wait, Mikey. Happy Hump Day, ladies. I have a free butterfly in ES.
Nice. Good luck, Mikey.
I like it. Oh, hold on.
Oh, and then top down, he did. Good luck, Mikey. And he put in one more tweet. Should this be our day of pairs trading?
Sure. What do you got in a pairs trade?
We got,
what else you got?
So TP sends us some info, and he did send us that EEM is outperforming triple Qs by a very wide margin.
This was Patty Handy yesterday when she was asking about triple Qs.
Well, Patty Handy wanted to get bullish triple Qs. Hopefully she did. I know we did. We weren't complaining about the triple Qs.
It's expensive.
But it was the $600, poor man's covered call was too expensive for us.
So wait, EEM is outperforming triple Qs. So EEM is the emerging markets. Triple Qs is the tech
NASDAQ,
ETF. Yes, NASDAQ ETF. And look at this. NASDAQ's been choppy, in my opinion, when I look at this. And then let's take a look at EEM.
Which I haven't really looked at the emerging markets lately. I don't know that I would do a pairs trade, EEM triple Qs.
I don't think it's a pairs trade. I think it's just good to look at.
Right. I think what I would look at here is maybe a reverse big lizard in EEM, reverse jade lizard, some type of trade in EEM where our risk is to the upside, not to the downside.
So you think EEM is going to fall?
Well, no, I'm just saying, like, it's at an extreme. Maybe we look at a reverse jade lizard. How far could we get?
I just want to look. I mean, this is a 20-year chart, so bear with me for a second. I just want to see, has it been up that high? Where is it, $60? So we've been there, and it fell from there around in 2021.
Mm-hmm. Yeah. So
this is the second reference to 2021 today.
2021.
So yeah, I just wanted to look. It's been in the 50s. It fell from there in 2021. It's never been, just like I said, just give me a second.
Liz is just going to...
Okay, yeah, it's
down,
never...
taking a walk down memory lane.
In 20 years, it was there once. Okay.
So when you look at that, though, it does make me think, like, emerging markets hasn't really grown. Yeah,
No.
it hasn't really gone anywhere.
That was kind of my point. I was like, and it fell from here at a different juncture.
So when I see the run up that it's had, I thought, well, maybe a reverse jade lizard where we have the naked call and a put spread.
So you can sell it's kind of hard.
Yeah, there's not a lot of premium in here.
But this is
let's do a reverse big lizard.
You can go farther on time. A reverse big lizard is selling me at the monies, and I'm going to go where there's the most premium, which is right here.
Mm-hmm.
And then a reverse big lizard.
250 wide.
Buying, go here.
That's just $1.50 wide. Go $2 wide. There's $2 wide. Go 250 wide. Can you get two?
I don't.
No,
think
you're not going to cover it.
You can only go $2 wide. That's not bad. It brings your break even up to.
Oh, I think when you see those numbers and they're so cheap, like you could buy the 65.
So here's what I would do.
You buy the 66. Take a look at that. If you buy the 66.
Jenny, is this
217?
Have we found something that doesn't have call skew?
There wouldn't be call skew here. This is just going to trade like the SPY.
EEM? I know, but that's what I'm saying. Like this, usually everything we've been opening up lately, it's like, look at the call skew here, look at the call skew here, look at the call skew here. Except for ETFs.
This is an ETF.
So, because this is typically what you see. Reverse big lizards are easy to put in because when you come up this high, you can see they're cheap.
If we're getting 218 and we have a $2 wide put spread, if you buy that 66, now we're still getting over $2. If you go to this trade is only using $248. If you go to the analysis page, basically we make money if it just stays around here, which we saw in the chart. EEM
has kind of stayed. Well, it's drifted up.
Yeah.
But you only have $248 in risk to the upside.
Not
and
bad.
It's only 30 days. This isn't a 45-day, a 50-day, 60-day.
If we did April, we could get it probably wider.
Here, I like this. I actually like this, but let's price out April real quick, okay? Just for fun, for funsies. So we're going to go to March. I can't believe we're in April already.
I know.
So I'm going to go with the same concept.
See if you could do $3 wide.
So that'd be
58 and a half.
3. I'm going to take it in.
So since we're going out 58 days and it's only getting a half point better, it's not worth the 58 days.
That's what I'm saying. When you price it out, I prefer the narrower days because at the end of the day, this is butterfly-esque, right? It is.
Right. And so they come in at the end.
Yes. So let's go with the nearer term one. We'll go 30 days in EEM, and I'm going to sell the 61 and a half straddle, and then I'm going to go down $2, 61 and a half, 60 and a half, 59. So there's $2 right there. So I have 217, which is a wonderful number.
But we're going to give up that 17 cents and buy the 66 call.
Yeah.
Okay.
So we're risking 248 on this, and we have the profit of $200.
Love it.
Not bad.
All right,
and take a look at how tight all these markets are. We've been coming to a problem where we're opening up things and they're so wide. If you look down here, if you can see, they can see my mouse, I think, right? It's 194 at 209. Those are tight markets on four different
And honestly, like EEM, I feel like EEM comes in and out of favor. Like there's been a time where EEM markets were wide and we weren't trading it much, or there was no premium there and we weren't trading it much. But with EEM up to $60, there's a little more premium to work with.
Agreed.
So, all right, ship that. Pop back into Twitter.
So I just want to say, because this is EEM versus triple Qs. So if you look at EEM, we're up 1%. And what is Qs up today? 1%, 130.
Yeah,
up a little bit more. Okay.
But just like longer term, EM is up much more than Nasdaq.
For sure. Okay.
So it's just something TP pointed out. We didn't put in a pair trade there, but it just made me think of. Let's take a look at EM.
Okay, I'm in Twitter, and I love it, Mikey.
All right. So here, Ajit coming in with an earnings trade in
Carvana.
Carvana.
For Josh.
Yes.
Josh, the Carvana denier.
So Carvana's $360.
So this is
expiration 320.
A call ratio spread. Wait, I'm gonna show more. Hold on.
So you can see where the stock is trading and where his break even is. He's giving himself a lot of room to the upside.
I want to see what the strikes are. Here we go. It's the 320. It's the expiration 320. It's the 424.40 1/2 call ratio.
I mean, he's collecting a lot of premium. Let's pop in.
Okay, so let's pop in 324.40.
Carvana. Do you remember his strikes were? No, I've got it.
424.40.
Okay, so buy one 420. 420.
You're selling this?
No, 420, 440.
420. I was thinking 400, 440. Wow.
No,
okay,
buy one 420 call, sell two 440 calls, and no, then I got it wrong.
Yeah, I think I had it right. It's the 420, 440.
But he must be doing it different. He's doing one 420. Is he selling one 420? Oh, you're in Feb. He's in March. He's in March 20th.
There we go.
Yeah, March 20th. So buy one 420, sell two 440s.
There's your 9.
And he's getting almost $9, so $900. Break even here is $470. Carvana's trading $360. I do like it.
I don't mind it. Now
there's risk.
I mean, Ajit's clear of the concept, so we're not telling Ajit anything he doesn't need to know.
Yeah.
There is risk. There's always risk in every trade, and I love when you just give that disclaimer. You're like, there's risk. There's risk in everything.
There's risk in every trade.
But
except, can you say
like
there's not risk in the box?
No, there's always a risk in the box. There's always a risk.
What's the risk?
I don't know, but all I know is you can't say things are risk-free. Right? Didn't we get corrected on that?
So
we got cut off a show one time because I said, you can't lose.
Oh, yeah. Liz said you can't lose. Cut. She's out of here.
Got the hook. But you can't. But I was like, as I'm getting taken off the stage, but you
can't. And then she was
lose.
trying to explain to them, and no, really, in this position, you can't lose. Lady, you're off the air.
Yep. Okay, so that's all I know is what we can do.
This one you can lose. The risk is 100 points higher. So your risk is around 470. Carvana's trading 360. But this trade goes out till March, so there's 30 days.
Well, and I want to show something. This is not for Ajit because he's very clear of the concept. There is no gaming of the system. When you have this, you have the 424.40 ratio spread, and you're collecting this. I'm playing for the credit. I would be sweating bullets if it comes out and you're getting close to the 440 level to try to get the maximum profit of $2,800 because it's a tight range. And watch this. So your break even is, this
460, 470.
You could just sell the 470 for a little bit less if you're just playing for the credit to the downside.
Now,
that's what I'm saying with the ratio spreads. I like ratio spreads. I love them, but I want them to be a little bit wider where it wouldn't be sweating bullets if it was getting up there.
But I guess, so you're saying if it got up there, you're sweating?
Yeah.
Yeah.
So you mind if I'm playing for the credit, sometimes I'm looking for just the single option.
But
that's
you can't do a spread
opinion.
here. Let's say I did the 460, 470 spread. I'm only going to get $1.50.
No, you don't have to do the spread. I'm saying you can just sell the 470. If you have a naked option,
right,
you can just sell the 470 option for $8.
Sure. But the ratio spread is almost a mental game where if it goes against you and is going up there, instead of every day saying like, oh my gosh, I can't believe I sold that call, you're saying, oh, wonderful, I might have a chance at making more.
Which is why I like them nearer term than in like.
But 30 days is not.
If this was the 2-day one and you were getting this much, I was like, where do we sign and how much capital do I need?
But you weren't getting anything in the 2-day.
That's why I was like, when you move it out, it changes the trade for me a little
bit.
But
Ajit, I don't mind it if you know what you're getting, Ajit. Ajit gets one of these every week. He is getting the certified badass option
three.
trader because this trade carries a lot of risk, and I'm too chicken to put it on. But Ajit, you are big by big. Big by big.
Okay.
All right. In Twitter, below Ajit, Punish Pixels.
Back to Twitter? Do you want me to, or are you going to read it? Okay.
Yeah. Punish Pixels came in below Ajit. I think you got to go arrow back.
Okay.
And he let us know.
Singapore!
He is from Singapore. I thought he told us that one time.
See David Poon. Are you our midnight put seller?
So, yes, I'm based in Singapore. I'm off to bed after your show. 1 a.m. is the latest. Thanks.
Oh, we get to tuck you in every night.
Did you already close the ES trade? Yes, we closed it yesterday during last call. I didn't see it pushed out on the follow page.
I was running yesterday. Did you not push it out?
Didn't I run it?
I ran last call.
Then I forgot to push it out.
We could do that now, though. We'll push it through. We did it yesterday. The Punish Pixels, I'm still in it. Like, I'm still in mine because I'm a glutton for punishment and I want more.
Well, you're not. We had a $230 profit or risk the market being down today and losing that. And honestly, Liz, if I were you, I might close it before the FOMC minutes come out because this market could turn around. You don't know.
I know.
Like SPOOs are up 55, but they might not be up 55 at the end of the day.
And we got a reprieve on the last one because Punish Pixels, we came in after one day and it was up $100 and we're like, ooh, look at how much more money we can make.
I know.
And it wound up being a loss, and then we got a little bit of a reprieve there.
All right, so we had one more piece of news. One more piece of news.
Hit me. I'll jump in the
So NVIDIA up, Meta down on Meta agreeing to deploy millions of NVIDIA processors in the next few years. Now, I don't think Meta is still down.
So NVIDIA is up. So, but let's take a look, because these things have not been, look at this. You're looking at Caterpillar and EEM and all these things that are, playing that game, the cliffhanger game. Yeah, and Walmart, the cliffhanger game. And the big stocks have just been chopping.
Yeah.
So, look at this. NVIDIA, and when I look, there's my technical analysis, Jenny. It's been within, 160, 170, and 190 for a long time.
I know. What do we have in NVIDIA? We have something.
We have something in NVIDIA.
We have, I think, it was there. I saw it.
Oh, here
it's
it
there. And there we go.
Okay, so.
a calendar. Oh, let's take that off.
Yeah.
We made $78 on a trade that we risked $290, paid $290 for this calendar, and I believe this was from a viewer.
I believe it was.
And most of our trades are from viewers.
So we're closing this. Thank you very much. We'll take our win and run like a thief in the night. NVIDIA's pretty liquid. So
there was something else I wanted to close too. Our Amazon. I think we have Amazon. So to make 25% on a calendar is great.
Yeah, that's amazing.
And while we're closing trades, go to Amazon.
Amazon.
I think we just have a put spread, but we're almost at 50%.
Yeah, I agree.
With 30 days to go, and
so we have the
190,
185 put spread with 30. We have 44%. We didn't have a GTC in for this.
No, take.
You know what we should do tomorrow? Maybe put in GTCs for everything.
What day is tomorrow? Thursday.
Thursday.
Sure. We've got. I'll put time. I'll put that in the schedule.
Put that in the schedule because I'm not here on Friday, and sometimes it's hard to close things with TP.
If anyone has any questions for TP, he's going to be on Friday.
Yeah, he will be on Friday. So.
He's going to be on Friday. We'll take live tweets. Mm-hmm. We'll take live tweets. Include the hashtag LIZJNY.
Sometimes, because sometimes you don't get to him with TP.
Yeah, I love having TP on. He'll be on Friday.
A wealth of
Liz is going to visit her kids at school.
UK.
And
I'm going to visit one kid.
I say kids as if they're both there already.
They will both be there soon. Okay, so EEM is still working. It's the only thing that we're working. Is there anything else we wanted to close?
Well, we were looking at NVIDIA and Meta.
Okay, I know. I just wanted to see real quick if there's anything else. Okay, because we only have a minute. So NVIDIA, we closed our thing. Now let's take a look at Meta. So Meta was down, you said, and it's down. Meta is down. NVIDIA up, Meta down.
And it's down very little. Very
little. Red. But it's red.
All right, so.
And we've been kind of stuck here. Look at this. SPOOs, I think we've been here. Entire show we've been here.
SPOOs at 55 when we we walked in.
Let's see what the VIX is doing. We can go back to Meta. Hold on. VIX.
I'm just getting everything pushed
VIX
out to the follow page.
1886.
Down $1.40.
1886.
How do you think this market's going to move when the minutes are released later?
I think it's going to be a non-event.
Non-event?
I think it's a non-event. I have no idea, but I do think it's going to be a non-event. But we were talking about this yesterday, and we were talking about this with our crew here. So the VIX turned red yesterday during our show. And what we had talked about with the crew was I was like, when the VIX turns down, I think we'll be up a little bit on the end of the day. And that's where we wound up being, just up slightly on the end of the day yesterday when we were doing last call.
Did we do any other trades during last call? Because I forgot to push them out. I'm looking. So ES. No, that's it. Just ES. Just closing the ES.
Okay. No,
I'll put it to the
IBIT. I think we did something in IBIT maybe.
No.
Okay, just ES. Perfect.
No, because the trade before ES was selling the call spread in 6A in the Aussie dollar.
Oh, that was here.
Yeah, that was here.
Perfect. Okay, so what do you think? Because we have about a minute left.
We have 2 minutes.
So VIX is 8, it's just under 19, which I think is still kind of high, but it's just under 19.
It was 23 2 days ago.
I know.
So the fact that it touched...
And this morning, look at this. Wait, is it this morning?
Yesterday.
The high, I can't, oh my God, that read 2034 is the high. 2034.
And it got up to 23, what day was it? The 17th?
23...
Tuesday.
2296.
Right.
Yeah, that's 23.
So, 1897, that's low.
It is.
Well, I'm curious to see. Yesterday, Liz was looking at a trade at the end of the day. Go to SPX and take a look at it. I'm very curious to see how tight this trade will be today with VIX in the 18 handle compared to the 20 handle.
So I loved it at the end of the day. Now, great. So keep in mind, I was just trying to get, and I did, I just went to the expected
This was in the last 10 minutes. This was at 250. At 250.
No, I put it on before our show.
Oh, okay.
So 226.
But we were looking at it. We looked at it when our show started, so 230, 230 something, and you were getting about
$1.80 is what I got for it right before the show.
And then during our show it was $1.60. But it was pretty tight.
And then you just watch it. You watch the entire thing because keep in mind, okay, when you're selling this at the end of the day, it has to run into a wall, which means
it was much narrower.
It was much narrower. I was $25 wide.
Oh, between the two short strikes.
Between the two short strikes. Mm-hmm. It's $25 wide. And so here, this is $35 wide. So it's not that crazy. But for 30 minutes, what I got to watch, and I think it's kind of fun to see, is all the premium gets sucked out of it.
Right.
Like, I mean, even with a minute left to go, it was still worth 40 cents.
Was it really?
Yes.
Because you don't know if there's going to be sometimes at the end of the day, sometimes we will see a quick move in the SPOOs, up or down in the last seconds.
With a minute left, it was still worth 40 cents. And I was like, okay, whatever. Like, I'm just going to leave this thing. But yeah, so this is something that I've been doing. But I had said today that I'm only going to do this trade at the end of the day if VIX is over 19, and it is.
Well, or if you can just eyeball it and see, am I getting far enough? Am I getting my shorts far enough?
Well, and it was Ajit who says he's doing the iron fly at the end of the day.
But I kind of like it, not even the last half an hour, like the last 10 minutes, the last 5 minutes, if you can get anything.
Yeah, for sure. All right, so we are out of time for today, Jenny. Fastest hour of the day, done and dusted.
Fastest hour of the day, quick 2 days down here. It's a short week because we were off on Monday, so this week is flying.
I know, and I'm off on Friday. I'm a 3-day-a-week worker.
Everybody out there, have a wonderful day. Good luck with any earnings trades. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny Show. We'll be back here next Tuesday, but we will be in our home studios tomorrow.
We'll be on tomorrow, and I'll have TP on Friday, and then I'll be back on Monday. Bye. Bye, everybody.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal and also Glenn Freiberger. It is Glenn's day.
It is indeed.
FX markets are moving a little bit.
Constantly.
Yeah. I actually
won't stop.
Yeah, I have a green position.
Hello, let's get rid of that.
What's that? I mean, oh, man.
Let's get rid of that.
It's been quite some time. But yeah, E-minis NASDAQ ripping higher. E-minis up 50, NASDAQ up 300 and change, Dow up 250, the Russell up 25, all up close to a percentage point. The Dow is the laggard of the four, but Bitcoin and ETH flat on the day. You're seeing crude oil have a nice little jump, up 3.5%. Natty gas down 1%. Gold and silver moving in the other direction today. We've got gold up 2%, silver up almost 6%. Continues to be very volatile. And then this morning you had a nice little pop in corn, soybeans, and wheat. Soybeans looks like pretty flat right now. Actually, it is exactly flat. So a lot of mixed bag movements here in this here market. We did have a couple of earnings yesterday. We did have, I think, SanDisk and then PanW, if I'm not mistaken. PanW moving to the downside, 5 almost 6%, and SanDisk up 4%. So what's going on, boys? You got any trade ideas? Anything that's moving your personal market?
Do I wish I had SanDisk? Yes.
Yeah.
Other than that, hard to think about. On my radar, Walmart tomorrow. My mom's got a lot of that. She always asks me about Walmart stock. Yeah.
What's the thesis?
It was my grandfather's thesis that she inherited, and it's been pretty good for not having made a decision. Well done, mother.
Yeah. Sometimes that's the way it goes. Yeah, I have a lot of friends that have parents that were like, yeah, I was just investing in QQQ for the last 20 years. I was like, explains a lot.
Nice.
Wow, those commercials are real. Like the people who invest in QQQ and all that. Those are real commercials.
Oh, yeah. I have an uncle who lives out in LA. Does the same thing.
I bet he does.
QQQ, man. Yeah. That's all. He's talking more and more. He talks more and more like the Big Lebowski every day. He's like,
and you always. It's always funny though, because you're like, how does this person have $10 million? It's because they invested in QQQ over the last 30 years and did nothing else.
So annoying.
And just like don't spend money. I mean, that's the other thing, right?
That's the one that's really tough. It kind of helps. It turns out.
Yeah,
QQQ money. You have more
buying
money.
Coffees,
15 years ago, QQQ was trading at 40. Now it's at 600. Wow. So
that's more.
There you have it. That is more. That is
pretty crazy when you think about it.
I'm no math guy, but that is more.
Yeah. And it's funny because it's always like the compound interest. Like if you assume 8%, blah, 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 but that's a lot more than 8%.
Yeah, no, that's a good base case.
I was trading so heavy then. If you told me to buy QQQ and just hold it out, I'd been like, shut the hell up. Like, why would I do that? Seriously, is what I would have said.
Yeah.
It's crazy.
Yeah.
You see the interesting, I mean, much more of a theoretical conversation, but like, it's just as hard. Like, what would you point to now? The same thing? Like, you have no idea. The one thing that I can think of is, like, the crazy out of the box assumption is like, does another country catch up or something like that? Like, investing in the US over the past 30 years has been the right decision. Is that heyday over? You look elsewhere, or no reason to.
Yeah. Well, what if I told you to buy IWM stock? It's only $265 compared to the other ones. What about that? See, look at the look on your face. You're like, that's exactly the look I would have had on my face if you told me to buy the Qs.
Well, tech is always where I would go. If I were to pick one, it's going to be tech.
Sure.
Just because tech is always advancing. And really, I think it's more of an inflation story than anything else. If you look at, I shouldn't say over the last 15 years, but over the last 30, 40 years, it's the same thing we talked about before. When I was your age, an ice cream cone was 25 cents, Yeah. Inflation will continue to inflate asset prices and reduce the value of current cash. So you got to have it invested somewhere. Take risks.
One thing I can say about today is that we once again have bounced off of 6,800. Woohoo! It seems to be the same old story. 6,800 seems to be a area where the market likes to bounce off of. We'll see if we make it up to 7,000. We do got these minutes, in the next 2 hours or something like that. FOMC meeting minutes. We'll see if the market fades, even though it just faded a little bit some, and then it just bounced back, clearly back up to highs. But once again, we fade. And the VIX future did expire. We didn't We didn't burn up in a ball of fire after that expiration of the G contract. It happens sometimes. So now we're back to contango. It's like it never happened. It's like we never had this backwardation in this fearful market. We just bounced right off of it.
Yeah. Almost a point of backwardation now between the H, the J, the K, and the M contract. And that's what you should expect into a vol crush reversal rally here, as we've seen time and time and time again. Even just this year, we've had 1, 2. This is our third instance of big sell-off completely reversed the next day or the next couple days. So the buyers are out there. It's just a matter of what's going to take us above 7K and beyond.
Well, the weird thing, and Glenn, maybe you can chime in on this part, is yesterday. And this is the weird part about the markets, like how you think and this is what I always talk about when people always ask me, like, oh, you're a scientist, and like I came from being a scientist and engineer. That was the play on the idea of the engineering the trade show, was that there's all these scientists who think like the market is a problem you can solve, and that is completely not true. And I bring that up because once upon a time when the dollar was down, the markets would go up. Yesterday we had the dollar go up, and then it faded throughout the day, but the markets still remain lower. Today we got the dollar up and the markets are up. I mean, I don't know. Make it make sense. Explain it to me, Glenn. I don't get it.
You're absolutely right. And yeah, the more you think about it, the more you bang your head against the wall, the more it becomes clear that, you can map out all the factors behind an asset class, something like a US dollar. You can know they're all there, but day in, day out, which one, dictates the move, takes over the narrative of the day, can be different every day. And is not as easy to see. So you're absolutely right. Yesterday, dollars on solid footing, looked like that historic correlation was back on the table. And then we had a Fed speaker that traders took seriously enough to take all of those gains out of the U.S. dollar. And now here we are, right back at those levels with a boost in Treasury yields. And a little bit of tailwind effect there for the U.S. dollar ahead of these FOMC minutes. So you're absolutely right. It's when you think about it, it shouldn't be an easy thing to try and speculate on a whole nation's currency value as it pertains to the relative value of other currencies. Shouldn't be an easy task. Yet sometimes it feels like you can latch thinking on pretty clearly to a correlation between this and some other asset, but got to stay agile. And that's why I think, FX traders, currency traders in particular, just like options traders, have to keep a pretty short-term time horizon if they want to trade actively, because so many new things can come out. And positioning can change very quickly, where unless you're building a long-term position, it's much more advantageous to come into new markets, new behavior flat and ready to act than holding on to a position where you're thinking a week ago, a month ago. You're trading a whole new range now, and while that might play out, just matching your psychology with the time horizons, I think is super important to sustainability in trading these currency pairs, because you're right, they can whipsaw around, they can take substantial legs lower off a variety of news or lack thereof. But yeah, we've got a pretty interesting day today. You see that the rate storyline taking hold and playing out in this U.S. dollar Japanese yen, primarily up. What are we up close to 1% in that market, back over 154 for the first time in just a few days. But after that huge drop of around 3% in this market last week, the rate correlation starting to pick back up in this market. Other economic event news taking shape in the U.S. dollar landscape is the Reserve Bank of New Zealand had an interest rate decision last night And if you go to the watch list, you'll see that among the popular US dollar pairs, the mover of the day, down over a whole percent, is this New Zealand dollar US dollar pair, coming off of highs. But this is interesting because we spoke about the relationship between the Australian dollar and the New Zealand dollar. The Australian dollar being pretty supported from a fundamental perspective, and although the cross currency pair of Australian dollar versus New Zealand dollar was at recent highs, now we see that there was still, even with that exchange rate at highs, there was still some preconceived notion of a tailwind effect bolstering this New Zealand dollar market, because we had the Reserve Bank of Australia hike interest rates, first major central bank that was cutting to do so, to hike once again. And the expectation was, New Zealand might follow along pretty shortly thereafter. And while what was priced in was no rate hike or cut for this meeting last night, the interpretation was way less hawkish than markets expected, and the New Zealand dollar sank off of that. So that's been the mover of the day from a percentage basis, from a per pip basis, that dollar yen. But here, it looks like, a lot of chop if you think the risk sentiment is still pretty positive, perhaps a new entry point in for that New Zealand dollar on a resumption of the trend, or even just filling the recent range. We've taken a big leg higher, but you could look at this from a flat perspective or a trend perspective, seeing, two cases for this New Zealand dollar to resume its rally. But then again, it had a heck of a January. And so if we see it take out the February lows right under, 59.50, then we could see some further downside in this pair. But for now, US dollar on some stronger footing than we've seen as of late. We'll see if FOMC meeting minutes have anything to do with it. I would expect, not a ton of information to come out that markets could latch onto. I think in this case, no news is really no news, as boring as that sounds. From a currency perspective, I don't think there's a ton of volatility baked into this announcement. So unless there is something very dovish or hawkish in these minutes, I wouldn't expect a ton of volatility. But that being said, definitely staying flat into an event like that can allow you to capitalize on some more volatility, or have the potential opportunity to do so.
Yeah, I think when you look at, we always do this as well, like when you look at a day in SPX where there is a binary event, you can measure what the market is projecting for that event. And as it stands right now, we've got almost 2 hours until the minutes come out. And we've got a 15-point implied move in SPX, which is nothing. So market is telling us, the equity market is telling us we shouldn't expect too much volatility. However, you could see movement in some of these currencies. So I think it's interesting to think about it this way. Like, if there was a larger SPX implied move for the information coming out, I would expect that to maybe translate more towards the currency market too. Maybe that's when if you want to take a stance and you see a big swing, or set up for a nice swing where you have a much smaller stop loss and a much larger profit taking. But in a situation where the markets aren't really projected to move at all, I would rather stay flat and wait for a surprise, if there is a surprise, and then you can take the other side if you don't agree with it.
Yeah, and I think that's a great call out and an opportunity to kind of look perhaps a little bit more technically at some of these fear, greed areas. What's interesting, looking at that euro dollar, if you tighten it up to an hourly chart, We're sitting right at lows we pressed yesterday morning pre-market. So right now I'm interested is even if we don't have, a ton of news or something that causes a ton of volatility, if it's, anything positive for the US dollar, perhaps we get through and flush our way all the way through 118 in the short term. Otherwise, we're looking for perhaps another bounce here off of these just tested lows. Yesterday, we had a little bit of a catalyst with that Fed speaker erasing those dollar gains, but around these psychologically round numbers, like a 118, we do tend to see some congestion. So that's interesting to me as well. But you're right. If you stay flat and this starts to move in the euro's favor, then maybe you have a healthy enough pip range if you think it's going to fill it of around almost 50 pips, which is a pretty good for one day out of this euro dollar. So hoping for some afternoon action in these currency markets.
Yeah, we do have some implied movement. I should say a decent amount of implied movement for the next couple of days, though. Tomorrow.
That's exactly what I'm looking at.
Yeah, we got some jobs.
I could be convinced to do a super bear. I'm thinking about it.
Ruh-roh.
I mean, because I got so many bullish positions partially.
Yeah.
I could just see this whole thing fading through the rest of the week. You know what I mean?
Yeah. You know what?
And I mean, Mikey, tomorrow is Thursday.
True. Which means if you go back to the activity, you click similar order on the butterfly we closed, you flip it and reverse it. Oh no. Why is this? Oh, okay. Interesting. Huh. Yeah, I think it's time to get back into the downside butterfly that we got into last week. And I'll just do the exact same trade. So this one we bought for 610. It was the 100-point wide butterfly, the 6,600, 6,700, 6,800 in March, wrapped around the risk of my iron condor. That's at 6,700. Closed out of that on the 17th for $160 profit. And now if we look at the same trade, it's trading at 550. So it's cheaper than it was before because we've rallied so much. The vol has come out of this. If we're playing for a downside hedge, this is a great environment to throw that on into a 60-point rally in the E-minis and a big vol crush. So 555.
Is this smash? Is this accounting for? Oh, okay. Oh, you're way out there. I thought you were looking at the.
Yeah, he went to March.
This week.
Yeah, 29 day. You could do the near term.
I did near term. I'm actually being aggressive, and I'm going with the super bear. So I sold, and it literally just posted, but I sold the 69.50, 69.60 call spread to buy the 68.75, 66. Sorry, 68.75, 68.65 put spread.
Love it.
And is this AM settlement or we have a couple economic events on Friday. We got GDP and PCE coming in. Will you be able to manage this on Friday?
I always go with weeklies with the settlement for the end of the day. I always do.
Smart.
Yeah, PM settlement is much cleaner.
Yep.
It settles to the closing print of SPX, where the AM settlement settles to the set price. And the set price can be very different than the previous close.
I've gotten by that before.
Yeah.
So important to call out.
Because of that, the premium doesn't completely come out of this trade. So if you went with the AM settlement, you would still see implied volatility at 3:00 on the 20th.
100%.
The 19th, because on the 20th the profit or loss is dependent on the set price. So it's a variable that is out of your control. So if you're trying to keep everything in control, just go to the weekly. Any of these expirations that have an orange notation next to it are all PM settled in SPX.
What is just curious, are there any actual use cases for retail traders where you would favor that AM? or not really?
For AM settlement? I mean, I don't, not really. Yeah. I mean, you could, you could say that, not really, no. Okay. The answer is, in
that's
my opinion,
that's what I figured,
no.
but you guys always craft some tricky little plays.
It's like Mikey said, it's all about control. If you really want control, then the PM settle is better, because especially the way our markets work. I mean, there's so many different things. The morning can be one thing versus you can have 2 different trading days in one sometimes. So for retail, I would say there's not, unless I'm wrong, there's not really any real use cases for doing AM settlement on any options trade.
Yeah, unless the only use case is if you have an iron condor and you're playing for not only, or a strangle, and you're playing for neutral movement up until that date, and then you're also playing for the set price to be within your range.
Right, but still an added risk that you can't manage.
Right, exactly.
Unless you're...
It still settles to cash regardless, but... Yep. Yeah, we've done studies before on SPX settlement. So if you go to tastylive.com and you search for SPX settlement, you'll see market measures on doing iron condors or strangles around the settlement price. But again, it's really a binary trade, like a true binary trade, because you have no control over what the set price is and you have no management. It's just like a one and done. There you go. Yeah. Do a little dice roll. Throw that into the dance catalog.
Oh, it's there.
But yeah, I like this trade. Nice and high probability. Selling this call spread to buy the put spread. Basically shifting your credit spread profit potential to your downside long put spread profit potential, which is why the credit is lower, but still routed for a credit nonetheless. And we've done these trades a lot. I have a couple of longer term ones to the upside, selling a put spread to buy a call spread. But yeah. Lots to take away from that. But yeah, this 60-point rally is a really nice entry point for that butterfly again. And if we look at all of my things that I have now, you can see I've got a bunch of iron condors. I actually have a Super Bowl up here, right here, the 70-50, 70-55. And then I have this short call spread. That's the iron condor. Short put spread. That's part of this, which is why you see 1-3-1, because I'm doubling up on the short option. That's part of my iron condor risk. So
seeing a lot of green.
Yeah. We've done okay in this little SPX trade, but you should see Nick. So sometimes Nick will throw on these broken wing butterflies as the markets move. Like today, he would throw a call broken wing butterfly on. Mm-hmm. If the market sells off, you remove the risk.
Yep.
And then eventually you're left with like 15 different butterflies with no risk, and it's just mountainous.
Just a forest of profit potential.
Correct. But yeah, love to see the dollar. I would love to see the dollar rally here.
Yeah, no, it's definitely got room to run. But yeah, looking a little bit more supported here.
And yeah, going back to this chart, if we actually do end up dropping below this level, hopefully we see a nice little liquidation all the way back down to this range. But
yeah, definitely gets
good for the dollar.
Yeah, I would definitely keep profit targets, stop losses, relatively tight in terms of just expectations. Even if we do flush out 118, these markets have been pretty tight, especially this euro dollar. We're seeing a little bit more elasticity back in this dollar yen. And even the Swiss franc, to your credit, starting to build a little bit stronger than the euro dollar. So this one's still quite historically cheap. Yeah, man, you really pinned the top there.
That was really
nice
fun.
Work.
It's been one of the most fun trades I've ever had.
Hey, but the funds keep going up, right?
Look at that. But yeah, I mean, in theory, if I believe that the bottom is in and we'll just chop from here, I could throw on another tranche and dollar cost average this down to like here. But I'm also petrified, so I don't think I'm going to do that.
Fair enough.
Yeah.
DCA.
My favorite. Do you have any non-USD spicy pairs?
Here we go.
Let's look at the Australian dollar, New Zealand dollar right there, up 0.72% today. But where are we? Let's go to the what do you call it? Yeah, daily.
Oh.
Yeah, so we're, right at those highs, hit intraday at the start of the week. This gets interesting. I think if you if we get past this, this previous high, maybe this continues to run away. Otherwise, if you're bold, you can start to take a contrarian position. Maybe it would favor, expecting to dollar cost average into it rather than taking a full position size right at the top before it reverses, right? But it's just one of those things where if you're not actively monitoring this one as much, and these markets trade 24 hours a day, you could miss theoretically a pretty big correction in in the overnight trading sessions, which would merit getting in sooner than later. But this one's been interesting to me. Also, let's go back to the watch list.
Wait, why has that one been interesting to you?
Just because of the expectation we had of the New Zealand dollar to kind of catch up to the Australian dollar. And that really hasn't happened yet. And this last central bank meeting showed little promise in that area. So from a pure, market contrarian, it still looks like an enticing extreme, but I can't say that I've done enough fundamental research on New Zealand's prospects to have a ton of conviction there.
Gotcha.
The other point, if you're fundamentally stronger on, or a bull of the yen, you've got a good down day for it against other currencies. I mean, that pound yen up 0.5%, and we could just as easily see this be that one's still pretty much in a congestion area, whereas it looks like the U.S. dollar, Japanese yen has now taken a slight leg higher, whereas this pound yen's been a bit choppier. So, but yeah, you've done well there today. Back in the green. You taking it off?
Back in the green, baby. $7.
Oh yeah.
Love to see it. Don't worry about all this other red.
No, I can't even see it.
Ignore that. Yeah.
This is what we're talking about.
What's interesting about your where you're at for euro dollar? Euro dollar, your opening price is around 117. If you were to double this one, then that puts your average cost back into that range that we might expect if we shake out through 118.
Did you see that quick math he just did there, Mikey? Did he just talk you into sizing up your position?
I was going to say.
Is that what I just heard?
I don't talk anyone into
that. That was smooth as hell, wasn't it? Oh.
No, Glenn knows that I'm ready and willing to smash the.
That is usually I don't even finish my sentence and you're in.
I was like, so while you started your sentence, I've already tripled down on this.
Dude, I felt like a car salesman entered the room. It's like, what's really interesting is that your average price there is a little low. Might want to get that thing. Thing up.
More salvageable than we were looking at your U.S. dollar Swiss franc, which still, if everything went in your favor, would be a multi-week move.
Mm-hmm.
Here, at least, if you're looking to start trimming exposure and still want things, of course, to close green.
Of course.
You're within, hypothetically within days reach here of getting even or even better. But yeah, that's what I'm looking at this week. We've got, the event risk on Friday. So after this afternoon, wouldn't expect a ton out of Thursday. But then again, we've had some volatility back in these dollar pairs to start the year, which is great to see, as opposed to the grinding dollar bearishness of last year with only a few instances of huge moves. Few of them. in the dollar's favor. So a lot better environment for an active trader here to start 2026. So it's been fun.
Yeah, it's been wild and crazy. But yeah, I'm very much positioned for some dollar strength if we can get it. But looking at DXY, I'm not that upset at this recovery here. If we just zoom out all the way, we can see we've had that big bottoming out here below 96, recovered, and now we're trying to make trudges higher here. So if this continues, we'll be A-okay. My dollar pairs against other currencies, as long as the other currencies behave.
Yeah, I mean, it's funny. It's such a tough chart to look at because the bottoms look reassuring, right? In terms of just from looking at tape action, it looks reassuring and building a solid base. Whereas if you continue to look at the outsized moves, the dollar getting hit has been, to a much greater magnitude than any single day dollar recoveries, which I suppose is a testament to, risk sentiment still being pretty firm, U.S. equities not falling off a cliff. But it just seems like it can't buy the dollar can't buy an outsized today. And they've been coming for it on more than one occasion. So we'll see.
It's just wild that the dollar's making this move today and gold and silver are actually moving up too. It's just it's really wild to see that. It's really wild to see the market up as big as it is with the dollar. It's interesting that clearly something has fundamentally changed overall in our market, and the sentiment around the dollar, the sentiment around rates. It's kind of wild.
Much more global, I think. Yeah. Across the board, across asset classes.
And I think that's something to be said about correlation. Correlation exists, but correlation is never perfect. Even a strong correlation of 0.8, let's say, tells you 80% of the time these markets should be moving in the same direction, but that tells you, well, that 20% of the time they will not be. So you're going to have these days, you're going to have many of these days within a year where nothing makes sense. Everything's moving in directions that you shouldn't expect. But that also brings opportunity, especially if you're pairs trading or looking for those divergences from traditional relationships. It gives you the ability to get into those type of opportunities. So we'll see what happens, but I've effectively doubled down on my euro dollar position, and we're just long the dollar. This is the most patriotic position I could be in, right? Yes, as your Navy family would attest to.
Thank you for your service.
Yes,
Michael.
Cool. Well, we will let you head out.
Sweet.
Get some lunch, get some protein.
Smell the tacos in here.
Yeah, you can actually a little bit.
This was like a noise canceling room, but
well, air. See.
All right.
Thank you, Glenn.
Guys.
If you want to follow Glenn on Twitter, you certainly can do that. He's at Glenn Freibarger. You can also follow Tasty FX as well. Do them a solid.
Please.
Yeah.
Please.
E-minis up 55, NASDAQ up 300, Bitcoin flat, ETH flat. Like Jamal had said, though, big moves in gold and silver. Silver up 6%, gold up 2%. Have you done anything to these positions we've got in silver or gold?
I have not.
Yeah.
Haven't there. The only other thing I've done today, besides the SPX trade I just put on, was I had a short put in shop. Close that out. That's pretty much it. No real, outside of the move in SPX and the major indices, like no, I don't know, no new like volatility that got, obviously with a day like today. So just kind of trying to take the opportunity to clean up a few things, I guess, and obviously put a little downside on that one trade in the SPX.
Yeah. Yeah, I like the downside trade. I just threw on the hedge. If you missed it, someone in the YouTube chat asking about the hedge. It's just a 100-point wide butterfly. It's worked out nicely for us. We've been I'm pretty sure we've been perfect on those in terms of closing them for profit into big sell-offs. But it's a $500 debit. It's 100 points wide, so your max profit's $9,500 if you're paying $500. And we haven't held them to expiration, but we're really just playing for when you get these big moves in SPX to the upside. Your $500 doesn't really change. Maybe it goes down to $450 or $4, but then you get a couple of days of selling, and all of a sudden that butterfly goes from $3-4 to $6-7 in a day. So it's always a nice hedge, just a way to just get out of that position when there's big market sell-offs. You can wrap it around where your other risk is. So like in my position, if we look at SPX, I've got an iron condor short put spread risk right at the middle of the butterfly, which is where the max profit is. So I've effectively eliminated my short put spread risk in that sense, because even if I held this and we're in the money at 66.90, that butterfly is going to be in the perfect sweet spot. So I don't really have downside risk as long as I have this butterfly on now. But again, if we sell off and I can close that for $200, I already did that a couple of days ago. So you can leg in and leg out and just chip away at your cost basis that way. And if you think about it that way, I can remove or eliminate half or more of my risk in the put spread if I'm being nimble with that butterfly.
Absolutely.
So yeah, I'm going to pop over to the YouTube chat now. If you want to join us there, we're streaming live. Just head over to Tasty Live's channel. You'll see this video front and center. I've got the referral program pinned to the top of the YouTube chat. If you bring in a friend, you both get $100 if they deposit $2K into a new account. You can scan that QR code for more information. And that also gives you instructions on how to find your referral code in the Tasty Trade platform. I'm
actually going to join you in that butterfly as well.
Yeah.
Why not?
$5.
Could use a little more downside. $5.
Why not?
Yep.
Do you think your annual strategy in MES can be implemented in a portfolio margin account with $150K in ES? So really the key to this strategy is that you can withstand any and all variance. I don't know when the next time we're going to have a 30% sell-off in the E-minis, but it's going to happen. So you have to be able to withstand that. And we had this, we've seen this time and time again where people are, throwing these trades on, they work perfectly, but they have too much size on. And then when you get that big tariff liquidation event like we had in April of last year, now you're scrambling just to cover your buying power requirements. So the whole key in this trade is to be stress-free. So with that said, E-minis have 350K in max loss. If you have a 150K account and this is your only position is selling one strangle in E-minis, you do have flexibility to hedge it if you do get that sell-off, but you're at a 50% drawdown means account goes to zero ultimately. So you'd have to be much more nimble with hedging because you get a lot more leverage with a portfolio margin account. I'd almost rather see XSP in a 150K account and you could do it twice. So same thing here, like XSP, you still get nice tax treatment from the 1256 contract standpoint if you're making money on this, but 67K, you could do this twice. Your notional risk is 130K, your account size is 150. It's basically, it's definitely cash secured and you'll still get buying power relief here. So that would be my take is you just have a lot less stress if you get a big market sell-off and you're close to cash secured versus being more levered. So it's up to you at the end of the day. IWM 6,000 in 10 years.
Why? Oh,
maybe.
If I'm talking about IWM, yeah, right.
Maybe.
Yeah, who knows?
Yeah, what is this 20-year return? Yeah, it's not nearly as good as the E-minis or NASDAQ. But the NASDAQ has gone through a lot of transformation. And I don't really see, tech is always going to lead us to the next thing, right? Tech is the forefront of our evolution of society. So tech is where
I have like a quarter of my 401k in like small caps.
Yeah. There's something to be said about small caps, especially after market sell-offs. They tend to perform really well. You can see this here, like COVID dropped to 60 or 80, got up to 220 shortly after. Tariff stuff got down to 150-ish. Now we're up to 260. So they can perform well and do perform well after big sell-offs. So I don't hate that rotation.
Agreed.
Bought 3 losers this morning. Meta, Microsoft, and Oracle doing good so far. Microsoft trying to catch a bid here. Yeah, Microsoft has had a tough time recently, but I guess if you're getting bullish now, this is nice to see that we've hit this 400 mark and we've kind of bounced off it a couple times versus, this period of time where we weren't able to find a bottom at all. So hopefully this is telling and we rally from here. That would benefit us. But yeah, Oracle and Meta, yeah, similar stories across the board.
Yeah, I don't know what to think. I mean, I don't know if this is just slow down time for them and we're going to see just more growth from, WDC and SanDisk and Seagate, CX. I don't know.
Yeah. The story's not
Amazon
over.
Trade working, huh? How about that?
Yeah, we got someone looking at Amazon. Amazon debit call spread 200, 225 in April, 58 days to go. Yeah, I think it's a good risk reward here. Short option right at the expected move. So if you get that upside expected move rally, you can make $1,400 at expiration. Just be mindful that this is a 25 point wide spread. So if we get a rally in Amazon up to 225 and there's still 30 days left on this spread, it's not going to be trading for $2,500. It's going to be trading for, let's say, $1,300.
Exactly.
You're still going to have, and we can exemplify this here. If we look at a 25 point wide spread here, the 180, 205, trading for 18. So actually, it's trading for more than half the width, likely because IV is so low. 34% is pretty low. So there's not as much extrinsic value preventing you from realizing max profit. So just be careful with that. Like, you shouldn't be expecting max profit if you get this big rally. It'll still hold on to extrinsic value and it won't go to max profit until literal expiration week, or closer to expiration, I should say. Unless it keeps ripping and goes in the money, then it'll trade for intrinsic value. What else we got in this YouTube chat here?
Oil on a straight moonshot right about now, up 4%. Look at that.
Wow. Wow. Yeah, big intraday move there. To start at any particular point in time? Not really.
Yeah. No.
Steady move higher.
All-day program.
Mm-hmm. Yeah, this is a pretty big green bar here, but we've seen some pretty big realized moves every single day for the past 2 weeks, as you can see by this super volatile chunk here. But yeah, doing exactly what we needed to do. Stay in this range. 58 and 68 are our short options for this CL Iron Condor 1 point wide defined risk wings. So I like to see this chop. But yeah, looking to close this for like $200 if we can get a little sell off from here. Should come in nicely. But yeah, we've only been in it for 15 days.
Oil has had a 9-day average true range of 3%. So I mean, this thing has been moving. Yeah, but like you said, I feel perfectly positioned with the condor we have.
Yeah, just chopping around. Let's see. What do we got? Some people talking about alien disclosure on Polymarket.
Alien disclosure.
A lot of alien talk in this chat. I love it.
Really?
Yeah. It's more, for me, it's less about do aliens exist? It's more of prove to me that they don't. Because I think they do.
You think they do?
Yeah, tinfoil hat. It makes all the sense in the world. Like, if space is as big as it is, and we're finding X, Y, and Z planets that exhibit similar things to us, like by the law of large numbers, there must be other life forms in the universe. They might not be walking around, and they might not look like they do in Hollywood, of course. But
yeah,
are there other life forms that exist in the universe? Yeah, there has to be.
My only thing is, if aliens exist, why do I have to pay taxes? That's the only thing I can't reconcile. I mean,
that is true.
Seriously, like if you know,
they need to update the phrase, death, taxes, and what's the other thing? The three things that are guaranteed in life: death, taxes, and maybe it's just two: death, taxes, and aliens. We'll update it to that.
Something else. Forgot. Death, taxes, and cocaine. No, I'm just kidding.
What about moving this MNQ short call down a bit? It has very little credit left.
Oh, on the yeah, I've looked at it. You know, I no, I don't want to.
Yeah.
Feel free if you do. I don't really feel the need to, honestly, because again, I mean, it's more about the whole entire trade, and it's. I'm willing to let that thing sort of evaporate, for lack of a better word. I don't really feel the need to move it up, because I just feel like at some point, if we do get a violent move to the upside, this is my, my short put is my lean there. And if it stays like this, fall is just going to continue to come in, and I'll eventually be able to roll the whole thing out. So I don't really feel the need to. I certainly wouldn't begrudge anybody who decides to do it, say the 26.5 or whatever it may be. But I'm just sitting pretty. Yeah. And again, I'm leaning on the short put more than anything.
Yeah, same. I mean, this short call has 55 cents left. We sold it for $200, so have gotten 75% of the value here. But yeah, if you wanted to, like, today's the day, if you're going to roll down into this rally, like today would be the day to do it. And you can see this here. The net change is dramatic when you look at the net change on the 7,200 versus 7,100. And you're picking up $100 or 20 points in this product if you do make that roll down. But the whole idea is, if we get tested on the upside, we're going to shift the whole thing up. So, I think it's okay if you want to make this adjustment.
Mm-hmm.
But yeah, I kind of lean with Jamal. I'd rather have more upside room to then shift higher. But just looking at the value here, $270 in the short put, 55 in the short call. So we're leaning bullish with the premium disparity as it stands. But yeah, if we get another day like today, we'll be right in the middle of the range. These premiums will be much more neutral. So either way, if you want to be making those adjustments, you totally can. Just make sure that the thesis stands. Like we're moving this up if we get tested.
Like in the case, in the case of the MNQ, I mean, you could, if you wanted to move it down, roll down to the 26,500, which again is probably the top side of where the NQs have been. I mean, it's only $100. That's the other part of the thing. Like, I don't really feel the need to roll down just to collect 100. At the end of the day, I'm shorting in the money put, and that's kind of where I want to be, where the market has been at this area. So I'd just rather lean on that. And again, it's only 29 days left. There's not going to be long from now before we probably roll in this thing.
Yeah, and that's a good point, because like we're in the next week or so, we're going to be buying back this contract, and we're going to be rolling, or these options, we're going to be rolling into a new contract with a new price that's 60, 50 points higher. So we're going to have to make adjustments anyways. But yeah, if you're trying to sweeten up the current premium and you want to roll into this rally, it's the best environment to roll into is when the market's rolling up and you're rolling a call down. That's where you're going to get the biggest credit.
Yep.
Death, taxes, and insurance. That's what it was. So now it's death, taxes, insurance, and aliens. All four, baby. Would you recommend scalping in and out of calls on the SLV strangle you have on? Yeah. So I meant to look at that. So I have the 150 call. It's worthless. I want to roll it down. So yeah, we talked about this yesterday. We said, if we are going to roll down, I want to roll into a rally. Look at the difference here. Now, this option was trading for 30 cents yesterday. Now it's trading for 60 cents. So this option has doubled into this rally. And now it becomes much more enticing to roll down this call. So this in the money short put I have is at 87. We have another 17 points of wiggle room. We're also getting close to the 30-day mark. So in my mind, this position I have $1,000 in credit, and my short put's at 87. It still has $140 of extrinsic value. I think I'm just going to get hyper aggressive here and just roll down to a straddle, pick up $145, because if we get up from 70 all the way up to 87, let's say it takes a week, we're going to be right at the rolling period anyways. I can buy back March, roll it out to April, and reestablish the strangle. So I'm going to do that. Into this rally, same story. Into the rally, picking up twice as much premium as I would have done yesterday. And let's see if we can get filled here. Bring that premium up to like $1,100 and change. And we'll be golden. There you go, 143. So rolled into the rally.
It's a good day. It's a good idea.
Yeah. And then I've got this 65-55 put diagonal spread. If we get a little wipeout, I can close that. This is another one where we're kind of just leaning short with the long put. The short put at 55 is worthless, and there's really not much to roll into. If we look at like middling the time frame, 12 days to go, 55 puts trading for 20 cents. I'd rather just not have it on. Cannot prove a negative. Yeah. That's why that proves that aliens exist. That's what I'm saying.
Because what?
Because you can't prove a negative. Prove to me that they don't exist. Can't. NVIDIA poor man's covered call. 100 December 2026 call and sold at 210 March. Let's take a look.
100.
Deep in the money. $210 March. Yeah, so you've got a 200 or 110 point wide range. You're paying under 110 points. So you're looking good from a theoretical standpoint. For these, I kind of like to just bring them in. Like your max profit here, this is your theoretical max profit. If you get a move to 210, you're making $1,300-ish. If you get a move above 210. If you get a move to 210, you're making $900, but you're putting up $9,000 in premium. What if we look at selling the 210 in March and buying the May 185? This is a 25.
Yeah, that's what I was going to ask you, because I usually don't like to go much further than like 6 months out between the 2 months.
Yeah. I mean, you can do it. It just, you set yourself up for, if there is a huge liquidation event in the markets, you're taking way more heat and a lot more risk on that further downside move. And this is a similar profit potential to the upside. If you get a move to 210, you're making $600, a couple $100 less than what you were with the previous position. This one, like let's say we get a sell-off in NVIDIA, yes, you would lose the full debit paid over 86 days, but you're likely going to be taking more losses on your poor man's covered call position because it's 5 times the amount of risk. So I like to stay near term with these. Or if you're going to December, instead of going so far in the money, you could move it to something that's more palatable, like the 160 or the 170. You're not getting rid of as much extrinsic value, but those kind of sell-offs, if the market does sell off, you're still going to be okay in terms of extrinsic value remaining, leaving you with lesser loss than the full max loss. We're out of time. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll post those trades to the Tasty Trade follow page shortly, and we'll see you live from the SIBO floor tomorrow, 11 a.m. Central. Peace.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Yes, sir.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony, that Batista, the criminal justice. Number 69, because it's one standard deviation plus one. And you know, I'm the bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
fine if they wanna buy me. Baby, I'm too pricey. Yeah, I'm cherry, I'm nice things. I'm ice cream, I'm melting. Well, I'm high speed, wanna fit. Look at me, I'm on it. Yeah, my talent is reflex. Got a mean whip, let her rip. Everybody count to 3. Okay, you wanna see?
What is going on, everybody, and welcome back to Risk and Reward. I got to say a little bit of a preemptive hello to you all from the great beyond before we got going here. We've been doing this show daily for 13 months now, and it's the first hot mic incident we've ever had. So 1 in like 400 days. I think that's a pretty good clip. Okay, guys, that's like what 0.25%. All right, you know, you got to spice it up sometimes. We could never kill our careers with a hot mic. Had those mics stayed hot the entire time, you would have heard Errol frantically trying to log into his platform over and over and failing to type his password correctly. That's the type of exciting stuff we do before we go on air here. Then we usually have a slight debate as the countdown is going of who's going to do the intro. I'm joined as always by my wonderful co-host Errol. Errol, how are you feeling? What's going on?
Doing well, doing great. Hope everybody else is doing well. We got a lot going on in the market today-ish, I guess you could say. We got a little bit more volatility. Today is what? Today's Wednesday. We had a shorter week this week, so we still have Thursday to go. We still have Friday to go. If I'm not mistaken, I believe we still have some binary events to just be mindful of. I know we've had some this week too. But yeah, I'm excited to get into some of the things today. We had another swing position overnight, so we'll go over that here in a little bit. And then just, other names that have been standing out to us. But what's been top of mind for you lately? How you been? What's new over the last 24 hours?
Doing good. Chat's saying they can't hear us now. I don't know if we're being gaslit or not. If we are being gaslit, it's a very good ruse that we got going on here. I'll just keep it rolling. We never heard that. We want to hear about what you argued about for lunch. Oh, yeah. It was a good lunch today.
It was really good lunch.
Tacos.
I'm so full.
We are being gaslit. I'm being told by production. It's successful gaslighting.
That was pretty good.
Yes.
That one got me.
It did. Very fair. It was when Jared was doing it, I knew we were being gaslit, but then Nice Boy
you should have known.
Really put the pressure on there. Yeah, should have known. You devious dogs.
Devious dog.
Anyway, we got a little bit of smoothing of the VIX going on today. It does look like we're about to go to war in Iran. So hoping that
is all hell going to break loose. Right.
Hoping we can wait 6 days to do that, so that my VIX position can get home. Probably going to take off these naked puts sometime before the end of the day today. Pretty smooth.
So you're saying we might get war with Iran before GTA 6 is what you're telling us? There's a possibility.
Well, we already had one little mini war with Iran before GTA 6, so it's really like over under 1.5 wars with Iran, military actions in Iran before GTA 6, which are they going to delay it again? Probably. I don't even know what it's scheduled for.
It's strategic at this point. I mean,
and I play on PC, so I got to wait extra time anyway. It's a whole crock. Yeah. Anyway, other strong performers in the portfolio. Meta continues to work a little bit higher for me. This one's been very volatile over the past couple of weeks. The highest highs and lowest lows, and being long Meta, I have been experiencing those emotions right along with this stock. We got the big gap up, and I felt like a genius. We fell all the way off, and I was feeling kind of silly. Now we're beginning to work back up again, so maybe we're moving back into that genius territory. Beyond that, Netflix has finally found 1 ounce of stability here. We're stringing together our 3rd straight green day, which is the first time in a long time. You have to go back to December for the last time we got 3 green days in a row, and this really isn't even hardly a green cycle. There's some lower opens and some green days sprinkled in there. So hopefully the bottom is in for Netflix, but no way to be sure of that, of course. Got some long NVIDIA, which these close. These are 2 DTE. Get out of these on Friday. Just needed to hold over 182.50. I am going to try to squeeze the last 30 some odd dollars out of this position, perhaps against my better judgment, but we'll see. If we bomb Iran before Friday, perhaps I will regret that decision. But we have managed to hold these levels okay. And then Accenture has been another solid winner for me. This one, I took off I had a ladder here. I also was on the 270, 280 on Accenture. Got those down here somewhere in October, late September. We got the run up, and I was feeling so good. And then just bearish news, we broke all the way down. So I did take off the top side. I didn't think those had any semblance of a chance, but I do think we could get back over 240 before March 20th. These are now exactly 30 DTE. So yeah, that's kind of the portfolio updates. You guys see everything else. Paramount continues to log some good days here. So Warner Brothers deal seems to get closer.
Okay, yeah,
but they're in the talking period now. Netflix has allowed them to talk. So that's
whatever that means. Yeah, no, it'll be nice to see a change of pace, change of character in something like Netflix. Really curious about just the overall indices at the highs. I've been debating on looking at some short delta on some SPY or maybe some QQQ. Maybe getting on a position in there. I know some of the metals have been moving as well. So, I mean, there's some things across the board. I think the metals are up on the day, but nonetheless, we're still kind of teetering around that all-time high, especially on the indices. So, yeah, SPY QQQ. Anything else top of mind? What else stands out to you over there?
Yeah, a couple of things in chat here. Oh, the ACN graph. Wow, how they fell. Oh, yes, I'm all too aware. I thought Iran nukes were already obliterated. They must have rebuilt fast. Grumpy Mike, Iran has been 2 weeks away from having nukes for 10 years, okay? It's very important that we get over there and get involved. Hey guys, hope you're good, buddy. What do you think about Kalshi and its disruption? Is there some kind of disruption going on with Kalshi? I can't say I saw that, or do you just mean the way that it's disrupting the broader market? But yeah, I don't know. The prediction markets are an interesting spot.
Well, let me pitch you this. You think that the prediction markets will really take a hit at the gambling companies?
Oh yeah, I think for sure.
Yeah, how do you think that'll change the consumer behavior, right? If I'm just getting in, I want to look at Kalshi, I hear FanDuel, I hear all these other things. What might make me gravitate towards one or the other? Is it just depending on the environment I'm in, what I'm interested in? What do you think that would be?
Well, yeah, I mean, I think, at large, they just straight up have better prices than the prediction.
So cost, number one.
Yes.
And I would say that's
traditional sports books. The holds are lower. They're more, the lines are more reflective of actual reality.
Mm-hmm.
But beyond that, the prediction markets, because they're regulated as a trading product, are legal in all 50 states, are accessible by 18-year-olds. You don't have to be 21 the way that you do with like a traditional sports book. And it's essentially the same thing. I know the prediction markets don't want to hear that, but it very much is the same thing. You just can't. There are some markets that sports books offer, like spreads and totals, that you cannot, to my knowledge, get access to on the prediction markets. It's purely who will win and who will lose. But the volumes these prediction markets are doing are insane. I mean, they already are doing more volume just for pretty much any traditional sporting event than the sports books are, because the things change hands so often.
Yeah. Do you think that, like, especially around now when disposable income is at an all-time low, debt is at an all-time high, whenever we hear a lot of these things, we typically hear speculation go up. Do you think that speculation in Kalshi and prediction markets will stay consistent and stay continued rising despite it's normal to see these behaviors in this type of economic environment, I guess?
I think so. I think so. I mean, I think society is just becoming more speculative as a whole.
Especially our generation, you think?
Yeah. And I mean, it's not really, it's not something that we would really need to touch on here. But I mean, the way that kids are getting involved in gambling right now is very scary. I mean, it's happening. It's getting younger and younger. I know Ben Affleck was just on some late night show a few weeks ago talking about how his 10 or 12-year-old son came and asked him for some money to bet on sports with. And I know that that's becoming very widespread, as that very young kids are beginning to get access to these markets and prize picks and, all of these sports markets. And it's a very dangerous thing. It's not something that kids should be able to get access to, but they're signing up with their parents' accounts or whatever else, or parents' information.
You can't do a custodial. I'm not sure. You can't do a custodial account, can you, for something like that? I know you can do it for the stock market, get a custodial account if you want to start investing earlier, trading earlier, but I assume not the same thing for that type of.
Yes, certainly not.
Interesting though.
Yeah.
Social media, right, amplifying a lot of that. I mean, 10, 11, that's insane.
And even just the sports themselves. I mean, you can't watch any sporting event these days without seeing this stuff thrown in your face all the time. Any football game that you watch, there's a DraftKings commercial and a FanDuel commercial and a Caesars and a BetMGM. Talking about the same game parlays and the anytime touchdown scores and this, that, and the third. MGM having a great day today. By the way, was this earnings? What caused this? Yeah. Anybody knows? They're up 8%. Much better looking chart.
Speak of the devil.
A lot of the other gambling companies here. We can pop over.
And whatever they're doing, keep doing it.
Yeah,
apparently.
Down. Win is another one. They're looking pretty good as well, similar to MGM there. It looks like MGM and Wynn kind of moving in similar patterns, like having resorts is a good thing for you, but then Caesars sort of popping the bubble on that line of logic.
Yeah.
There is a list for the best youngest traders under 18. Oh, is there a list for the best youngest traders under 18? I don't know.
I don't know. The best trader, I've ever come across that is the youngest best trader I've ever come across that is third-party verified, audited everything is like 23. His name's a short bear. He's going to be in the next Market Wizards book, actually. That's the youngest that I know of. I know it's difficult there because your frontal lobe developing absolutely helps with decision-making and
certainly.
emotional regulation and things like that. But under 18, I'm not too sure. I bet there's some teenage traders out there that are absolutely cracked.
Yeah,
I bet. Somewhere.
I'm sure.
Gotta be. So many people on this planet.
Yeah, or people who are just able to, code automated processes or you leverage AI into whatever else. It's a whole new world for that in that regard now. Jared says, are any prediction markets public? No, is the short answer to that. They still remain private. I'm sure it would be a whole nightmare if they wanted to go public. I think that they'll probably choose to stay private as long as they can. Does Polymarket have an AI? And Polymarket uses AI. They are these prediction markets are now scanning sentiment posts on social media, et cetera, to determine where betting is going to be placed. That's fascinating. I wasn't aware of that. I would imagine the sports books are doing that as well. It's all efficient markets trying to get these things right. What happened to Hawk Tua girl? I don't know where that.
I seen you made a post with.
I used her. It was a post about crypto scams. I used her as the cover image. Yes.
Yeah.
I don't know what I mean. I think she still has the podcast, the Talk Tua podcast. Yeah. I'm reasonably certain Haley Welch is her name. If anybody wants to give a Google, I can't say I've kept up with her.
I don't think anything came out of it. I don't think she ended up getting sued. I think it kind of just dwindled off. I'm sure I didn't hear.
Yeah. And to her credit, I don't think that she intended to do.
No, absolutely not.
I think she surrounded herself with the wrong people who realized that they could use her
and put her in jeopardy.
Yeah,
absolutely.
Quite frankly, I don't know that she's bright enough to pull that off on her own. If I'm being completely honest, my kids have plenty of time to become degens naturally, like I did. Well said, Jared. That's the right attitude. Oh, man. Isn't Don Jr. on the board of both Kalshi and Polymarket? Sounds legit. I think a drone company, too. I hadn't heard about him being on the Kalshi board, but he definitely is on the Polymarket board. Yes, the president's son. I can't look out the window while it's raining without thinking I'm inside some antidepressant commercials. In my day, friends use Caribbean sites and local bookies, so online seems safer. Seems like a parenting problem. Yeah, I mean, that's certainly true. Some of us might still be using those faraway places that you're alluding to. To get access to some better prices. But it certainly is a parenting problem, but also it's just so much more in your face all the time. I do think that it's a combined element. There's definitely a parental aspect to it, but at the same time, the way that the gambling stuff is just constantly being thrown into your face whenever you watch anything now is elevated more so than it ever has been. I mean, it used to be like the craziest thing in the world when there'd be some garbage time field goal to push a game over its total, and the announcer would say, "Oh, well, that's very meaningful to some," and everybody would chuckle so hard about that. And now the announcers will just straight up be like, "Yeah, the spread's 6.5. So if they score here, that would be great for people who bet on Seattle." So it's we're just in a whole different world in that regard now. Yeah. Bought shares of 3 losers: Microsoft, Meta, Oracle this morning. So far, it's doing great, especially Meta. Yeah, that sounds like a good move, Reggie. Yeah, Microsoft and Oracle. I'm not as in tune with those as I don't have positions open. But yeah, Microsoft logging a good day here. We can zoom in just a touch. Let's go 1 hours. Microsoft putting together a good day here, up 1%, and then Oracle was the other one mentioned. Oracle has been a serious loser at large, but yeah, they're logging a good day as well, up almost 2%. Yeah, Oracle. This is one that I've kind of wanted to get involved with as of late, and it does seem like we might be getting something of a confirmed break off the bottom here. I just don't think, much like Netflix, this is one that I just don't think can slide for too long. Ellison owns too much. They are involved in too many places. TikTok sale be damned. I think Oracle will definitely be on the road to recovery here very soon. And then yeah, obviously Meta, as I alluded to earlier, actually the weakest of that pack in terms of daily change, but moving solid for you. Can the people who solve Rubik's Cubes in less than 10 seconds trade well? And Big Deal was quick to say no. I don't know. I'm sure that maybe there's something there. I'm not sure. It seems like 2 different types of intellect to me. But perhaps
maybe I bet some might be really good quant traders, because I know solving Rubik's Cubes goes off of a lot of like algorithms, sequences. So yes. I bet quant maybe. I guess the field in the market, so many tomato, so many niches in the market.
There definitely are. Rubik's Cubes make me think Mattel. I don't even know if they're a Mattel product. What's that, Matt? Yeah.
I need AI to find out the code to how the Oxford math professor built the medallion fund. If I'm not mistaken, Big Deal, I believe one of their edges was the fact that they started collecting data way before any other fund collected data. So they have data to work off of that nobody else has. So I think they kind of forever have an edge in that way. And then they're extremely picky to who they even let in or out. They really just keep it within the family, and they're just big dogging everybody since because they collected the data first. So massive edge in the data there.
I mean, like so many things in business and in life, it is all just a giant data.
It's data because everything's
who has the most. Amazon bought a Amazon call debit spread April 17th, 200 220. That seems like a good move. Obviously, that's going swimmingly for you right now with them up about 2.5%. April is plenty of room for this to get back over 220, in my opinion. And I mean, from a technical perspective, these are some solid gaps that need to get filled here. Amazon's in an interesting spot, but I mean, we were just discussing yesterday how Amazon owns so much. It's like it's become so much more than what many people realize. So, and I mean, obviously the giant hold that they have on retail, an ever expanding hold that they have on retail, they pretty much maxed out what they needed to do in the United States. I mean, I can get same day delivery on just about anything now. And I mean, it's insane. They can get me things in like 6 hours. I don't even know how they do it. And then, now they're just trying to expand and bring that exact same model to Europe. I mean, they're just clearly the dominant player in e-commerce. And shout out to Walmart, who stole Amazon's whole model, which has led them to logging some very good years in a row here. And honestly, I mean, just looking at this over the last year, I mean, this is a real good looking chart for Walmart. You'd be hard pressed to find any companies that have had this type of consistent upward action, and I should say, well established, large high float companies that have this sort of well established growth over the past year. There's been a lot of turbulence. Time to break up Amazon. I think there might be more and more cries for that here sometime soon. The antitrust stuff and regulation is so inconsistent to me. It's like they want to get on Apple for antitrust stuff in Europe and say that they can't make the iMessages blue because that's uncompetitive. But then at the same time, you just let Amazon come to completely dominate. You won't let Spirit and JetBlue merge with each other, but then Amazon can just do whatever they want. I don't know. It is all very strange. People pop over and have a look at JetBlue while it's on my mind here.
Yeah, the antitrust issues is always going to be interesting because I think it always reveals a level of bias there.
Yes. JetBlue though, this is they're springing up a little bit right now. This actually makes me want to get short, to be quite honest. And then Frontier, their biggest public competitor right now, similar looking chart, but they haven't had the recent rally that JetBlue is seeing. So I am long Frontier. Perhaps I should get short some JetBlue as a little bit of a hedge there. I guess that would kind of just be a double down. I don't know. The low cost airlines, they move together. So is our chicken wings. So what? Oh, Garmin up big? I don't know. Is that a Wingstop reference?
GRM.
I'll happily look at Wingstop. Oh yeah, Garmin logging a good day here. Garmin really successfully managed to make the pivot from just being a GPS thing that you put in your car to like all sorts of applications. They're just behind the scenes now, even though there's not as many people. I know Garmin watch users really like those.
Yeah. What does Lady Gaga know about cameras?
Yes.
That was probably a revelation for Kanye right there. I can do anything.
Is CarMax still filing bankruptcy? I am not too sure. It doesn't look like it. Based on the share price action here, it doesn't look like it, but I can't be too sure. I do remember those headlines breaking, but I can't say I've looked back into that.
Shareholders think they're flubbing, apparently.
Wingstop
That's the case.
was alluded to. Oh yeah, they're having a real good day here. We're even higher. I'm pretty bullish on Wingstop. I think as people begin to shift more and more into food delivery apps, which are only continuing to gain prominence every day. These restaurants that are very low overhead, very small locations that are perfectly made for delivery, like Wingstop, are kind of sitting pretty in that regard. Let's pop over, have a look at DoorDash. Yeah, they're hurting a little bit. Man, if I had seen this 2 days ago, I would have been like, I feel like I have to get long here. I don't know about that after this candle now. And then Instacart, obviously, Maple Bear, but ticker cart looking very similar, although not having as good of a showing today. Walmart uses Palantir to keep the lowest prices, but also set a pricing floor on products. I did not know that. If that is true, I did not know there was any relationship between Walmart and Palantir. Palantir has been lacking, but has logged a couple of good days in a row here. I've said many times before, not unsensible for them to breathe. What's FJet? I don't know. Starfighter Space. This sounds Wall Street bets to the moon. Look at this thing.
Wow.
Even 30 lows of like 4. I have no idea what this is, but they got space in their name, which makes me think that the market will probably like them. You can say space the same way you can say AI these days.
Right, and you could say SpaceX almost the same way as well when they IPO this summer.
Yes, absolutely. But anyway, I'll kick it over to you. If you have any action to show off.
Yeah, no, with that being said, we can jump over to the TradingView platform over here. We could just quickly touch on some of the things that we had done. I know yesterday, with anybody that had joined us, we were looking to get long. We actually got long maybe like as we were getting off stream right here. We were able to scale out a little bit, like into these highs. And then we stopped out as the market started to reverse on us, right? If you guys follow on Twitter, we were going to exit this one near 24,950, I think we said on Twitter. And then we were going to leave our last position towards break even. So unfortunately, as I post that, we hit my break even stop. And that's how the cookie crumbles sometimes. Once you post that screenshot, just know you're going to get stopped out 3 seconds later. So that was that opportunity there. Came into today, just kind of looking at the same range. Last night we had a little bit of like a failed auctions where it was like a fake out to start trending to the downside. And when we saw that, we ended up getting long. So we pulled a couple contracts here. And then we woke up this morning at around 5:30. We took off both of those contracts. Market opens up. We look to get short near our value area high. Maybe we get a little bit more rejection. It was a pretty early short. But with the lack of volume above this value area high, I didn't want to take the risk of getting short into a breakout. So I was very cognizant of the fact that there's such a lack of volume. And with that, if a rush of buying volume comes in, we could really break out. So I get short, but understanding that, I was very cautious to not overstay my welcome. So we got stopped out right here, took a little bit of a loss on the day. And that's how the cookie crumbled. And we've just been consolidating for since the market's been open from the breakout for the most part. So that's really what's standing out here. I know we only have a couple minutes, but just wanted to touch on that. And if we get a pullback onto that value area high, we'll be keen on that as well. I know we have a few hours left. And then we'll come back and we'll reassess. But those are the opportunities we got on NASDAQ. We're not going to push the pedal too much. Just continue to build the cushion, so that later on we can start to take a little bit more and more risk. And we'll just continue to do that. So managing the trades that go against us is going to be top of mind as we move forward. So that's what we got over there.
All right. Well, that's about all the time that we got. You got anything else for the people?
Nothing else on our end. Thanks for joining us today.
Yeah, we'll make sure we turn these mics off when we get off air. It's not us, but we will make sure the mics get turned.
It's not you, it's me.
Yeah, or perhaps we'll just speak to you from the great beyond a little bit, as will Chris Vecchio coming up next. But that's going to be all the time that we got for today. Thanks so much, everybody, for coming to hang out with us. We really appreciate you taking the time out of your day. We never take it for granted. Errol and I'll be back here at the same time, same place tomorrow, 12 o'clock noon Central Standard Time. Be sure to stay tuned for Futures Power Hour coming on next. We'll see you guys next time.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We're back. It's still Wednesday, February 18th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, it's not quite a turnaround Tuesday. I don't have an alliteration for whatever that would be on Wednesday, but it's certainly happening. Stocks higher here across the board as we cross into the afternoon session. How are you here, or there rather, in Chicago?
I'm doing good. Can't complain. It's in the 60s here, so that's pretty crazy.
And I guess we're just waiting to see what happens with Iran.
We are going to see what happens with Iran. The Olympics are coming to an end in the next few days. The end of the Olympics, another carrier strike group arriving in the region, and all these air assets moving across the ocean right now. It's like there's an air bridge if you're looking at some of the flight radar tracking systems. But you don't need to do that kind of stuff, Thomas. Why be a nerd like me when you could just simply look at your oil quotes on the platform and see that near 5% gain today, coupled with a little bit of a volatility expansion? That, a move in gold to the upside here. Commodities are certainly catching a bid as we look at a day where the market may be thinking a little bit more about what an Iran attack by the U.S. could look like. Before we get there, though, of course, and I'd like to thank Google and its Intrepid login service for telling me that my password was changed 15 days ago with the password that I was putting in. We're going to do a little bit of a different start of the show here. We're still going to do a spotlight, promise. Yeah. But we're not going to do it through the slides. Instead, I just want to go right to the shape of the volatility curve. Because yesterday we saw curve compression, some backwardation coming in the first half of the session. By the time Futures Power Hour came online, we ultimately did see that the backwardation, as Jamal had noted, began to disappear. When we look at our charts now, we see that we're getting a little bit of a steeper contango over the course of today's session. One way to measure this, of course, would be, say, take the spot VIX right now and subtract it from the VIX 3 months out. So VIX 3M versus the spot VIX. Yesterday, that ratio, that spread, hit a low of just 22 cents. Today, we're back to $1.77. So you can see the steepness here at the front end of the curve is starting to increase again. And it's giving perhaps equities a little bit of breathing room right now. Of course, we, at the top of the hour, have the FOMC meeting minutes, so we're not quite out of the woods just yet. Thomas, talk to me about this decline in volatility, though, in equities. Does it seem a little out of place today, given what we're seeing in oil and the metals?
You know what? Oil's reacting to the prospects for war in Iran. I'm not sure, even if there is a war that's lengthy, I'm not sure how that affects U.S. equities. Equities have performed well throughout military conflicts in the past. So, it's not like corporate margins are going to be contracting just because there's a war in the Middle East. So, it doesn't seem too related to me. We still have some earnings coming up. There is the economic outlook. It's not too worrisome. So, I mean, the technical structure is more concerning to me, that I don't feel like getting bowled up here. But pullback in volatility, I mean, if you're wanting to get long, I think it's a little encouraging. But for me, I'm not really adding to my positions here for long exposure.
Well, we take a look at a VIX, and that's where we'll start today before we jump into the equity market move to the upside. VIX in at 19 right now, trading effectively through the lows that we had on Friday at a certain point as well. So this is a market that's more or less ignoring what we're seeing happen in the oil side. I go over to OVX, which you could look at as the oil volatility index. Yesterday, it jumped up. Today, it is sticking around, staying to the upside here. So a little bit of a divergence right now where oil vol is up. It's 55.6 IVR. Gold vol is up 61.1 IVR. Now we find ourselves with an equity market with volatility declining. So perhaps this is just going to be a small flash in the pan type of situation, if that's what the market's judging here. Buy the rumor, sell the news. Thomas, if this was really fear of a protracted war, volatility would be expanding in more than one place. But that leaves us with an equity market reaction today, which coming into the session, stocks weren't exactly on the firmest footing. We had the Palo Alto Networks earnings yesterday, which didn't give us the kind of guidance that I think the market was looking for when it pertains to one of these AI facing names. On the other side of whatever happened this morning, though, because the economic data was better, industrial production up, there is a sense of calm in the market that has started to spread, at least on the stock market side. So all four are trading higher here. I think the question that everyone's asking themselves, Thomas, and it's a tough question to answer, but I'm going to give it to you anyway. Is this the end of the bleed out in our software and AI sensitive stocks? We do see software's up 1.89% today, leading the broader NASDAQ up 1.22.
Yeah, I mean, it's interesting because the semiconductors have held up, and the AI narrative, it lifted software in the beginning, but now it's inflicted this wound that legacy software companies aren't perhaps going to be around for forever with, perhaps the ability for AI to do it in-house and things like that. I've said for a couple weeks, I feel like scooping some up in the software stocks. I think CRM, places like that, you could do it. There's very high IVR in those stocks. But for us to rally, especially the NASDAQ, we do need those software stocks to come back up, because it's going to be a tough road to get back to recent highs or even back in the range we've been trading without a bounce in software stocks. And is there enough confidence for investors to say there's a bottom that's been in, the pain has been inflicted? I think so. I mean, the only thing I'm looking at adding long exposure here is the ones that have been beaten down. So your software names. I think that the fear is over. So you can, at least for me, I'm going to be scooping some up here. And how does that tie into the NASDAQ? I think the rotation is over. Industrials have been doing well. Utilities have been doing well. So there has been defensive rotation out of those software stocks. It's not that the money has gone to the sideline. It's simply gone into other parts of the market. So, I don't see that as too bearish where it's liquidation across the board. I see this more as something you can play into and play back into the rotation and be strategic here.
You mentioned some of the names that have been more defensive. You mentioned utilities there briefly. That is suffering today as a sector, down 1.37%, but it's a more defensive sector in the market. You have your healthcare as well on a day when all four top line indexes are leading. Your healthcare is lagging. That's a good thing. I mean, if you're long those sectors or stocks within those sectors, it's not a good thing. But in terms of our sector rotation distribution, names like healthcare and utilities and consumer staples lagging, really 3 of the 5 sector ETFs that we track here on Futures Power Hour, 25 of them. Those are 3 of the 5 that are down. 20 are in the green. And the ones that are in the green here, Thomas, today, your commodity names are, of course, up there. But away from the commodity sector ETFs, SMH, XLK, XRT, XLY, all leading broader market, broader index performances. So names that have been beaten down that are still consumer-centric. Retail and discretionary are certainly consumer-centric. Those are holding up. So we had distribution yesterday and this dispersion going on where volatility having increased, the indexes are going to have some good two-way trade. I think we've had some good two-way trade the past 2 sessions. Is that going to continue into the second half of the week? I would guess yes. We're not out of the woods by any stretch of the imagination. Vixpiration, of course, comes and goes today, and we have moved to the other side of meaningful event risk, right? So the people who were buying all that volatility ahead of CPI and non-farm payrolls, for example, maybe they don't need to buy it back. So there's additional supply of vol in the market here. Naturally, on the other side of expiration, you get a little bit of a bounce. So are we out of the woods, though, technically? No. Not for the S&P, at least from my view. We ran into the trend line from the November and January swing lows here, up in that 69.25 area, we'll call it today, which just so happens to coincide where we have a 1-month moving average at 69.24. We have a 50-day moving average, we'll call that, 69.16 for today's session. We haven't been able to crack through those levels. So the momentum levels, which have been supportive of the market, have been pitched higher, positive rates of change. They still have their negative rates of change, and we're no longer able to climb through them. Instead of bouncing off of them, we're running into them as a blockade. So FOMC minutes here, Thomas, maybe that's the catalyst that gives us another 20-odd points in ES. But for now, it's hard for me to contextualize some of the movements in gold and oil and look at the stock market decline in vol and say, this seems like the right reaction. And I believe this.
Yeah, I mean, so what do you think about something like an iron condor in the ES, like 68, 7,000 or something like that?
I really like that. Yesterday, it was a better timing to do it than it is today right now.
Yeah.
We were exploring this on Let Me Explain yesterday morning with Nick and with Jamal and Tony. Yesterday, there was a point where we were trading at right near 68.15, which if we think about the trading range over the past few months, that is the halfway point from effectively the first week of September up through now. And in doing so yesterday, there was about a 35% probability of profit when we examined the trade specifics, with risking one to make one right on the nose. So if you were to go out to 41 days to expiration, the closest to 45, this being a short vol type of trade, so it's more or less typical tasty, we'd head over to the M6 contract just to make sure we have our trading range properly worked out. So 66, 25, 71, go back here, 66, 25 to sell. So we're short the 71 and 66, 25s and long 25 points on the other side of it. If you still wanted to play the multi-month range and say that we're not going to break out of it right now, we got the Iran headlines. We have the seasonality of the second half of February into the first week plus of March that tends to be garbage. This market's not going to advance much further. This is just simply a expiration bounce.
Yeah, I really like
it's a decent setup. Yeah, you may want to tinker. I think I would want to tinker a little bit more here and give myself a little bit more breathing room to the upside, considering we are 120 points off of the range lows. So maybe that may mean, pushing up the short call spread side of the equation. It does sacrifice some potential max profit here, but you're still looking at greater than a 1-to-1 risk to reward, which again, in an environment where if, I'm working off of my North Star right now, which was yesterday's show theme and a lot of what was put out yesterday. But if dispersion has actually arrived in the market, you really only want to do risk-defined things. Having beta directionality can hurt you. You could be right, but just in terms of the environment and what type of strategies it favors to optimally put on, it's not the whole VIX is 14, let's just get long stocks and go fishing and not worry about it. That's a fun environment. It's boring, but it's fun because you don't need to do much thinking and the market just does the heavy lifting for you. This one requires a little bit more deliberation. So risk defined only, short iron condor fits the bill, and it gives you a decent risk to reward here.
Yeah, I'm tempted to put this on the thing. I said, wars in the Middle East don't really affect equities, but the margins, the actual performance, short term, there definitely can be, some shock and awe effect to the market. Even though we're now anticipating strikes on Iran, I think the market doesn't know what to expect with this one. Whereas back with the nuclear strikes, we knew it was going to be kind of a limited operation. So I'm kind of, I think that could be a risk to it. I think the FOMC minutes coming up here. I might put this on after the minutes come out, and I think I will.
Minutes coming out in about 14 minutes time. We'll see how that lands there. I put on this short iron condor 71.25, and we'll call it the 66.25 short strikes going 25 points wide, risking one to make one a little bit under a 50% probability of profit. It's on top of long MES exposure and some ES call spread exposure that I currently have and I'm working with here. The ES call spread exposure, probably not going to work out right now, but we got to see a little bit of a push higher. It has succeeded at times, but right now it's 2 days out. So maybe a little bit of a bounce here, Thomas, more of a squeeze just to ring the bell. Otherwise, that trade's going to be a bust. Tough 2 or 3 weeks for me, quite frankly. It's only February 18th. It feels like the last 2 weeks have been much longer from my vantage point. But I'll keep the MES position on because I do think, as you note here, whatever conflagration we have with Iran is probably going to be short-lived as things stand now and given what is publicly available in terms of media and reporting out of the Middle East.
Yeah, we're living the same life, it feels like. Past few weeks have felt very long. Yeah, I think a lot of headline risk. We still got earnings. There's some more this next week. I think this week the Walmart. I'm not sure what else that's capable of really moving the market. Nvidia next week. That's a big one, I think, coming up. Yeah, I mean, that's how I'm going to play equities. I think I'll do I think I'll put that iron condor on. I'm going to wait till after the minutes come out. And then I'm just going to scoop up some of these software stocks. And, they have really high IVRs. I think selling some put spreads is, perfectly reasonable here. And, yeah.
NASDAQ up 1.13%. That's your leader in the clubhouse today. Have we cleared any real levels yet? I don't know, Thomas. I don't see anything here that looks like there's much of a reason to be confident or go bottom fishing. We never quite got to the November low. Maybe making the pivot through that January swing low. That could get you interested here, but we're not exactly punching through that level right now. And previous attempts to climb through our 1 month 50-day moving average envelope, they failed. So first blush, I go to a lower term time frame. I see a downtrend that's played out here. This kind of feels like a triangle that's coming together after a breakdown, which would mean continuation to the downside. I don't love the technical setup.
So minutes come out today and they have a hawkish tilt. Do you think the market goes down from that? Or do we want a stronger economic outlook and say, hey, we might not get this third rate cut, which is only priced in at, a 30% chance last time I checked. So maybe we only get 2 rate cuts this year in a stronger economy. Does the market like that?
We've had this 3-day rally here in stocks. I know it hasn't obviated what happened on Thursday, but it's a 3-day rally here in equity markets. During that time, we've seen rate cut odds through year-end 2027 expand to their highest level in the past 3 months. I don't want to overlook the fact that as the market's gotten itself off the floor the past few days, Friday, Tuesday session, and today thus far, it coincides with a resuscitation of rate cut odds. So maybe not now. And I don't think the market wants to see that the Fed is considering cutting rates right this very instant. Because if things are going as well as the market believes, then the rate cuts aren't necessary in that kind of scenario. But the promise and prospect of cuts beyond June, for example, I think that matters. And the possibility of June cuts persisting matters more than whether or not we get cuts between now and the end of Powell's tenure, ostensibly. I don't know if the Fed's going to give that to us. I mean, just being open-minded to a June cut, right, should be enough for the market to hang its hat on. But if it looks like we're not going to get any cuts this year, I'd remind people that there's a psychology of the timing of the calendar. Right now, the market's of the mindset that we're going to get another rate cut next quarter, Thomas. Right? June is the last month of the second quarter. So we're getting a rate cut next quarter. As long as that stays intact, market's going to be okay. But if all of a sudden we say we're not going to get a cut in the first half of this year, we have to wait to the second half of this year to get a cut. It's not next quarter. It's going to be in 2 quarters. This time horizon with which the Fed can actually deliver those cuts, not just for this year, but through the end of next, starts to shrink. And so out of necessity, the market says, yeah, the Fed's going to cut, but we're not going to get 64 by the end of 27. We're going to get 55. We're going to get 45. We're going to get 35. We're going to get 25. It's just 1 now. And that could hurt. So the sweet spot for the markets and the FOMC minutes, no cuts until June. We're still on track to potentially get a June cut. Next quarter, we need that.
So almost like threading the needle type situation.
Very much so.
That leaves room for error. If inflation starts going up, tariff delayed effect, which analysts are still saying can show up, complicate all of that, throw a wrench in things. I think we'll have to just see what the FOMC minutes say for now, see how the market reacts to that. But there's a lot of time between now and June.
A lot of time between now and June. Because it's February, let's say PCE this week comes out a little bit warmer. Does the market overreact to it? No, because it's not like a March cut is in the balance. it's time for the PCE data to flatten back out again before we arrive to June. Because what if it's a 1 month spike and the next month it comes off and then we're back to 2% in May? The June cut's going to look great. Why did we panic? Because of one PCE reading. There's no reason to. So the sweet spot for the minutes, the Fed is going to acknowledge a better economy. Labor market's still soft, but overall top line growth, perhaps to the AI CapEx spending, is moving things along. And as a result, they're looking for more signs that inflation's evening out. But should it do so, then they could probably proceed with more cuts. June. That's what we want. June cut. Russell here, Thomas. Outside of the S&P 500, the Russell Triangle is something that we've been watching in the past few sessions. I'm still retaining long call spread exposure here. I like triangles at the end of uptrends for continuation patterns. And if our theories of how the world is working is correct, or they are correct, then the Russell perhaps still has a window where it can be a leader. Not forever, right? This isn't for the rest of 2026, but maybe we have a month or two where the Russell can still pull itself ahead. Back half of February, Russell tends to do a little bit, well, how do we want to commit to this? Can we commit to the bit, Thomas? I think we're going to commit to the bit. The Russell survives the second half of February over the past 20 years a little bit better than the NASDAQ. If you're looking at shorter term seasonality, because we just had the SVB signature bank crisis, what was that? 20 March 24? That complicates the shorter term seasonality metrics, where the Russell has been the leader to the downside. So long term, Russell does better. Shorter term, more recent history, the Russell does worse. I just like the technical setup. I like the fact that when we look at volatility, it's lower vol than the S&P or the NASDAQ. This is not a market that's sensitive to what's happening with AI. It's a market that's sensitive to the domestic economy, which, for better or for worse, is doing better than what people broadly have anticipated. So we can move over to bonds unless you have any Russell commentary and to talk about these small caps and mid caps that have really done better than their large cap, mega cap tech counterparts in recent days.
Yeah, no, I do like the triangle here for a continuation pattern to the upside. Breaking 2750 would be very encouraging. Yeah, let's go to bonds.
Yeah, let's go to bonds. I have 2 days left on these 2750 2800 call spread, Thomas. So if it doesn't work out, I think this is worth reloading on. I don't want to say reverse iron fly, just looking for an omnidirectional breakout in Russell, though that could be a way to get it to work. My recent experience with iron flies, or reverse iron flies, however, tells me that maybe I shouldn't be doing things like that, because of course we're talking about what's happening here in notes, which got to get away from 112 and made great progress, fantastic strides towards doing so in recent sessions. Today, weaker. Thomas, just give it to me straight. Is what's happening at the long end of the curve direct reaction to what we're seeing in oil?
You know, oil feeds into inflation expectations, things like that. So probably, I think you have to say yes a little bit at least. But I mean, ultimately, the curve, it's going to be dictated by more than just what's happening in oil. I'm not trading it in any case. If I'm doing anything, it's going to be in ZN, not ZB. So yeah, the pullback, if I was looking to get long ZB, and if I was looking at this chart, I would want to be long. I think I'm waiting for a little bit deeper of a pullback, perhaps. Maybe 117. I mean, it looks like that'd be a nice place to buy.
Yeah, on yesterday's show, Jamal and I were talking about the bond market and potential catalysts this week. There's not much macro data, some durable goods, some PCE. There was a 20-year auction today, though. And yesterday, we hypothesized that, where is foreign demand going? Because foreign demand throughout the government shutdown, what we saw in November, December, didn't dissipate. Threw out the idea that what if the recent drop in U.S. yields makes treasuries a little bit less appealing right now? Investors were happy to pick up the 10-year when it was trading at 4.2, 4.25. How do they feel about it closer to 4% now? Maybe we got some evidence that people don't like the drop in U.S. yields. So this is the only major auction this week. There's tips tomorrow, but we don't really care about tips. This might be one of the worst 2 or 3 20-year auctions that we've seen since 20-year auctions began in right during the COVID era, May 2020.
It comes right after a big drop in yields, right? So I mean, it might have had something to do with it.
I'm thinking that could be the catalyst here, because what else are you looking at, right? There's clearly secondary market demand. Traders and investors are buying up bonds out on the open market here. And so those folks who may have participated in this auction, a week ago, maybe they were able to get their treasuries ahead of time. And so, their natural participation in this auction was diminished, hence why bonds have moved from 114 to 118 over the past few days. People didn't want to wait for the auction. We can entertain that. Go ahead.
Is this a rollback of the dollar debasement trade? Because we've seen hard assets like gold, kind of a little bit come before this upside move in bonds. Do you think that's what's happening here?
It's a really good question. Last year, one of the things that we have to square about the debasement trade was it people selling out of the dollar, or is it people just buying other things and just not allocating the incremental unit of currency into US dollar denominated assets? I think it was more of that, right? Because US stocks were up, just that everything else was up more. The dollar was down, but you could argue that it's because there was organic demand for the other currencies. And then you also sprinkle in the fact that last year there were more foreign buyers of treasuries than there were in 2024.
Yeah.
So it's a risk-adjusted return story, perhaps, right? If that's the case, then maybe this is not really worth reading into from the auction side. But the auction results themselves, right? Foreign buyers fled. Indirects were just 55.17%, down from 64.72%. This is the second lowest on record. So foreign buyers just not here. Directs awarded 27.2, down from 29.1 in January. Dealers left with 17.6% of the auction, the highest since December 24. So one of the worst 2 or 3 overall auctions that we've seen in the past 5 years since the inception. It's also the biggest tail of 2 basis points that we've seen since November 2024. So there's just nothing good in the auction itself. And then you sprinkle in, Thomas, the move in oil today, and you have a bond market here that is struggling in today's session. I suppose if we were looking for a war trade evidence trail, so to speak, if we're going to follow those clues, you got it in gold, you got it in oil, you are not seeing a market that is totally wound up when it comes to bonds or equities. Almost like those moves already occurred last Thursday. And we're now moving beyond the headlines. The commodities will continue to deal with it, but equities and bonds are now moving on to the next catalyst.
Yeah, I mean, that's interesting. Different parts of the market react at different times to the same headlines. I think we've seen that before, and I definitely think that can be true. Just because, gold, oil are reacting to the war trade, bond traders, did they price this in already? There's different outlooks and different schools of thoughts between different kinds of traders, between bond traders, oil traders, everything.
Thomas, the FOMC meeting minutes just came out a few minutes ago. I'm just about 2 minutes ago. I'm gonna
read the whole
scan
thing
through this quickly. Well, if people want to hear me monologue 18 pages of Fed discussion, we can go do that on a podcast elsewhere. Otherwise, I'm not finding anything interesting that's sticking out here. Inflation concern is really the top priority. Tariff uncertainty is everywhere. Most members aren't close to cutting. I don't know. What else is there to say here?
Really muted market
Kind of throws
reaction. Yeah, nothing.
June's open still. And I think that's really all there is to it. Inflation's above the tolerable level, but perhaps for good reasons this time. In 22, you were facing with an economy that, while growing, real wages were negative for a good point of time. So yeah, right. People are getting a 5% raise at work, but when prices are up 9% year over year, your dollar's not going as far. It's not what's happening right now. You have inflation, but there is real wage growth, and there is both positive real and nominal GDP at present time. Nominal GDP is like 8% plus. Real GDP is in the 4% neighborhood. So the Fed telling us we're not going to get a cut yet, but not for a terrible reason. And June is still very much on the table.
Yeah, there is real wage growth. Do consumers feel it, though? Do they feel it? Is it motivating them to spend more? I think that takes a little bit more time, perhaps, especially after years and years of COVID, tariffs, everything like that. So I'm not too convinced that it's going to translate into much higher consumer activity right away, but it is encouraging to see, some bounce back in the labor market. Have you found something in the minutes?
Yeah, just, nothing bad. I'm just reading through them. They changed the language about growth from moderate to solid, which is a very modest but directionally important upgrade, right? They're feeling good about the economy. Again, something's going to have to break. Something's going to have to break before June for a cut to come. I see our producer here putting in the chat. Several participants commented that further rate cuts would likely be appropriate if inflation were to decline in line with their expectations. So, not yet. I don't think we're going to get a cut in March. And then we think about Powell leaving in May. Is he leaving? Thomas, I guess that's a good question here. If the market is the market thinking that we're not getting a cut until June because of the data, or simply because of when Powell's tenure is going to end? And to that point, let's say Powell sticks around because the Senate Banking Committee doesn't wave through any of Trump's nominees. Does the Fed still cut in June if Powell is still the Fed chair?
I don't know. That's a good question. I think the data as we get closer to June is going to matter more than possible political or, that is an interesting question, but I think you're right. I don't think there's a rate cut coming until June unless something goes wrong or some kind of data point, inflation or the labor market really accelerates from the trend right here.
I think this is going to be a point of discussion that we cover a lot over the next few weeks. If Powell isn't leaving, does the market abandon its June cut hopes? Is the whole idea why the market's entertaining a June cut simply because, well, that's when Powell's not going to be here, Trump's going to have his guy, so the cuts would come. And if it weren't for Powell, the cuts would already be here. I mean, I think the Fed's making the case that even if Powell wasn't here, the cuts wouldn't have arrived. They wouldn't be cutting in March.
Yeah.
I don't know if the market's getting that message, though.
And is his guy still going to be his guy once he actually gets in? I mean, I'm not really that convinced that it's going to be a yes man.
No. Well, you already said it. If Warsh doesn't cut rates, then he'll sue him too. So, I mean, if you're in the Senate Banking Committee, you're like, okay, so then why should I give Trump the power to put this guy in at the head of the Fed?
Right.
I know he's joking. That's what everyone says.
Mm-hmm.
But why would you? All right, Thomas, let's move over to something a little bit more fun than these bonds that are not, much ado about nothing, perhaps, although those auctions are that 20-year auction, not great. One of the worst auction we've seen in recent history for the 20-year bonds. Gold bouncing back a little bit today off the 4,900 level that we ran into yesterday morning. We're still not quite out of this downtrend, so to speak. The lower highs and lower lows has thusly continued. And right now that's continuing so far. But we're not going to dismiss a 2.1% bounce, particularly for people who have short-dated call options that are climbing ever so deeper into the money. We could take them off today, but they're deep in the money, and we're being a little bit, I don't want to say greedy here, but certainly being a little bit greedy here, Thomas. Likewise, the 5,000, 5,100 call spread in gold, that's at 68 days. That's been working nicely, neatly, papering over sins otherwise placed in the account by the bond market. So I see no reason to change course or tact here, particularly if we're looking at an Iranian-US conflict stirring up potentially over the next few days. Silver, 5% gain, copper, 2.3%. I mean, is the worst over for the metals, or is this the action that we've seen this week emblematic of what you see playing out in the foreseeable future, which is good two-way markets, but the enthusiasm and jazz of December and January is in the dustbin of history?
You know, I don't really love the price action as it relates to the patterns in the chart for gold or silver, really. I don't think it's the best setup. Gold has been, a little choppy. It's been going up and above, closing up and above and down below. It's 9 and 21 day EMAs. I was thinking about an iron condor earlier. I'm not sure if I could get wide enough for my liking. But again, you have to figure, is this, today's up move, is it a war trade? Is it going with oil? I mean, I think it depends a lot about what kind of conflict this is going to be when it does kick off. Because it could go two ways. Limited strikes, it's over quickly. Iran does a retaliation. That's not really a retaliation. Or it could be an actual move to push for regime change that could lead to a prolonged conflict where potentially, gold could perform very well. And I think that's the biggest thing you have to think about if you're investing in precious metals right now, or at least that's what I'm thinking about. If I had to pick a direction, which I'm not in gold right now, this is the first week I'm actually not in gold or silver in quite a while, since I can remember, months and months. I'd be inclined to get long if I had to, because I think a military conflict will amp it up a bit more. But I just don't like the price action. It's not looking good to me. I don't get a good feeling, really. I might wait here. I'm in copper. A lot of the, precious and copper has been moving a little bit in sync, at least when they make big moves. So I don't want to overexpose myself right now.
Sure.
Maybe a 1 ounce future. Maybe I'll look at that. Maybe I'll express it via long 1 ounce, stay small. I don't know.
You mentioned an iron condor. It's a 61.1 IVR. Let's just explore that. When I trade short iron condors, I like to identify ranges to work around major highs and lows. And if we're at a 50% mark of those highs and lows, then it's a place where we should be looking at something like short iron condor. That's literally exactly where we are right now.
Right.
So I think just in terms of calling that out, the highs that we had at the end of January, the lows at the beginning of February, the boom, then the bust, high, low. That's an interesting place to take a look at an iron condor. So let's go to that. The highs are just short of underneath 5,700. The lows are just under 4,500. So if we were to go to GCM6 at 68 days and do something like this, again, just going to the range high lows, 45, we'll call it 44 and 57. 44 on a short put spread is just outside of the 1 standard deviation move over that time horizon. And then again, we're going to 56, 57. So we're going 50 points wide on this. That's a 69% probability of profit, risking a little bit less than 4 to make 1. I think you can tinker, right? You could tinker with these strikes a little bit to play with the trading range here. But this is eminently reasonable. I'm not loving that it's a 4-1. I wish it was more of a 3-1.
Yeah.
Or 2-1. But you're talking about a trade to go wrong. You'd have to see gold move more than 10% in either direction over the next 68 days, 2 months. And while feasible,
it's feasible. We've seen it.
We've definitely seen it, but it feels like that part of the gold trade may be finished given all the margin hikes, given all the volatility and the violence in the space. People have been scared away. So it's not my cup of tea, but it wasn't my cup of tea last summer, and it should have been, because I got burned all last summer trying to be long gold in the manner with which I was doing it. It's only once the fall arrived that my long out of the money stuff, really came to fruition, and those high convexity trades finally worked out and, again, made up for the losers earlier on. But right now, Thomas, short vol, you get little dips here and vol staying up. Maybe this thing doesn't decline, so it's better to be short put spreads than long calls to express any sort of bullish delta perspective.
Yeah, the problem for me, I do like that. I'm operating on, going that wide, the max loss becomes a little high for my account. So I might, I'm going to have to tinker around with this. I do like an iron condor here.
Well, you mentioned that it may be a little bit big for the account, which in fairness, this is a future. So if you GC something like this, which at the current thresholds of the 4,400, 4,500, 5,600, 5,700 short iron condor, it's now a little bit worse than a 4-to-1, which not loving that, Thomas, but at 75% profit, GLD, because it is an $8,200 potential loss. And if you think about a $25,000 account, you're talking about risking a third of your potential account balance for a single trade. That is not a way to trade sustainably. And that's certainly not what we would do in any of our operations here. 41, 43, 58 days to expiration are listed in GLD, which may be the way to approach this. So find the product that fits your risk tolerance is the view, right? You don't need to be trading GC or MGC or 10Z. You can do it through a different gold product to express the same perspective.
Yeah, good point. Copper. You want to talk about copper really quick? Because
hit me with Dr. Copper.
So there's a headline. It's something like copper inventory levels have surpassed the highest since 2000. I want to say 2004. I'm not finding the headline now. Copper storage. So CME copper inventories have exploded. U.S. inventory levels have gone way up. LME copper levels are actually starting to go up. Shanghai levels are going up. Smelting activity is actually going down. And some firms actually, they track copper smelting activity via satellite. That's how they do it. A lot of teapot smelters in China, these very, very small ones that don't necessarily report their activity and things like that accurately. But it seems like, it's a weird situation because this electrification trade, this, EVs, AI, everything that's supposed to draw down copper inventory levels this year. And big industry groups have said this, like the International Copper Study Group, other analysts predicting, copper surpluses are going to drop quickly. That's actually not what we've been seeing, at least, the first 2 months of this year. One main reason is China has slowed down their activity. And, it's, when does that pick up? Now, there is some seasonality to it because it is a Lunar New Year. Operations started to wind down as we came into this Lunar New Year, which, is a holiday you get like a ton of time off, 3 weeks or something, just to do nothing in China. And, that might be feeding into it. But, the price action in copper, we're still going up. We're still keeping these levels, even though that smelting activity is down. Inventory levels are increasing a little bit. So it's an interesting trade. I'm still long. I actually rolled my position today. I have a short put spread, and I rolled it out duration. I'm 36 days out now. I should have probably actually done that a little bit longer in the next contract, but I'm at 5.7, 5.75. I was at about 30% of profit on on the previous one, which was the expiration for the 6 days. So I was getting way too closer than I like usually. So how do you play it now? The 68 day is probably where I should have went to thinking about it. I don't know though, because it's like BHP reported they're the largest copper producer. They're actually one of the few copper producers that are saying they're actually going to produce more copper this year. So, they had a little bit more of a cautious tone last year on their production goals. And now it seems like they reported earnings yesterday. They sound a little more optimistic on how much copper they're going to be able to get out of the ground this year. That is in contrast to other smaller producers. The inventory level things, I don't know where it's going. China has to pick up the activity. If they do, it could help draw down stocks. And, there's conflicting narratives out there now on copper. And I think the price action has kind of showed that this year. We rallied into last year. There was high hopes that copper inventories would decrease. And now we're chopping around. We're at the bottom of the range. I don't know. I'm going to stay a little bullish here.
That's what I'm doing. There is a call spread that's doing nothing. Is this a double bull? Kind of, because long a call spread and short a put spread is a double bull. The long call spread side isn't working, but the short put spread side, the 5556 is, and it's at 36 DTE. Why those levels? Why here? Resistance through December becomes support as we make our way into that last trading day of the month, which for those that don't remember, on the other side of the weekend after Christmas, we get those CME margin hikes and the market went a little nuts. And then we wash out on December 30th to a low of 553. Since then, we haven't seen a low reach that level. And the uptrend from the lows that we have all the way back to August here in November, it's only 2 points of touch, but you know what? That uptrend's holding. So I would then argue that through the end of February here, the rest of the trade cycle, because if this is a typical tasty trade, 45 in, 21 out, that means there are 15 days left on the board. Technically, we stay above our short strike level if the trend remains in place through the end of the month. So I see a lot of support here. I want to be long deltas against this region. I don't know if it's the call spread side, because quite frankly, I don't know if we're optimistic. It's more of the short put spread. This thing's not going to keep falling point of view. I like it, Thomas. I'm with you. I'm long deltas for now. Will be adjusted. If we hold this level, I'm going to continue to operate around it. We move over to oil because, as we noted, Thomas, it's been a point of focus here on the show. Middle East making waves again, or at least President Trump is making waves about the Middle East. It's good enough for a 4.7% rally here in oil, Thomas. We were talking about this yesterday, how former resistance had become support, and it was right with the 1 month. So as someone who was leading long, are we getting out? Absolutely not. Sometimes the market gives you price levels that you have to pay attention to, and 62 seems to be that one, as vindicated by what's happened here today. I'm not getting off the long delta train. But this is buy a rumor, sell the news. Like the second that we see the stories of the missiles hitting Tehran, do I put my kid down and say, sorry, honey, daddy's got to go sell oil futures?
I'm not so sure about this time. So things like the prompt spread, they're not really moving. It's still 22%, 22 cents of backwardation. So it's not a story of supply and demand here. This is geopolitical premium coming into the market. And, it's headline driven. It's, yesterday there was a material agreement on principles or something. That headline came out. The oil market fell. Now today it's looking more like, war is back on. Heavy movement of assets into the Middle East. Israel.
Just to draw a line under what I'm showing here on the screen to emphasize your point. You mentioned geopolitical risk premium coming back into the market today. This morning, we had IVRs of 36 in oil. We're now up to a high of 57.6 for today's session, currently 57.5. So something's happened with this. There's been a volatility expansion alongside this move in price, which is why you're addressing it with the context of the news flow, of course, as this being geopolitical risk premium expanding.
Yeah, definitely. And, the question is this a sell the news event? Once the bombs start dropping, is it going to sell off? I don't know this time, because before the Fordham strikes everything, we knew it was going to be limited in action. This time it's a little more unclear what the specific goals are of this administration. Is it regime change? Is it sending a message for breaching one of the red lines? Is it, what is it? I think you have to look at what's going to happen in the first hours of the attack. A few cruise missiles going, some maybe F-35s doing strikes. I think you're quickly going to be able to tell if the tempo is much higher. Is there, and you'll be able to see it on all the channels that cover, this kind of thing. You'll be able to get a sense of what's going on. But, the first move, if it's going to be an extended conflict, I think is going to be things like targeting the IRGC's Navy to make sure they can't mine the Strait of Hormuz. Is Iran going to counterattack by striking Gulf nations, which would show that they're kind of in a fight for their life, because they're not going to attack, not allies, but people that are more sympathetic to them. Some of the Gulf states still are more sympathetic to their country. I don't know. It's going to be the potential for drawn-out conflict. In that case, the U.S. will strike Iranian oil refinery facilities and infrastructure, which, OPEC, Iran is, I believe, the third largest producer in OPEC, producing 900,000 to like 1.3 million barrels per day, somewhere around there. It could be significant upside in oil, depending on what actions are taken. So where do you see it going up in a situation like that? Into the 70s for sure, perhaps. I'm not sure if we go beyond 80, but into the 70s, I think, is on the cards for sure. If this is any kind of conflict beyond just, doing a few strikes to send a message.
Iran produces around 3 million barrels per day as of last year.
Yeah, I was thinking Venezuela for some reason, their figures.
Well, even so, I mean, you're looking at 3%. Saudi Arabia, Iraq, UAE, Iran, and Kuwait. Those account for about 80% of OPEC's total production. So taking Iran off the table, it's 3% of global supply in one fell swoop, potentially. Nothing. And then you think about the bigger issue, of course, is the Strait of Hormuz, right? That's really what we care about. Iran oil, that's not coming to the West.
You got to think, one big thing holding the U.S. back from doing this, we're approaching midterms, the economy, the GOP knows it's the number one issue. Do you really want to drive oil prices up right before an election?
Yes.
I don't know.
It hasn't worked for those other people, but maybe it will work out differently this time.
Maybe.
I don't think so. We go over to the dollar here to round things out. I'm not touching natural gas right now, and I'm not even going to subject people to its cruelty. The dollar here trying to break out. We've been watching this triangle. We're still below 98. The swing lows you have in December. We were capped off there a few weeks back. 2 weeks ago. Here in February. The dollar strength is building, though. The pound, the Aussie, both trading weaker. The pound is of interest, as it was discussed yesterday. Weak labor market data out of the UK has pulled forward BOE cut odds. Do we see a market that's pricing in more or less, more or fewer Fed cuts on the other side of the FOMC minutes today? At the margin, fewer. That said, the pound here is testing 135. It's testing the uptrend from the November and January swing lows, if we want to call it that. It's testing the 50-day moving average. So we're watching these individual currencies, Thomas, reach inflection points in a broader market. You can see here in the euro, if we go down to a lower term time frame, there may have been a triangle that was forming up here yesterday as this was drawn. In any event, if these things are indeed breaking down in favor of dollar strength, that 97.5, 98 level in DXY does demand our attention. I find it interesting that it's the yen, though, that's leading to the downside here. It's almost kind of a classic move. Higher U.S. rates, stronger oil prices, the yen's going to get punched in the face. In the event that there is a more sincere risk-off move because of Iran, however, whatever weakness there is in the yen broadly probably gets displaced by broader safe haven concerns, Thomas. It's only in an event where oil prices stay up and there's no broader conflict does the yen stay pinned down, in my view. So as the safe haven currency, 41.2 IVR, the Canadian dollar, and commodity currency exposure to the energy sector, 42 IVR. Aussie, broad exposure to what? Commodities, metals, energy. It has a 47.7 IVR. So pound and the euro are the low IVRs in the totem pole. It's because they're not directly related to anything that could be direct or really indirect knock-on effect from Iran. So, the Aussie is not the best way to play what's happening in Iran, but we should just be mindful of the fact that this vol expansion in commodities because of Iran is spilling over into currencies. And maybe it's too big to play gold, Thomas, but the Aussie futures are different. Those are a much smaller product and a little bit more accessible for retail traders.
Yeah, I'm not touching the yen right now. I think
Can't imagine why.
Yeah, long dollar will perform well if it's war.
Is this the end of the dollar debasement trade? We'd want to see emerging market currencies stop rallying. The Mexican peso today perhaps is a way to look at that. Hey, Thomas, we're running out of time here. Just quickly on the calendar for tomorrow. I know it's not up on the screen, but you could just take my word for it. There's really nothing by way of interest from the U.S. session. Initial jobless claims, of course, and maybe some Fed speakers coming out, but no high-rated development that we'd be paying attention to. The earnings calendar looks thin likewise. So, you know what? We're going to wrap it up here before the producers pull me off stage with a hook and a cane. Dr. Jim's coming up next. I'll be back later today for Last Call with Nick, so we'll catch you there. But for now, you're watching Tasty Live. See you on From Theory to Practice.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Wednesday edition of what it is that we are trying to do. Welcome to the We Survived the Most Important 5 Minutes of Our Lifetimes edition of what it is that we are trying to do. Thank you guys for being here and being a part of the show. It is only because of you all that we can do what we do. So thank you guys so much. If you are watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the show. Man, you can celebrate if you're a bull, but not as much as you could have celebrated earlier. You can commiserate if you're a bear, but not as much as you would have commiserated just a wee little bit earlier. And of course, drop whatever questions you have for me in the chat, and I will try to get to as many as I can right around the second half of the show. And so, all right, so Josh, bring us into the market. I don't know what's going on out there, but we got lots of things happening in the world, right? And we got Iran stuff. We got Walmart earnings coming on down the chutes. We got market up 33, NASDAQ up a couple honeys. I mean, we got a lot going on. I see you guys in the chat. You guys are already doing work in that chat, man. Get in there and pump that algo because the algo wants to know what's going on in your life. And so do I, actually. So put it there in the chat, and then everybody wins. So EME S&P is up 34. Risk-free instrument, also known as the NASDAQ futures, extremely high-risk product. If you're brand new to the show, that is a very mediocre attempt at internet sarcasm. But it is up 196 today, so the proof is in the pudding. You got the boomers up 111, and you've got the Russell 2000 futures index up 10 on the day. Bonds down a little bit, notes down a little bit. Look at oil up 260. That makes a little bit of sense with war with Iran apparently being imminent. Could be any minute, could be any hour, could be any day. Oil is rallying. You've got UB40 down about 16. Gold is up 92. The shifties are celebrating. You've got the Hunt brothers out there. Silver up almost $3. It was up another couple dollars, I think, just a wee little bit ago. And then volatility's still pretty strong, man. Volatility futures up 3 cents. Well, now they're unchanged, but volatility futures at 20. And the VIX, the old VIX, only down 65 cents on the day. You've got the VIX at 1964. And so again, if you are a premium seller, which you probably are, if you're hearing these words, if you are on the Tasty Live network and you're hearing me say these words, you are probably a premium seller, right? If you're not a premium seller and you're on the Tasty Live network and you're hearing me say these words, welcome aboard. It might be kind of like trying to square a circle, but give it a shot, man. Like, give it a shot. You never know. You might find yourself a little winner or two. And so, but VIX at 19, VIX at 20, I mean, those are really, really good numbers to sell some premium. So, all right, what I want to do today, though, I want to do a little Walmart earnings. I mean, Walmart, guys. I mean, look at this thing, man. Up to 126. I mean, it's down a couple of dollars today, but it's doing pretty well for itself. And so maybe we'll do a little Walmart earnings today. They're in the morning. Thank you, Josh, for bringing that to my attention. And then we'll take a look at a couple things going on in the portfolio right now. And then, of course, I want to see where you guys are at, man. Like, I want to see what is going on in your neck of the woods. I already see you guys, man. Look at Sam L in the house. Rodrigo is here. JT is here. Night Moves even showed up. Man, old Two-Face is here. Man, look at this stuff. Ranch in the house. M. Gupta's here. Griffin Jones, man. Ash Finn is here. Man, awesome stuff. And Wolf is even here. Man, it's unbelievable. So, all right, let's go ahead and a couple of things. So, number one, if you look at oil, so let's do this one first because this is going to be the one adjustment I think we are going to make. I don't know that we're going to do too much with the other positions. It's going to be very much kind of a do nothing type of day with the different trades that are going on because a lot of them are working. I mean, AMD, we're still hemorrhaging some cash in there, but it's been worse. And so let's go ahead and let's see. Look at Josh, man. Look at Josh. Look at Josh scouring the chat for questions. Look at that, Josh. Wow, Josh. So you're going to help me with the surprise and the delight section. And so I appreciate that very much, my friend. And so thank you very much for that. All right, let's go to, let's see, MCL. We've got oil up to 64, almost 68. So we have a 55, 62.5 strangle. And you've got the stock at 64.90. Now, just yesterday, obviously, when oil was a couple dollars lower, it was just underneath that call strike and all was right in the world. Like everything was looking good. It was strawberries and sunshine. Obviously, Florida sunshine, organic strawberries, clearly. But now today, things have changed. Like today, all of a sudden, oil up almost $3. I think it's time to adjust to this position by maybe rolling that put strike up. And so we've got 27 days to go in the March cycle. And so we're kind of getting around that part where we would roll it out anyway, just from a timing standpoint. I mean, 21 days to go seems to be a good marker, kind of line in the sand for, all right, it's undefined risk. I probably want to extend the duration. Let's bring in some more extrinsic value, kind of soften the Greek exposure, like all the things we've been doing for many, many months, years now at this point. But right now, even though it's 27, we're not quite at 21, we have now been tested and blown through on the call strike. And so let's go ahead and maybe roll it out in time, but at least roll the put strike up to kind of maybe straddle this thing off and kind of go with the shared strike at that 62.5 level. So let's go into MCL here. So if I go into MCL and I go to the trade page, the first thing I'm going to do is now you could do this in one fell swoop. I could obviously roll it up and roll it out together. But for the purposes of understanding and instruction, I'm going to do these things in pieces. So the first thing I'm going to do is I'm going to roll the strike up. And then we'll kind of survey the landscape together and we'll figure out if it makes sense to roll it out in time as well. Again, if you're doing this at home and you're doing this yourself and you've been trading for a while, you would probably do all this, in the same transaction. But I'm not going to do that, just to make it a bit clearer, kind of, what is happening when, where the benefits are coming in terms of extrinsic value from rolling up the put strike, where the additional benefits are coming from rolling the whole thing out. I think it's helpful to compartmentalize where the benefits might be coming from. A gimme here and a gimme there, and the next thing you know, you're talking about real money. So 55 put. If we roll this thing up to, let's just go to the straddle, man. If I just go to the 62.5 put, I'm going to pick up $1.71 for that. Now, I mean, an oil straddle, it's going to be a little slippery. Pun intended. Like, it's going to be a little something. Like, you've got to make sure you've got all your ducks in a row and you kind of know what you're signing up for and you're ready to potentially manage this guy more aggressively as, the underlying asset moves around. And oil is quite slippery on a daily basis. Pun intended again. But if you go to the 55 to 62.5 roll up on the put, looks like we're going to get about $1.70 for that. So I like that. Let's do that first. And then we'll take a look at what it might be to roll from March out to April. And we may have to change kind of underlying assets that the option expiration is pointing towards. When it comes to futures, we've done this many times before in the past, but you've got to make sure, am I still trading J or am I trading K now? Like, what am I trading from from an expiration standpoint? So let's go ahead and let's do this first. We're going to roll up the put in MCL from the 55 strike to the 62.5 strike. So we will then have on a straddle in March in MCL. So I can't get filled at $1.72. Let's try $1.70. All right, so we got filled at $1.70. Okay, so there you go. So filled at $1.70. So now I'll just go back to the positions tab just to make sure we're all on the same page here. I have a 62.5 put in, a 62.5 straddle in MCL, and I've collected a total of $5.35. I'm still down about $1 on the trade, which is essentially where I was before I made this adjustment, but this is kind of where we are now. Okay, so now let's take a look at what would this look like if I rolled the whole thing out into the next cycle. Now, before I go to the roll page, let me just take a quick little peek. Yeah, see, this is kind of what I thought might happen. So if you look at the little silver dot here, you're going to see that is where we are. We are currently in the March cycle. If I roll from March out to April, let me even grab a different color here. We'll grab magenta. Since it is a magenta Tuesday, magenta Wednesday. It's a synthetic Tuesday, but it is indeed a Wednesday. So happy magenta Wednesday to you guys. You can see right here that yes, the April cycle is the K contract. And so right now, we're trading the MCLJ contract, but the April cycle is going to be using the K contract to determine the moneyness of the options. Like, that is the underlying asset that the K, or the April cycle, I should say, is going to expire to. It's going to expire to the K contract. So obviously, for moneyness purposes, out of the money, at the money, in the money, it's going to be using the K contract, not the J contract. And so the J contract right now is at 64.98. Well, let's take a quick little gander at MCL K6. That's going to be your K contract. Okay, so you can see it's not much of a difference. It's a little bit of a difference, right? We're only talking about 30 cents, but it's something to be aware of. I mean, sometimes it's a bigger difference than others. It depends on the forward curve. It depends on the futures curve and the degree of, contango or backwardation that might be existing in that market at that time, which is a function of, the cost of carry of the product. Cost of carry in terms of like dividends and stuff for financial futures. Cost of carry in terms of like storage and insurance for like oil and gold and things like that. And so for oil right here, it's only about 30 cents. The K contract is 30 cents lower than the J contract. And so when I go to roll this to the next cycle, I don't know that that's that big of a difference that it's going to cause me to adjust my strikes. I'm already in the straddle. I'm probably just going to move these guys out to the K cycle, the April cycle, and stay at the 62.5 mark. I think that makes some sense. If you have a strangle and you're trying to kind of situate where your strikes sit relative to the at the money price, then it might make some sense to do some adjustments around the edges. But for us right here, I'm kind of thinking we just let's go from March out to April, and let's just see what happens. I'm guessing we're going to be able to get a couple bucks for this roll. If I highlight my position on the positions tab and I right click and I go to roll expirations, yeah, I'm going to get $2.50 for this. And so I'm going to have the same strikes. Again, the pricing is a little bit different. In fact, it's more favorable for me because 64.78, the K cycle, is 20 cents lower than the J cycle now. And I'm bearish oil. Like, I need oil to move lower. And so this is kind of greasing the wheels a little bit for what we need oil to do in the first place. And so that's obviously going to be a positive thing. But I'm most interested here in the $2.50 to, again, improve my break-even point, especially on the upside, because that is where I'm getting hurt. I'm not as concerned about the downside, at least not right now. Now, that could change, tomorrow, the next day, in 25 minutes, whatever it might be. So let's go ahead and let's roll this guy out to the K cycle into April. And that'll be that. So, all right, no takers yet at 252. Let's try, we'll give him a few. Oh, wait, I don't want to do that. We'll give him a few pennies. Let's do I'll do 249. No takers at 249. Okay, all right. So let's do, 247, I guess. I think we're going to be improved whenever we get filled on this. No, we didn't get improved. All right, 247. So somebody got us there for a couple pennies, but that's okay. It's all for a good cause, I suppose. I mean, those HFT guys, like they gotta eat. Like, they gotta pay the light bill too, right? I mean, a couple billion here, a couple billion there. I mean, these guys are struggling. So anyway, MCL, there you go. So MCL, we made the adjustment, and that's that. Now, let's go ahead and, so a couple of things. So, and I think we're going to be able to do a lot of these together because it's a very, very similar story. Even though the market is selling off right now, I don't know if the Iran thing is official now or whatever. A lot of times, war is oftentimes very bullish for stocks. I mean, historically, you'd have to look at the tail of the tape, and I could be completely making that up here in the moment. But I think I remember war historically is a bullish thing for stocks, which is a bit interesting because, generally speaking, if we think about just how stocks and how risk assets generally behave, they don't like uncertainty. Right. I mean, this is what we do every day. This is what we trade every day. We trade volatility, right? Volatility, uncertainty, essentially synonymous for our purposes in this illustration right now, right? Volatility goes up. We sell that volatility. Volatility goes down. We hope to benefit from that volatility contraction from having sold the volatility before. And then if the volatility gets low enough, we consider buying it with, long spreads or even long volatility products or what have you. But generally speaking, there's a consistently reliable relationship in the marketplace between market prices and market volatility, right? When market volatility goes up, market prices generally go down. And when market volatility goes down, market prices generally go up. Now, there's all kinds of reasons for why that relationship exists. There's mathematical reasons, there's intuitive reasons. From an intuitive standpoint, it's really no more difficult than just thinking in terms of, hey, if I'm a risk-averse investor, which most investors are risk-averse, and a lot of the financial modeling that exists in the marketplace either assumes risk neutrality or risk aversion. If investors are risk-averse, they dislike risk. When risk goes up, volatility increases, uncertainty increases. What are they very likely going to do? They're going to move their assets out of risky assets, stocks, gold, crypto, whatever, and they're going to move it into safer assets. Could be cash, could be bonds, could even be gold again. Gold is an interesting thing that can oftentimes wear either hat, risk on or risk off. But generally speaking, you see this flow of cash, of assets, of capital moving away from risky assets into more safe haven plays like a Walmart, maybe a Starbucks, for example, right? We've seen all these things before. And so when volatility goes up, generally speaking, stocks tend to go down. That's a very reliable relationship. Well, when war happens, U.S. with Iran, Russia with Ukraine, a lot of things, the knee-jerk reaction of the market can oftentimes be negative because of the increased uncertainty in the world. That is potentially what we're seeing right now. NASDAQ's only up 170 now. S&P's only up 27, 28. But I think longer term, war tends to be more bullish, which is a very, very interesting phenomenon, in my opinion. Let me know, what do you guys think war is? Let me know in the chat. What do you think war is? Is it bullish or is it bearish, and why? And put these in 2 separate comments because the algo would absolutely love that. Let me know, is war bullish or bearish? And then in a follow-up comment, let me know why you have taken the position that you have taken. Anyway. I digress. And so, all right. So, MES, MNQ. Let's see. MES, MNQ, Amazon. Right. We can cover these three together because these are all the same situation, essentially. MES, we have a 67.50 put. It's at 68.90. We're not quite at 50% of max profit. We do nothing. It's out of the money. It's working. It's got positive theta. We do nothing. There's no reason to do anything there. MNQ, you've got the stock at 24,900. We have a 24,250 put, right? We're up a little bit on the trade, but not too much yet. Again, positive theta. It's out of the money. The strategy is working. Don't do anything. Just leave it be. I wouldn't manage it early either, in my opinion. Right? These are situations where doing nothing can be hard to do. It's much harder to do nothing in the face of AMD is crashing, Amazon is crashing, SLV is ripping everybody's faces off. That's much harder to do nothing than I've got a winning trade. Do I make a little bit of money now or a lot of bit of money later? I'm not exactly sure what I want to do. When it comes to doing nothing, that is a much easier scenario, of course, but still, I think that, if you have a profit target and if your game plan is to maintain that profit target, 50%, 40%, whatever, then stick to your guns, man. Stick to the plan and let the strategy do the heavy lifting. You don't need to go in there and do anything special. Just let the strategy do all the heavy lifting. Your job is only to just, when the workout is done, you just grab a few pump sets in your favorite mirror with the good lighting, and then you're out the door. That's it. That's all you've got to do. And just kind of let the strategy do all the compound lifts. And so MES, MNQ, we do nothing. Amazon, similar situation. We're finally in a situation where this 200 put is out of the money. So we're right at about a break even on the trade. So we do nothing. Again, lots of theta. Got $12 of theta in Amazon. Got $21 of daily theta in MNQ. Right? We've got $11 of daily theta in MES. These are all classic do nothing situations where it's actually working. And so it's fairly straightforward to do nothing there. And then lastly, that's MES and MNQ and Amazon. GDX is actually very similar. You've got the stock at 102. We're just barely beneath that short call strike at 103. And so we'll sit tight. We'll do nothing on this guy too because it is working. Hood, similar type of thing. Stocks at 75. The strikes are 70 and 105. Again, nothing to do. SLV, stocks at 69.70. Strikes are 59 and 100. Same type of thing. Now SLV is a little bit different. If you look at GDX, you can see we're 887 and the mark price is 795. We've made about 90 cents on the trade. And I've made some adjustments on this trade. And so how long am I going to hold this? Probably not too much longer, but we'll sit tight for right now and just kind of let this guy play out for a couple extra days. Hood is a similar situation with SLV though, because we have, we're up about $1.30 on the Hood trade, and we're up about $1.30 on the SLV trade. Now for Hood, we sold the strangle for $4.95. So I'm looking to cash in $2 or $2.50 out of this trade. And so I'm going to sit tight on this guy, as it stands right now. SLV is a little bit closer to the profit target because we sold it for $3.23, and I'm only looking for $1.60. I'm only looking to take another 40 cents out of this trade. And so I'm going to sit tight and do nothing. Some people might look at that and say, Jim, you're close enough. I would take it off now. You could certainly do that. You've got to blaze your own trail forward through the forest, of course. I like kind of sticking with my profit targets and not necessarily, kind of trying to usurp and override the process too early. And so I'm going to sit tight, but I would respect people for going in and closing it now. Just remember, if you start closing things earlier and 50%ers become 40%ers, you're going to need higher probabilities on the back end to make that work. You are going to need an even higher pop on the back end to make the numbers work and to move forward towards whatever goals you might have for yourself. And so I think that's all the main stuff I wanted to talk about today. Boeing's getting smashed. So that long call spread is not looking too good. Tesla's basically unchanged. Long call spread is not looking too good. Look at Snapchat up 10 cents. This thing is ripping. If you need a real-time example of a face ripper, look at Snapchat. Up 10 cents? When's the last time Snapchat's been up 10 cents? Their IPO? This is some good stuff, man. So we're in good spirits with Snapchat. But I think that's pretty much it. And then AMD, that's a classic do-nothing situation. But that's not the good type of good do-nothing. We just saw the good do-nothings. It's working, it's this, that, and the other thing. Okay, we do nothing. The AMD do-nothing with the advanced money destroyer, not exactly the good type of do nothing. This is more of the, man, am I going to light another stack of cash on fire type of do nothing? And so I still think it's the move. And so famous last words, of course, we'll see where the wind blows us from here. So there's AMD. and there's a commentary pretty much across the board. And yeah, all right. So I see you guys in the chat, man. And look at Josh. So Josh is bringing up. Josh catch that voltage's question and brought it to my attention. So thank you very much, my friend. So catch that voltage, a surprise and delight in the middle. Catch that voltage says, I'm having a losing streak since last week, Dr. Jim. Everything I've been doing is basically wrong and opposite. How do you handle such dry red days in your trading journey? Yes. Okay. Great question, my friend. And, we've all been there. So first and foremost, I mean, you guys have seen, even on this very show, plenty of dry spells, plenty of red days, plenty of losing streaks. I mean, for those of you that have been following for any length of time, you've seen all this. You've seen hot streaks and you've seen cold streaks because they're both going to hit all of us, of course. So how do I handle this? Well, a couple of things. I'll give you a couple of thoughts. So number one, even just zooming out from this, here's one thing I started doing. I started doing this, I'm going to say maybe 3 years ago. So keeping a trading journal can be really, really time consuming. So I don't do that. Like I'm talking like pen and paper or even like mouse and Excel or even like, AI agent with AI slop, like however you want to keep your trading journal, right? It's all kind of a huge pain in the keister. Now, maybe not the AI stuff, but then it's all going to be wrong. And so, it's gimmies and gotchas, right? So in terms of like records of trades and stuff, I tried doing that before. I think it can be really, really helpful if you're brand new and just getting started. And even if you enjoy doing those kinds of things, but it is a big trade-off with the time commitment. So I don't do that. But one thing I have started doing is taking voice notes, like just hopping in a voice memo, and like on a good day, on a bad day, on a neutral day, whatever. I want to spend 5 or 10 minutes and just kind of just stream of consciousness, just share my thoughts about how I'm feeling, what's happening in the account, what's happening with the positions, whatever, and how am I feeling about those things. And I'll tell you what, it is so eye-opening to go back some number of weeks or months later and listen to those voice memos and try to get a broad swath. Like try to get everything. You like get it right now there, catch that voltage, get it during the dry spell, get it during the red days, and then get it again during the green days and the hot streak. It's going to be very, very different. And then you can pick up on little patterns and little things that are actually happening like inside your mind, which in my opinion don't always show up on like in a paragraph or some Google Doc or whatever, because you don't have the the pausing and the nonverbals and the inflections in your voice and things like that, and the excitement or the non-excitement and the sadness and things like that. So I would do that. I think that can be helpful for you or everybody else. But in terms of like a practical thing when it comes to how do you handle a cold streak, the same way I would handle a hot streak, honestly. It's business as usual. It's BAU. It's business as usual. The more often you can tap into this BAU type of mindset to where it's like, man, hot streak, cold streak, they're both going to happen, right? They're both going to come for each and every one of us. But as it happens, just say, what am I trying to accomplish? Like, what am I trying to accomplish and how am I trying to get there? What do I like to trade? What are my favorite strategies? What are my sizing parameters? Maybe just go through your checklist. Like, all right, looking back at some recent trades, was I oversized? Was I undersized? Like, did I kind of stick to the bread and butter? Or did I start kind of veering off the reservation to where now I'm doing like focaccia bread when I don't even like focaccia bread? Am I doing the gluten-free, dairy-free, fun-free stuff? No, maybe I should go back to the tried and true. Maybe I should go back to the Sara Lee. Maybe I should go back to the glyphosate stuff, right? It's delicious. We all know it's delicious. So maybe that's what's missing. And so that's what I would do. BAU and kind of go through the checklist and say, man, where am I at? What could I potentially be missing? And I would do the same thing on a hot streak, because the hot streaks are very different, because now it's greed and it's overconfidence and it's pride, right? But on a cold streak, now it's like, man, it's fear, it's anxiety, it's potentially sadness, right? It's a lot of things. The other side of the spectrum from an emotional standpoint, but I think they both lead you to the same destination, which is business as usual. So hopefully that helps you there catch that voltage. But I appreciate you, my friend. I appreciate you so much. Let me see here. Let's go ahead and here we go. Where are we at? I'm going to surprise and delight somebody else. I'm going to surprise and delight somebody that put this in while I was surprising and delighting the first person, thinking there's no way that I'll get a second surprise and delight because I'm too late. But no, we're going to do it. So JT says, Fear causes steep sell-offs. Capital flows to risk-off assets in the short term. Production increases. Societies feel less divided. Sentiment improves. Cash flows back to risk-on assets. The cycle repeats. Oh, I think you were talking about maybe war potentially. And so I actually like that summary right there. And you're right. The cycle does repeat. Right? It's this constant back and forth between risk on and risk off. It's this constant back and forth between capital flows, that essentially they do follow this kind of circle, right? They kind of follow this circular fashion from risk on to risk off, over different periods of war and heavy production and industrial booms and all these kinds of things. And so thank you there, JT. I appreciate you very, very much. And so let's go to the beginning though. I see a couple people. Well, actually, a couple people just JT say bullish long-term, bearish very short-term, which is essentially what you said there in your comment. So thank you very much. I see Patrick says war increases IV means prices for think that are sensitive to it will move more dramatically in the trend direction unless the trend reverses for fear interruption plays like oil. And so it absolutely is going to increase IV. Today's a great example. Wow, look at EME S&Ps only up 15. Wow, the market's green, but volatility, look at volatility unchanged. Like volatility unchanged, you've got the VIX at 20, you've got volatility futures at what, 20 and a half now? And so, IV increasing when there's uncertainty in the world, like that is quite literally the definition of implied volatility. Like remember, volatility and uncertainty essentially synonymous, right? At least in this context, and even in most contexts, I would think, from a financial market standpoint. And so when uncertainty ticks up, it makes a lot of sense that IV is going to follow suit, like regardless of what the market might be doing, up, down, or sideways or whatever. But implied volatility increasing, obviously as premium sellers, like this again is what we're training for. This is why you're doing all your sets of blood flow restriction on buys and tries, maybe even some quads, maybe even some calves, if you really like the pain trade in the gym. And so this is why we're doing all those things for this. But all right, let's go back to the beginning. Where are we at? Man, I appreciate you guys. Oh, yes, Matt Johnson. I see Ashman. I see you, my friend. Matt Johnson says, what about Walmart earnings? That's correct. I almost forgot about Walmart earnings. WMT. All right. Guys, again, I don't really think, I don't think we need to use, we don't need to overthink this. I really, really don't think we do. Walmart, what are they going to do? They're going to give you all the basic necessities of life. They're going to give you the basic necessity of life that are sold at such a low quality that you're going to be back for more 4 to 5 days later when the first round breaks. But still, it's a great business model if you think about it. If you think about the longevity of that company and that business model, they've obviously got a little bit of staying power. So Walmart at 126, I'm kind of thinking we play this thing to the upside, man. You've got war, you've got uncertainty, things like that. You got to be bullish on Walmart. How can you not be bullish on Walmart? So I'm kind of thinking, I think we just go with the tried and true. You got the stock at 126. What if I did a 126, 132, 138 butterfly? What is this, maybe $1.20? $1.26. Look at that. Didn't even look at it before the show. Had no idea. And I actually got it right, which doesn't usually happen. $1.26 for a $6 wide butterfly. This is a really, really, really cheap way to take a directional shot. And this is why I love the expected move butterfly. And obviously it scales with price. If you're doing this on a $500 stock, it's not going to be $1.20. It's going to be $3 or $4, right? You're doing it on a $5,000 index like S&P 500 or SPX or whatever. It's going to be $5 or $6 or $7. That's obviously the game that you're playing. It's going to scale with the price of the underlying instrument. But with Walmart at 126 here, this is really, really nice from a cheap directional shot standpoint. I can take a shot to the upside. It's only going to be $1.24, $1.25. If I'm right, then we could potentially make $1 or $2 out of this trade. If I'm wrong, I'm out at $1.24. And so it's really not too bad from a risk return standpoint. Not to mention, as premium sellers, normally we're risking 2 to make 1. We're risking $1.50 to make $1. Like we're used to risking more to make less in exchange for higher probabilities. And so that's typically the trade that we're making. And so to be able to diversify strategically a little bit into some things that have the opposite risk return framework, where it's actually I'm risking 1 to make 2, or I'm risking $1.50 to make 3, or whatever. That's really nice from a strategic diversification standpoint. And so 126, 132, 138 is going to be my butterfly play for Walmart earnings that are in the morning, I believe. And yeah, so there you go. So if you were looking for a trade to fade today, man, I got you guys covered. Don't you ever think for a second that I don't have your back, because I got you. And so let's go ahead and we couldn't get Phil at $1.30. Oh man, it's up to $1.36 now. Wow, they're really pumping it. Okay, $1.32. We went in at $1.36 and we got filled at $1.32. Okay. So okay, beautiful. So let's go ahead and let's do so we did Walmart. We're playing Walmart to the upside. Let's go back to you guys. All right, I see Matt Johnson. Thank you, my friend. Rodrigo's in the house. What's going on there, Rodrigo? I appreciate you, my friend. Best time for Tasty Live, man. I appreciate you so much. Sam L's in the house. Long Valentine's weekend is over. Love was in the air. Discipline was not. Luckily, Doc is here to lead us somewhere. Yeah, I don't know where that is, but at least we're doing it together, man. We're 100% doing it together. Doc, are we officially ending the Dabbot era? We're in this together, full support mode, man. I hope so. I hope so. And so I'm gonna try to whip some things into shape over the course of the next I don't know, man. Couple weeks, couple months, couple years. I mean, I don't even know. I mean, we're just kind of putting one foot in front of the other at this point and just kind of seeing where it leads us. And so, the nice thing about being, in the ooey gooey marshmallowy phase of, physique transformation is it doesn't take much to actually see progress. And so, if you can just not totally go off the rails, it's like, I'm going to move forward. I'm going to make a little bit of progress here. And so that's obviously one of the gimmies with, kind of being really far away from where you're trying to go. And so Samuel says, no more chips, vibe meals, or kids' leftovers. Some of us are long-term investors in comfort calories with diamond hands. Yeah, that's my story right there. Like, you just perfectly encapsulated my story over the last couple of years. I mean, throw in, a torn meniscus, throw in, a broken big toe, if you guys remember, right? And throw in a whole bunch of laziness and excuses. And there you go. That's it. Ash Finn's in the house. Carvana earnings trade. Carvana? We're doing Carvana now? Man, I don't know, Ash. Is it CVNA, I think? Yeah, I don't know. Carva 358? Isn't it a total ripoff? Guys, help me out here, right? I need to know, and obviously the algo needs to know. Isn't Carvana just a total ripoff? Or isn't the premium that you're going to pay, isn't it just like astronomical? I mean, are people really valuing convenience that much? And maybe they are. I don't know. Like, that's kind of a bit of an open-ended question that I don't know the answer to. Like, are people really placing like just such a price tag on being able to avoid the car buying purchase that they're going to pay an extra, I don't know, 10%, 12%, 14%, and over and above what they would pay if they went into the dealer and just kind of paid whatever the dealer said that they had to pay, which everybody knows that number doesn't even mean anything. Like, you can easily get 5 to 10% off of that just by standing still, just by literally not saying anything. They'll come down 10%, right? And so it's like, man, Carvana, they're taking a whole different angle on that thing, but apparently it's working out pretty well for them. I mean, I'm going to pass right now because I've already got so many things happening there, Ash, but good luck, my friend. So obviously I will be bearish on Carvana if you're looking to make some money to the upside. So night moves in the house. Energy stocks are playing catch up. They were kind of dogs last year, and now's the time. I mean, if you got war with Iran, I mean, this is definitely the time. My wife is texting me. It's like, hey, what are you doing? Man. Anyway, so Wolf, she is texting me. I don't know what she said. She didn't say that. So Wolf says, Dr. Jim, she'll have to get a talking to if she says that again. Wolf says, Dr. Jim, I saw your X post from over the weekend. We know Amelia picks your stocks, but is she also responsible for precisely weighing your food as you begin your journey to 2% body fat? She's not responsible for weighing my food. She's more responsible for like sneaking me like Hershey Kisses and stuff. Like, she's good, man. She is my partner in crime. Like, I mean, she'll get daddy some peppermint patties. Like, she'll go grab them out of the pantry when nobody's looking and then sneak them over to me. And, nobody's none the wiser. Right. And so, yeah, she's got my back 100%. Sergio's in the house. What's up, Sergio? Appreciate you, my friend. Finn West is here. Man, great day to be with you today. You too, my friend. I appreciate you so much. Hey, Wills, what is up? Dr. Jim, time to light some sacks of cash on fire. Carvana earnings tonight. Vinny Batista markets, but you've traded worse. Yes, I have. Vinny Batista markets. I can't do this, guys. I know I got 2 votes for Carvana now. I don't think I can do it just because I have so many things going on, but I'll take a peek. I mean, what if I did a butterfly in Carvana? Man, look at this. Do I have to play this to the downside now? Look at these markets, man. Yeah, these are some Vinny pits if I've ever seen them. Look at that. Look at that 352.5 put with a $2 wide market. I mean, are we trading Wolf? Like, what are we trading here? $2 wide market. That's crazy. Those are like MNQ markets. That's bad, man. What if I did a downside butterfly? I'm just curious now. What if I did a 355, 310? That's 45, and then it would be what, 265, I think. I'm just curious. Is this astronomically high? I think it probably is. $10? I mean, I did make it $45 wide, but that's wow, $10 wide? Or $10 is my cost? What if I did like $35 wide? I may not end up doing this, but I'm curious now. $7? Yeah, I can't. I gotta pass, man. I gotta pass on this. Even for me, I think we found the limit. It's mainly because I've got too many things in the portfolio right now. We got like 16 or 17 positions, and I get to a certain point where I'm losing things and it's slipping through the cracks. And I really want to give you guys, a good experience where I don't feel super rushed on everything, and it just becomes a shotgun blast across the board, and nobody learns anything along the way. And so I'm going to pass on Carvana, but again, I would clearly be bearish. I would imagine the statement of insolvency is going to come tonight. And so good luck to you all. And if you want to make some money, obviously, I would just buy out of the money calls. Rodrigo, Dr. Jim, great to watch your show. Appreciate you, my friend. N1C is in the house. What's up, N1C? BDH is in the house. What's up there, BDH? Man, Samuel. Hey, Algo. Adjust Doc's macros and block the snack traits. The Dad Shredder project is officially alive. Yes. And so I'm excited, and it's going to be good. Night moves. What are vibe meals? Vibe meals. Oh, you got to ask Sam L. He can help you out on that. And so Too Late Jake in the house. Good day, Dr. J. Today was my best zero DTE day so far. Beet juice and blueberries for everyone. Man, what's going on? That's what I'm saying right there. Right? I mean, this is it, right? We got the whole day planned. Your beet juice in the morning for energy and health purposes. Your blueberries in the afternoon for what? For memory, for longevity. And then nighttime, evening, banana natties to shut it down. Like, this is it, man. You're going beets, blueberries, and banana natties. Congratulations, my friend. Good job on the zero DTE trades today. So Ranch is in the house. What's going on there, Ranch? Appreciate you, my friend. Thank you. Old Two-Face, I'm here to light some stacks. Cash on Fire and the Algo. There you go. I gave you guys a Walmart trade. I had to pass down the Carvana stuff, but I gave you guys a little Walmart action. And so there you go. Alaska Synthetics is here. Good day, bro. What's up, my friend? Night moves. Jim wearing the short green and white shorts. Leg day. Yes. Those are my go-to shorts. Those are 100% my go-to shorts, my training shorts. The green and white guys are 100%. No, we did chest and arms today. So today was beach muscle day. And so JT is back. What's going on there, JT? Griffin Jones for the Algo, of course, my friend. Thank you so much. Rodrigo, Doc, what do you think of April 10 SPX Iron Condor 71 6300? I'm leaning a bit short. Let's take a look at it. So SPX, you're thinking about doing what expiration? You didn't say, but I'll assume it's March, 29 days to go. So you're thinking about a 6300 put. Okay, so this is super, super far out of the money. 6,300, and you're going to buy a 6,200, 100 points wide, right? And then you're going to sell a 7,100 and buy a 7,200. Again, I'm assuming it's in March. You're going to be a little bit short. Okay, so a couple of things. So number one, you're only collecting 22.80, and you're collecting $23 and you're risking $77. So you're at about 20 to 23% of the width of the spread. In my opinion, that's a little bit too low. Like, I actually would like to be closer to like 40%. And so I would be much, much higher than this in the credit collector. Now, the only way to get that is to move the strikes in closer. Like, you won't be able to get that and super high probability, which you see right here. Your pop is 68%, which I'm actually surprised. I thought it would be higher than that. But the pop is 68%. That's decent. It's okay. I mean, it's not that uncommon for Iron Condors actually to have pretty low probabilities, oftentimes around 50-50. So now that I think about it and process it verbally, this is not that bad, actually. The problem is the credit's too low. And so in my opinion, man, I would want, because if this, obviously it looks like it's going to work, you got plenty of room, and a lot of times it will work. But the times that it doesn't work, it's going to sting a lot. And so I would much prefer, I would get at least over $30, at least over 30, somewhere between 30 and 40, and you can play around with, what that looks like. But obviously with premium high, I mean, this is, the time to do that. And, if your account size can handle it, instead of an Iron Condor and SPX, maybe a Strangle and SPY. And so that would be an even higher probability play. Lots more you can do from an adjustment standpoint and just an all around better trade, in my opinion. And so, but I got to go, man, we're done. I can't believe it. That's unbelievable. You guys have no idea how fast it goes, but I appreciate you guys, man. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Shedding my ego, watching my tongue. If it ain't kinda necessary, then I will be done. I am human, and I am flawed. My skin is thin, and sometimes I bear my claws. Forgiving me, forgiving you. We're all learning to live in truth. All I can do is what would love do? What would love do? Love will love you. What would love do? Love will love you.
Hey everybody, Tim Knight, and we've got a kind of an interesting day on our hands. Just to recap, the market was a little bit weak this morning, just a little bit, and then right when the cash market opened, it was just flying high. It was just up, 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 up. Hundreds of points on the NQ, everything was green. And in my own portfolio, I came into the day pretty light, about 72% committed. And what I mean by that is like 72% of the cash I used, and I was using no margin. So when I'm like, going crazy, the commitment level is like 190%. But it's pretty light, 72%. I trimmed it back a teeny bit through the day. But a couple of hours ago, I started getting ready to push into more positions. And I once the minutes were out, and the market didn't move that much when they came out, it just hung out for a while. But once the minutes were out, I figured, okay, that's kind of the risky point of the day, and I'm going to start pushing into these things. And so as I stand here now, I've got something like 35 positions open. I've gone from like 72% to like 112. Still not crazy, but more aggressive. And it's working out pretty well so far. The RTY, the small caps have gone red. The YM has gone red. And the ES and the NQ are up still, but 0.2%. So it's getting some nice slippage there. And crypto continues to sink. As I made mention, my only long position is BITI, B-I-T-I, which is the inverse of Bitcoin. And I augmented that earlier today because I think Bitcoin's slowly breaking down again. And so BITI is working its way higher. I've got a little bit shorter list than usual today. Let's thumb through it. This is the diamonds, and it's trend line is held. And it's going to take a trend line break to really get things cooking to the downside. It tried to push its way back above its breakout point. So this horizontal here, we broke out above it here, uppity, uppity, up. This is when Bond did our 50K screech, and then we fell, and then we found stability on Friday and on Tuesday. That's what we talked about yesterday. We found stability right there to the penny. And then earlier today, it looked like it was going to push back above 50,000, but it's kind of stalling right now. And so it's basically unchanged at the moment. But as I say, that trend line is key. The spider, SPY, is up 0.22%. And it has just been rambling around for literally months. A lot of big indexes have net gone nowhere for 5 or 6 months. There's just no catalyst to make them resolutely bullish or bearish. And so there we are, kind of in the middle of the range with a lot of sweeping motion today, not just a lot of smoke but no fire. Now the IWM has been kind of my day trade instrument of choice lately, and it's up maybe 0.1% right now, but I shorted this in size early today, and it's done pretty good. But here again, as with the diamonds, we want to see a failure of that trend line, and of course a failure to push past this gap. And the cubes, tech stock land, these are up not even 0.5%. You can see that long shadow, that is that skinny line above the body of today's candlestick, showing that it was much stronger earlier, but it's given up most of that strength. And we're still range bound here. This too, for months and months and months, has been just grinding around with no clear direction as people try to figure out, what happened? Where's the next NVIDIA? And it's just not cooking. The sectors that were celebrated as like the next big thing, and you can go back for the past few years, 3D printing, gene editing, the gig economy, and of course the biggest of all, AI. And they one by one just sort of flame out, and they turn and cannabis, that was a few years back. Just look at anything James Altucher's been pushing, and that's usually a hot sector at the time. And those just have all sort of fizzled out. So the last man standing, and it's a big one, bigger than all the others put together times 100, is AI. And that semiconductor is going to be affected, and all the infrastructure hyperscaler plays. Within tech, of course, semiconductors are the big one. This was up quite strong earlier. It was in the vicinity of lifetime highs, but it didn't get there. It's still up about not even 3/4 of a single percentage point. And that horizontal there is the key to a prospective breakout. And as with everything else, the trend line here, all of them anchored to Liberation Day bottom, is the key to break for the 1 or 2 bears to join me in this tilting at this bullish windmill. One item I'm keeping an eye on is FNGD, that is the triple bearish on the fangs, and this more pure one, FNGS, which is I believe just 1x positive correlated to the fangs. It's been breaking down, as you can tell, and this is a rather stark shooting star right here, because this was up quite a lot earlier today, and now it's up a teeny little bit. Overseas, we look at EFA, and this is the equity markets outside of North America. They're still rather high, but in spite of their efforts to do so, they did not achieve a lifetime high today. That was accomplished last week. And we're turning tail on this. We're actually negative on this now. So all those individual country funds and South Korea and EEM, also emerging markets, extremely high, but not mustering a new high compared to last week's peak. Here's EWJ, for example, Japan. This is the one I had some success with yesterday because I shorted it in size here and then covered it yesterday. And I was thinking, okay, if it can crawl back up to its gap, I'll short it again. It couldn't even manage that. It got close to yesterday's high and then started selling off once more. So, yeah, the only ETFs I'm in position on is SOXL, which is the leveraged semiconductor. I've got puts against that, and then IWM, as I said, and I think that's it. There's a gajillion little individual stocks, but those are really the only ETFs that come to mind that I'm participating in. Let us turn our attention to Bitcoin. If you've watched me more than like a day, you know that I consider this critical to the atmosphere out there of risk on, risk off across all asset classes. And as I said, I'm long Bitty, which is the only long position I've got. Long-term price prediction on this is 25,000. When will that be? I don't know. This year, next year, something. I don't really, I can't control the time very much, but I can try to measure the price action. I saw that the Trump boys are down in Florida, I suppose, naturally, at the World Liberty Financial Forum or something along those lines, promoting, again, their World Liberty coin. And I saw a clip of the interview, and he, sort of said, it basically implied that Bitcoin and crypto in general for like those who are, willing to live with volatility, like negative 90% stock returns, and sort of derided those who opted not to do crypto as, go buy a municipal bond and have a great time with it or something like that. He also noted 2 years ago, to make the point about the volatility and how Bitcoin always comes back. He said 2 years ago, Bitcoin was 16,000. It wasn't. I am a chartist. I have access to charts. And I looked 2 years ago, and Bitcoin was something like 53,000, which is about 3 times higher than he said. I don't think he was deliberately lying, but I don't think he has an acute memory of sort of where those prices were. It was certainly $16,000 years ago, maybe during the FTX debacle or sometime before. It was a penny back in 2009, which all the crypto guys will tell you if you ever dare question the brilliance of putting money into crypto. But yeah, suffice it to say, if you see the clip, rest assured, Bitcoin is not $16,000 2 years ago. It's about 3 times that much. But BTC now is about 66,000. Futures are down about $1,500. And it's even with, and it was encouraging to me, even when equities were bright green all across the board, Bitcoin made the most obscene gesture to them and just kept heading lower. So I think it's poised for weakness. Although I'm keeping a tight stop on that Bitty I mentioned, just in case. Getting to some equities, just some odds and ends here. As I said, I'm short just a ton of stuff. I literally have lost count. It's maybe almost approaching 40 positions, but a few of them include ARM, again, ARM. Last night, Meta and NVIDIA made an announcement of Meta's going to buy billions and billions and billions of dollars of chips from them for years to come. And so they spiked. Meta went up, NVIDIA went up. For some reason, ARM went up too. That didn't last really, especially with ARM. So ARM is down a little bit. It has respected the distribution top. AVGO, Avgo, this is Broadcom, still hasn't broken down below its pattern, but hope springs eternal in the bearish breast. So we'll just keep an eye on that. BBWI, which is Bath and Body Works, is not drawn here, but let's maybe rough it out real quick. This is sporting a quite nice right triangle pattern. I'm not quite as adept at this for obvious reasons as I am at slope charts, but I'm clumsily trying my best here. So something along those lines is the breakdown of that, the right triangle there. BDN, which is Brandywine. This one also has a pretty nice reversal pattern going on. It's up right now, but I think longer term, it's got good prospects for lower prices. And then CRDO, which is Credo technology. They're also up a little bit, and it's struggling with this data fetch here. Let's change this to 1 year. But you can see what a nice rounded top that is. We're violating it a little bit. We're pushing a little bit into that top, but we can give it some allowance here. You know, we can strictly speaking, the bulk of that price action is what we want to watch out for. And so if we scooch this around just a little to envelop the real price action there, it looks a little cleaner. So yeah, there's CRDO. Our old friend Dell, very important item. This is respected its gap. It's not pushed above that gap ever since it fell below it. And little by little, penny by penny, we're getting closer to that that pattern that's tinted there. And really want to watch for a breakdown there. Dell's not insanely valued from a fundamentals perspective, but my view is that if the whole block of hyperscaler technology starts to sink, Dell will definitely come along for the ride. DraftKings, DKNG, I'm too late on this one. I'm not in this one. It's fallen quite a lot, but a lot of these kind of gambling stocks have fallen into a lot of weakness. I don't know if it's because of the new competition from Polymarket and Kalshi and so forth, but it's down hard. Some other new faces here. DT, Dynatrace. Tremendous top on this one. This is one of the things I was rushing into earlier today. But this has got a big old distribution top like so. DT. Supergroup, you've seen this one. HGSC. There's our top on that one. And we're down a little bit now because we rallied over the past couple of days toward that top again, but I think we'll resume turning away from that and falling. And then another one, Vistra, VST, Vistra Corp. This is an energy outfit, and you can see historically we sort of topped and drop on this, like here and hopefully here. Yeah, so that's the end of the Whitman sampler of shorts. I'm not in, nor have I been in Rivian, but it's a good example of not chasing something. I think I was griping about this a couple of days ago because they came out with earnings and went shooting higher. And I said at the time, tempting as it was, I did not chase it because this gap I thought was important level of resistance. Well, look at what happened. Look how close we got. We got just very, very close to that and then a hard reversal. So we burned up most of that pop already. So good thing I didn't chase that one. Okay, it's the bottom of the hour and we'll just, you know what, I'll just jump to my one and only long just as a farewell. BITI. This is something I didn't even know existed until a week or so ago, but I'm glad it's there and it's starting to get some volume. But as you can see, we've got a nice little inverted head and shoulders on this, and got to stop it right here at 27.45, and fingers crossed, more Bitcoin weakness. So, all right. Anyway, that's it for today. I'll see you tomorrow, and as always, thanks for coming by.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Ring the alarm, hey, ring the alarm. Boys, turn up the charm. Listen up, y'all, get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Nick, we are back. It's still Wednesday, February 18th, 2026. This is the last call on Tasty Live. I'm your host, Chris Vecchio. He's Nick Batista. Nick, it's a messy market in the second half of the day. Stocks are not holding on to their gains. The S&P 500, which was north of 6,900 in the futures market, only up by 0.3% now, 68.81. What the Fed giveth, it also taketh away. Market today was pricing in the most dovish pricing for the Fed cut cycle through the end of next year, as we've seen in 3 months' time. But the FOMC minutes poured some cold water on that since 2 p.m. Eastern. Stocks broadly have turned lower. The Nasdaq's up by 0.6% still, but your Russell and your Dow have flirted with negative territory. They are still just barely in the green by about 0.1%. Bonds may be negatively impacted by some of the news flow out of the Middle East. The U.S. military buildup continues. The Olympics are coming to an end soon, so maybe we have a new bread and circus to distract the American public from the Epstein files. I digress, Nick. We see ourselves with an oil rally up near early, what we'll call it.
Almost $3 here at the high of the session.
4.7%, $65 and change, could be a high close in the neighborhood of the high close that we've seen since July. Gold and silver are bouncing back. Gold up nearly 2%, silver up nearly 5%, copper catching a tailwind too, up 2.3%. The dollar's doing a little bit better today as well. I guess the question that we're still all asking ourselves is what's going on with software? Nick, you could put up IGV on the screen, the software sector ETF. It is having a better day than it's had recently. We're seeing a little bit of a bounce, 1.24% now to the upside, leading the S&P, leading the NASDAQ. Is this a green shoot, Nick? Are we finally seeing the end of the slaughter of the Salesforce, the Adobes, the Intuits of the world?
I don't know if those three are the ones that I'm hanging my hat on. I think you go more towards I like the cybersecurity stocks, maybe ServiceNow. I don't know if I'm going Adobe and CRM, but they certainly look interesting. I mean, the NASDAQ hasn't, it's up a little bit today, but we're, just off the lows that we've bounced off of a couple times now. I mean, middle of last week, as well as like kind of in November when we kind of sold off going into December there, and even into like October when we had that little sell off. This, 25,000 ish kind of range has been kind of the spot. So I am leaning heavier NASDAQ tech stocks long right now. But I don't know, man. We've been selling, the E-minis have been selling off of, 6,950, 7,000 ish has kind of been our top of the range here. I haven't been able to get any juice to the upside in any of these stocks. Maybe these software names are kind of the ones that lead us higher. I still think it's like, your Microsoft, Nvidia, Meta that kind of have to get a little bit of a ground beneath them. But these two, they're kind of in play now as well.
Nick, let's take a look at volatility here. Yesterday, the spread between the VIX 3 months out, VIX futures 3 months out versus the front month contract. Actually, let's just say spot VIX here. So VIX 3 months out minus the spot VIX, that hit a low of only 22 cents. Today, it's back up to 2 full points right now. So the curve is getting a little bit more into contango. As a bull, do you look at that despite today's lackluster price action in the second half of the day as any sort of indication that you should feel somewhat relieved, comfortable even?
Maybe a little bit. Volatility, when we were rallying earlier this morning, you had a 1950-ish handle, I think was 1970 was the low on the vol futures here. The VIX got to 1848 was the low of the session. It felt like, okay, we had a little bit of fear to the downside. It's just another buy the dip, but I don't know, the news cycle, the Iran stuff, the move in oil, I guess maybe it's a little spooky this time, but my biggest question is how many times have we announced the going to war and then actually done it? Like, is this like kind of a negotiating tool type thing where you get a little bit of a spook and then you just kind of blast off to the upside market wise?
I saw a really excellent tweet today from, I forget who I saw it from, but it's a trader who on Twitter. And it was something to the extent of, whenever I play Risk, I always move all of my troops to a space one move away from their capital just to negotiate a trade deal with them for the next 30 turns. It's like, obviously that's very sarcastic.
Yes.
This is a lot of money, right? You're also repositioning U.S. assets away from other priorities should any conflict break out elsewhere in the world. So I don't think it's not for nothing. And if it was nothing, then the market, I think, would be reading through it. Forget the fact that oil's up 4.7% or whatever today. It's the fact that volatility is up there in the manner with which it being up thanks to the news flow. So this morning, overnight, if you're looking at like 2, 3, 4 o'clock in the morning, IVR is still in the 30s, having made that significant pullback at the start of the week. As we've seen in so many recent weeks, it feels like we get into the weekend, there's no attack, the market breathes a sigh of relief, and things settle out by the end of the week. Vol rises again, rinse, wash, repeat. Today's rise, though, IVRs are back in the high 50s. So take it for what it's worth. That seems to be a little bit of geopolitical risk premium coming into the market. I think that anyone worth their salt is probably going to be a dip buyer in stocks on the other side of whatever headlines may emerge in the next few days. But I was serious before about the Olympics ending, right? That's a soft target. So if the U.S. attacks before the Olympics ends, then Italy is a U.S. ally and potentially could be seen as a soft target. And that puts a lot of civilians at risk. So why not wait until the Olympics end?
Oh my
God.
God.
And then
the Olympics are a defense tactic. I didn't think that these angles, I don't think this way. It's good. It's good.
I mean, it's not good. Don't look at my trading the past 2 weeks.
No, that's okay. I mean, you're getting a little help with gold and silver. You think that's kind of war on movement here as well. I mean, you got copper rallying as well. We're sitting at 577 on copper. Is that kind of a part of this narrative to you, or is this just more upside for metals? What do we got on Friday? PCE, which is another big one. I mean, is this all kind of the narrative right now?
You and producer Josh have officially mentioned PCE more than I have organically thought about it on my own today.
Okay.
Which is almost to say that I don't think it matters. Right. The yardstick with which the Fed is being measured by is whether or not they're going to give us a cut in June. And I think with today's minutes, they show us that the burden is going to be high to give us another cut. But it's not outside the realm of possibility that a cut still arrives next quarter. And that psychological framing really does matter because we want to keep telling ourselves that June, the end of next quarter, is going to give us a cut. When we start saying it's going to come in the second half of this year or in the fourth quarter, mentally it changes your risk preferences ever so slightly. So the Fed's burden for giving us a cut anytime before June is going to be exceptionally high. But if this was a war trade kind of day, Nick, it would be gold up, bonds up, stocks down, dollar ripping. You're not getting all those pieces in place. So it kind of leads me to believe that equities are wrong here in their rally. But my question for you is, isn't this Vixpiration related? You know, that was this morning.
Of the two-sided action you get?
Yeah, coming into this week, we were talking, let me explain this morning about, you know, the possibility for greater dispersion trading, which effectively lends itself to two-way trading in the market. But thinking about how, I mean, what do you take about this churn and volatility in this two-way trading?
Sure, I think that's some of it. You also have expiration this week, so you got a monthly expiration, so you typically see a little bit more, you know, two-sided action, a little bit more volatility coming in, so I think that's in play. But I think it's still headline-driven. You know, these software names, I think that's a part of it. They seem to have kind of caught bottoms on a lot of the ones that I have tended to look at. I like to look at like a CrowdStrike. Snowflake is in that group. ServiceNow is another one. So it seems like it's all clear, but I don't know. The move in Microsoft has me in a tizzy a little bit. I've got a lot of long delta there, and I've been waiting for this bounce, and it just has not come. And that's one of the places that I've been. Microsoft and Meta, I've been in the two worst of the Mag 7, I think, to be long. Amazon as well.
Mag 7 has broken down. I asked about Vixpiration because just given the congestion in the calendar that we've seen recently, whereby we had NFP and CPI last week, you might have imagined that volatility was bid up a little bit as a hedge around these macro events, coupled with the fact that the U.S. government's going into a shutdown and this. Okay, so on the other side of Vixpiration, would you see a need for an immediate reallocation of capital into those hedges by market participants, broadly speaking? Probably not. And so volatility comes in today, right? There's there's less demand, or maybe even argue greater supply of vol in the market incrementally, but that's now dying back down. So the fact that oil vol is sticking up, I mean, I think that's the bellwether that we need to be watching here today. You mentioned the Mag 7 names, though. You can pull up the Mags ETF. It's had a really nasty breakdown recently. That's a chart that, you know, near 63. That was holding up for a very long time, really going back to September. So people can be dip buyers here in tech. I have no reason to think that this is a chart that looks like the worst is over. It looks like it's closer to the beginning than the end of any sell-off.
So then you got to be bearish if you think the Mag 7 are going to. I mean, the Mag 7 have kind of stayed up. Some of them have stayed up, and then as a whole have been, you know, they've had their downside move, but have not been as extreme as like the software names. If you have a software type move in some of the Mag 7s, we are significantly lower. Is that what I mean? Like how bearish are you feeling Mag 7s?
It's not that I'm feeling bearish, but given the calendar, it's the second half of February, Nick. Right? This is one of the seasonal bad times of the year.
Okay.
When volatility tends to expand, when stocks tend to come in, it feels like the Mag 7 could, you know, continue to suffer. And so just thinking about the potential value over growth, small cap, mid cap over mega cap, tech fades. Dow Transports today, IYT, if you wanted to look at the US transport ETF, that's up 1.1%.
See, I can't look at these and be like, oh, that's where I'm going to go. You know, I'm going to go to XOM or I'm going to go to RSP. You know, I can't, you know, Caterpillar, you're going to go to, you know, energy names. I can't look at these and be like, oh, that, you know, just because they're going up, the chart is up and to the right, that's where I got to be. I look at a Microsoft, I'm like, oh my God, that's a 20%, 30% discount.
No, I'm much more. I'm like, oh my God, pathetic. Get up. Don't talk to me until you get up.
That's what I'm saying. Oh, you wait until they start having the move, and then you ride the wave. That's probably the smarter play.
I just knowing how my brain operates. If I'm going to take a position on something that's falling, I got to hold on to it for a while because my timing for picking bottoms isn't great. So I'm not going to pretend like I have any sort of edge there. And when I see myself trying to pick a bottom, I go, "No, you dummy! This never works."
That's why you start small, and then you pick multiple bottoms. So it's a bottom here, and then a bottom a couple points lower, and then a couple points lower from there. It's like a pseudo dollar cost averaging. That's how we roll.
You're a braver man than I.
What else is on your mind here? I mean, Bitcoin has been super weak. I have lost all confidence in its correlation to nearly anything. It seems to just go down every single day, or at least kind of chop in this range. 65 seems to be the lower end of its range. Bitcoin futures here at 66.5, spots at 66.6. It's lost. The correlation is completely gone, and I think that's kind of another part of this market. I know it goes to the dispersion trade and not Bitcoin necessarily, but stocks in general. Like we were looking at Apple this morning. Do you know what the current correlation is to the S&P 500 for Apple?
Oh,
Without even
it's
looking.
really small. Yeah, no, it's really small. I think it's less than 0.2 right now.
It's right around there. It's 0.27, which in the past 10 years of my career, I can't imagine a time where it was below 0.5. It was kind of the stock that was, it was every single day. It was Apple was up a couple, market's up a couple. Apple's down a couple, market's down a couple. That was kind of it. And now you've seen that kind of break down a little bit and get a little bit, I know this to the dispersion idea, but does that worry you at all that you're getting a little bit of a breakdown in correlations? You're not having the risk on Bitcoin move. The metals are kind of a new story that are going crazy. Is that a good or a bad sign for markets as a whole to have that kind of correlation breakdown?
I don't think it matters.
No.
Apple itself last year was being punished at points because it wasn't AI enough. And then started getting rewarded because it wasn't AI enough and wasn't burning money like other companies. So It's in this weird place where now we know that Google's taking over its Siri capabilities. They're going to be providing the underlying technology that Apple uses moving forward, which kind of like, Skype missing the first mover advantage and losing to Zoom. How did Apple fumble the bag with Siri?
But maybe they didn't fumble the bag. Maybe because they were late and didn't kind of throw the boat at it, they're, getting the benefit.
They've been investing. They just haven't been able to do it successfully, so they're outsourcing it.
Yeah, and the investing has been lesser, so it's not as.
Do you imagine Steve Jobs allowing that to happen?
Never. This Tim Apple guy, we got to take him out.
Well, so Apple kind of isn't really riding any narrative right now. And if you think that it's simply just a consumer devices company, it's exposed to the higher end part of the market, the K-shape that's on the upward slant, not the downward one.
Mm-hmm.
So it's kind of immune to the broader tech zeitgeist at the moment. How long that continues, I mean, who knows? But does it then all of a sudden, once Siri gets rolled out with Google software, with Google's AI on it, does it then follow Google a little bit more closely and then fall back in line with the broader market, right? Because if Gemini runs into issues and Google starts getting hit because its LLMs are falling behind ChatGPT or, Llama or Anthropic's, whatever, Claude, then maybe that's bad news for Apple because people are like, well, why would I want this device when I could get another one that has the other LLM installed on it that's better? And hey, it already is integrated with the systems that I previously use. Hey, Nick, we're running this up here, and I know the production team usually likes when we insert one of these things.
Sure.
Could we do refer a friend? Is that too late, too early to ask production?
Hey, it's our network, Chris. We can do whatever we want. Okay.
Oh, right.
Yeah.
Who is that? ABBA? it's your party and you can cry if you want.
Yeah,
That's what you say?
exactly. But no crying at the casino, okay? No crying at the casino. You put the risk on, you live with it, all right?
As I remind myself every night, but instead of looking in the mirror and reminding yourself not to cry in the casino, Nick, you could call up a friend and tell them that it's a good time to trade.
Yes.
As you wipe away those tears. $100 to the referrer and the referral. Tastytrade.com/refer a friend. Tastytrade.com/refer a friend for more information. Nick, no tears in these eyes right now because the market is still chopping around. I put on a short iron condor position today in the S&P 500. When we take a look at where the market's trading, as it were, in the ESM6 contract, we are just a few points above the midpoint of this near 6-month-long trading range right now. And with the volatility expansion, there are pretty decent odds. It's a little bit of under a coin flip, about a 45% probability of profit, but it's just a hair better than a 1-to-1 risk to reward, giving up less than 1 to make 1. And the gander is that we're not going to break through the highs that we've seen in recent weeks, north of 7,100, or break down through the lows that we've seen in recent weeks below 6,600. So the Iran news obviously poses a challenge for me, but with some long oil positions that are a little short dated, I think that's a nice way to hedge that off. So if we do get closer to the downside part of the range, at least I have something that can make a little bit of money on the headlines, and then in turn allows me to weather a little bit of discomfort in a position that I do think would actually be, well, that's why I put it on. I think it's going to work out over the next.
Are you long the Vecchio call spread, the oil call spread, the weekend call spread? Is that what you got?
Not yet, but it will be going on. And, not for nothing.
Where would you put it? Where do you think it would go? On a
70.
70? Okay.
70. The question isn't whether or not Iran's oil industry is disrupted, which on its own, 3% of global oil supply right off the bat, a little bit more than that, in fact, perhaps. It's the Strait of Hormuz that everyone cares about, where 20% of global oil supply passes through each day. So, if the U.S. has a sustained air campaign and all of a sudden you see like IRGC units defecting and like the Navy disperses, so there's not going to be a blockade of the Strait of Hormuz. It's like with the Venezuela Maduro news, how much permanent disruption will there be that materially impacts global supply? And if the answer is minimal, then it's going to be a hell of a fade the news type of event.
Yeah.
Where like oil bounces up a few bucks and then it's down like $10 over the course of the day.
Okay. I'm gonna play it into next week, the 67.70 for 60 cents, which is $600. But a $3 wide spread here. We're gonna see what happens there. Couple other things I just want to mention quickly. There are a couple of earnings coming up after the close today. Yeah. So you've got Carvana, which somebody was pitching a what's your assumption trade. Markets are not very good there. Just be careful if you're trading in that, as well as in Dash. Market's not great there. That stock has gotten smacked a little bit over the last month or so. You got eBay in there. Tomorrow morning, we put on a slightly long delta position in eBay. Tomorrow morning, you got some big ones. You have Walmart, $1 trillion Walmart, or maybe it's below $1 trillion here with today's move, but it's close enough. So you got Walmart in the morning. You have John Deere. We put on a lemonade position, which was something that a viewer sent in from for our What's Your Assumption trades. So a couple names, not the sexiest of names here for earnings, but a couple if you are interested in doing those. You've got 4 minutes to execute on those trades. E-mini's up 42, bouncing back, cancel, crash. Volatility futures down at 20. They're down about 13 ticks here. Oil at the highs of the session. Looks like more of the same. Got a lot of round numbers. 6,900 on the E-minis. You're right about 25,000 on the NASDAQ. You got gold at 5,000. VIX at, vol futures at 20. Bonds right at 118. I mean, everything's kind of sticky right now.
It's sticky. It's a nice little bounce back here.
Yeah.
Not mad at it. I'm still leaning long. I'm still MES is long, right? So I'm going to treat whatever news out of Iran is immaterial to my longer term views. And if we do get a dip on it, barring the start of World War III, I've got to buy the dip. But the world only ends once, Nick.
That's true.
Right?
That's true.
And we've seen this movie before. So barring the start of World War III, and a blockade of the Strait of Hormuz.
So wait, when do the Olympics, they end when? What day?
2 days from now?
2 days from now. All right. Because you got to imagine this doesn't happen until the weekend. You got to have the markets closed.
Sorry, 3 days from now. So I suppose the ceremony is Sunday. We'll wake up and it will, I guess, already have happened.
Okay. All right. So Sunday could be the time.
Josh says U.S. and Sweden playing hockey in the quarterfinals now. If anyone in Chicago wants to fight Josh, he said he's rooting for Canada throughout these Olympics.
Oh, jeez. Come on. Come on, Josh. You can hate the powers that be, but, you got to roll with
he's
your
never
country.
going to confide in me again, but we
brutal
do it for the content, Nick.
Brutal. Oh, my God. That's brutal.
Nick, tomorrow, I'm looking at the earnings today. I suppose if we're talking about whether or not the consumer's strong, we have DoorDash, Carvana, bookings.
Oh, yeah, booking. I forgot about that one.
Coming up. I don't know. How much does the market care? There isn't much economic data due out. So I think just what matters more is the guidance. Forget the earnings. We see this with the AI companies, with the tech companies right now. Guidance is what is key. We don't care if you've been making money. We want to see if you're able to continue to make money as the landscape is dramatically shifting ahead of us. It's kind of like the software problem. How do you pick a fair value for some of these companies if you're using historical data when that historical data is rooted in peak software?
Mm-hmm.
And if we've moved beyond peak software, then the historical valuations at which you would apply any reasonable metric to as a comp, you got to throw them away because that's not the future. The future resembles nothing like the past. So, hey, we don't care what DoorDash and Carvana and Bookings.com did. Just will the party continue moving forward? Do they see strength in consumers? Can the corporate earnings margin expansion story continue? That's what we care about. At least that's what I care about. Nick, there's no overtime today. As I've recently learned, check your emails, Mr. Vecchio.
Yes.
We do have
got a team meeting.
We do. It's good. It's nice.
Yes.
I like seeing everyone.
Yes. And the team meeting, it might not include Josh because the chat is actually calling ICE on Josh to deport him. Yes. So sorry about that, Josh.
I wish I could say this was the only person I've gotten deported. So,
oof, wow. Don't get on his bad
kidding.
side.
That's dark. That's dark.
As we go into the close here, E-minis up 34. You got the NASDAQ up 190 here. They sold off about 5-6 handles here into the close. Dow up 110. You got the Russell up 9 and oil sitting at 65.25 going into the close here in just a second. And there's our bell.
That's the bell. Oh, and I got a call here. Yes. His name is Josh Fabian. Yeah. Okay.
Yep. Exactly.
Sorry,
Chicago, Illinois. That's it for us, Mr. Vecchio. We're going to take a quick little 90-second break. We're going to come back tomorrow and do this all over again. So come join us in the morning. We're going to take a quick little 90-second break. You're listening to Tasty Live. We'll see ya.